Welcome back, everybody. The market's coming off a volatile week that has left investors anxious about what comes next. Joining us right now is Lori Cox,
maybe you all.
RBC Capital Markets, head of U.S.
Not me,
equity
baby.
strategy. And Lori, last week was a bit rocky. This morning, we're looking at the futures down
I'm a little bit cocky, so how does it
too.
grab you?
How are you feeling about things?
I'm feeling I want to make love to you, Becky Quick.
Base case and our bear case all year, and we've said the risks of our bear case have risen, and sort of embedded in the idea of our base case was a 5 to 10% drawdown. So we thought the market would end the year at 6,600, but have a 5 to 10% drawback during the course of the year that it would bounce back from. I do think the risks now are rising that we get something worse than a 10% drawdown, something say in the 14 to 20% range. We haven't pivoted to that, but I do think it's an important distinction because you're starting to see, other houses, frankly, start talking about the risks of a recession are rising. And I think it's important to remember in equity markets, sometimes we have something in between just garden variety pullback and recession pricing. A recession is worth about a quarter to a third of a drawdown in the market. From GFC to COVID, we had a
Great financial crisis.
We're overbought, baby.
Crisis. We had a number of these 15 to 20% drawdowns, which were growth scares. So fears of a systemic issue, the U.S. debt downgrade, sovereign debt crisis, the 15-16, kind of mini recession hit the industrial sector, not the consumer, and then sort of the debacle of 2018. And so I'm worried about that kind of stuff manifesting in markets. But not there yet, but that's where my radar's up.
But you still think it's temporary. This would be a sell-off that would be a buying opportunity.
I think that valuations, and we wrote about this in our weekly today, are starting to get interesting. If you look at the small caps, I'm an old small cap strategist, so they're always a good barometer when things get a little nutty in the market. And we're at 14.5 times.
Baby, don't worry.
2015 through 2019
about a
to be the bottom. Recessions are about 11 to 13, so you're actually not that far off from recession pricing in small caps. The broader markets have got a little bit more.
That means lower interest rates, honey.
The S&P top 10 is trading around 17 times. The average is more like 15, so we need to break a bit more than that. But things are starting I wouldn't say problems are getting fixed, but froth has come out of AAII on the retail investor survey. We're getting some froth out of these valuation metrics. Even the top 10 market cap names in the S&P are trading around 14 times or 24 times. That's down from 30.
I mean, that's an investor's point of view. Does that make you actually happy to see something like this?
Yes.
Things start to get a little more reasonable, start to come down in price. It's a buying opportunity, okay?
Exactly, Becky.
Well, certainly I would say.
But you don't worry about the bigger issues that would mean that we're down for the year?
Look, I think that stocks do tend to go down, and we've had a number of, up years and some fantastic up years. And if we hit my bear case, which would be about 57.75, we'd be down a few percent. And that is typically what happens when we get down years in the equity market. The big major crises tend to be very, very rare. You never want to see stocks go down, especially when it represents people out there that get affected by that. But I do think we just came into the year very frothy on the CFTC data, extremely frothy valuations. I think we were going to have a bit of a pullback, 5 to 10% again, one way or the other. Again, risks of going beyond that are rising, but I do think we needed to get some of this froth out.
Lori, thanks for joining us.
Very good answer.
Coming up a lot more on Squawk this morning. Leadership change for Canada. Mark Carney's going to be set to become the next Prime Minister. We're going to find out what this could mean for the future tariff negotiations with former Trade Representative Michael Froman. We'll do that next. Plus, Skybridge Capital's Anthony Scaramucci joins us to talk crypto and the government building a strategic Bitcoin reserve. All that and more as Squawk Box rolls on.
La la. Baby, don't worry about a thing. Well, today the IRS is going to be full of employees. Hope everybody sprung forward this week. It is now 6:25. Oak.
Now.
Welcome back to Squawk Box. Former Bank of Canada and Bank of England head, somebody I think a lot of folks at Squawk know, Mark Carney, set to become Canada's next Prime Minister in the coming days. Joining us right now, Council on Foreign Relations President Michael Froman, who is a former U.S. Trade Representative. Good morning to you. Lots to discuss about this new role that Mark Carney will be taking and how you think it changes the dynamic or not, frankly, with the United States and this administration.
Well, the Canadians are a bit bewildered at the moment. They see that President Trump has been having hotter rhetoric and actually firmer action against them than even against China. And they're wondering why and what they need to do to get back in good stead. The president talks about fentanyl and illegal migration. That's not really a major issue on the northern border. About 50 pounds of fentanyl across the border last year, about 26,000 migrants compared to, of course, a multiple of that on our southern border. There are outstanding trade issues with Canada, long-standing issues around dairy and sugar and lumber. Some of these go back decades, sometimes centuries, actually. And maybe those are the issues that the president wants to resolve with Canada, but they're really not sure. Right now, there's just a lot of anger. What's interesting with Mark Carney coming in as prime minister is the conventional wisdom had been that the ruling party would be out at the next general election. But it's now a much closer race because the debate is who can best manage the United States and President Trump. And of course, Mark Carney has very good relations with the United States, knows a lot of people here, has worked with the U.S. financial community for a long time, and is very well respected in the United States. So we'll see how it has to play out in their election as well.
In terms of being respected, not respected, do you think, though, it changes the actual conversation and ability to negotiate with President Trump?
He does seem to put a lot of emphasis on the personal respect, the personal relationship with the person across the way. I don't think he knows either one of the leaders of the parties that well or that much. But I think what's really at issue here is he's announced tariffs, he's pulled them back, he's reannounced them. We're really not sure where we stand in the actual imposition of tariffs. They can be a powerful source of leverage, but to be real leverage, you have to lay out what it is you want the other party to do. And so far, the administration really hasn't laid that out in any great detail.
Well, so here's the thing I can't figure out. To have a relationship with the president in the right way, you know, I don't want to say bend
This
the knee,
guy's
but
an
there's,
idiot.
you know, there's some sense you have to
He's
sort of
laid
go in and
out
try
the
to
reason.
ingratiate yourself with him.
You're
But,
in denial,
You know,
you
the Canadian people do not seem
dick lick.
to want that kind of approach.
Too
right?
bad.
And they almost want a. They want the pushback, right? That's where the popularity comes from. And so I just don't know how you get, you know, you can walk and chew gum at the same time.
It's easy.
Look, I think it'll take somebody who's pretty politically savvy to be able to, as you say, to walk that fine line between doing what you need to do domestically, which is defend your national interests, as any leader would have to do, and engage constructively with President Trump. I think it could be done. I think a number of other leaders are doing it. I think Keir Starmer came to the U.S. and there wasn't a lot of love lost between President Trump and people around him and the Labour Party in the UK, but I think he's done a good job of reestablishing the relationship on a respectful basis.
Baby,
and showing that he
don't
can be a good
worry.
partner. And hopefully whoever
Good morning,
Mark
Chris.
Carney as Prime Minister can do the same.
You think I'm a wild man?
The whole stance on climate in the new Trump administration.
Chris, you think I'm kind of crazy? Say yes. He sure is. Them Americans.
Called it the Green New Scam. So that you got one thing coming out of I don't know how that
Exactly, it's
affects
what it was a
this
scam.
administration thinks of the Carney government or vice versa, Michael. But there's and huge oil exporters. We're big oil importers.
Made a
fossil
lot of
fuels.
Democrats
It's gonna be fun to watch at least, but I don't know if that becomes a sticking point
Filthy
between
rich.
the two countries.
Well, as you said, as you just noted, Canada's been a little schizophrenic on climate change. On one hand, they've been a leader on climate change, and Mark Carney personally led a major effort to get international financial firms to mobilize resources behind the green transition. On the other hand, Canada is a major producer of oil, a major exporter, as the oil sands, which became very controversial with pipelines through the United States. And we continue to import a lot of energy from Canada. So they are certainly on the whole array of issues when it comes to energy and climate. And they are able to walk and chew gum at the same time. And I imagine Prime Minister Carney will be as well.
Ambassador Froman, I think we're going to leave it there.
Yeah, leave it there.
Appreciate it. I don't know what to make of what's going to happen next. I think it's a hard one to pull off.
No, it ain't.
He was very adamant, Mark Carney was, in his commentary overnight, saying we will never be a part of the United States.
Right. No, but that's what I'm saying. If you have the public pressure against you, which is to say you need to push back on these other people, and then somehow you also need to befriend these people that the public is telling you not to befriend, it's a very hard thing. And he was talking just about the Prime Minister in the UK. But by the way, he's getting a lot of pushback from his own people. By the way, he's getting pushback from Canada. UK and Canada.
Andrew, I follow all kinds of crazy nut jobs, and they find me the nut jobs on the other side. They find me. They find you too.
Right.
I'm seeing on the nut jobs on one side saying, lay off saying that you want Canada as the 51st state. It would immediately occupy the position as the most liberal state in the union. It would make California.
You should.
The Trump administration stop saying that.
Man, that's a lot of good
They're way
setups.
Too liberal.
Too woke.
Way too woke. They suddenly have the House of Representatives. That could, if the Republicans have a 1 or 2 or 3 person margin, that could get skewed. Although it's not as
Yeah. By the way,
popular.
how many House members do you think you would get if you were the 51st state?
Population.
Given
The population is low.
it's a population story. It's not just a land mass story.
But only 2 senators.
2 senators for a large. Yeah. Yeah. How much would if you were? But hold on. If you were Carney,
Yeah.
what would you want to negotiate for? Given the land mass,
The
I would be negotiating for more
MAGA
than 2.
types, the MAGA types don't want Canada anymore. That was my point.
I would take more than 2 senators.
Right, they don't want.
I would think for that amount of land.
You had your chance.
So every house
had your chance.
seat represents about 700 million people. There
Right.
are 40.1 million people in Canada.
So they had their chance. Coming up, the Trump administration pulling grants from Columbia University. We're going to bring you the details straight ahead later. The Trump economy, tariffs, inflation data, and more with national
They should
economic.
call the bluff. Carney should be like, we're in.
We're in.
We're in.
We're in. Kevin Hassett's going to be on at 8:10 Eastern. Squawk Box will be right back. Yeah. On Friday, the Trump administration said it's pulling $400 million in grants and contracts from Columbia University. It accused the school of failing to do enough to squelch the anti-Semitism on campus. In recent weeks, Columbia has set up a new disciplinary committee, ramped up investigations into students critical of Israel, but those efforts evidently didn't go far enough for the White House or to prevent what's really happening on Columbia. Education Secretary Linda McMahon said, for too long, Columbia has abandoned the obligation to Jewish students studying on its campus. And on Saturday night, U.S. immigration agents arrested a Palestinian graduate student, Mahmoud Khalil, who has played a prominent role in the pro-Palestinian protests at Columbia. Reports say that his wife is a U.S. citizen, 8 months pregnant, and he holds a U.S. permanent residency green card. The Department of Homeland Security said it had arrested Khalil because what his activities have done were aligned to Hamas and led to some things that could be, I guess, considered criminal activity. That is a very gray area. The Post yesterday sharing a news article about the arrest. Secretary of State Marco Rubio said, we will be revoking the visas and or green cards of Hamas supporters in America.
Okay, so what do you think of this? And the reason I say it, I find obviously the anti-Semitism and all the protests, I'm not, obviously core and all of that.
We're probably the same.
Okay, hold on. But then...
No, I don't think...
What I don't know
right.
is, especially this administration, which is arguing that they are free speech, free speech,
no,
free speech.
I understand that.
And
That's
Elon
you don't
Musk
even have to
X
explain
and all
it.
this stuff.
We get the issues, but
and then,
if what he did
it's like wokeness is we should be arrested and this should be arrested. Like, I just don't know.
I don't understand what the charges are.
If it was just leading a peaceful demonstration, obviously the free speech issues are paramount. If it's intimidating and chasing
100%.
and causing,
I agree.
destroying parts of the campus and making it impossible for Jewish students to feel safe on
You don't need
campus.
to. You don't
Well,
need
I
to,
think I do.
Well,
at
of course
times.
no. But it's very interesting how.
So initially, my knee-jerk reaction was get this guy out of here. That was my immediate. The more you think about it, if it was like I said, if it was purely just we shall
that's what I mean. I don't
overcome
understand the
it,
charge.
but if it's radical and hurting policemen and pushing through barriers and really hurting or eventually a Jewish student loses their life or something like that, then
Oh,
get these
100%.
people out of here.
Trust me. I mean,
So,
that,
right.
You,
You
and
see,
I
I mean, I wondered if we'd talk about this, and then you got,
I'm just saying it's a.
you got the Post kick the guy out, ICE
Right.
kick him, and you got the Daily News.
By the way,
sparks outrage.
I have no love lost for what's going on for this gentleman. I don't know this gentleman, but I don't even, I don't agree with him. I don't like what he's saying, all of those things. All I'm saying is this administration has taken some very interesting positions about this idea that everything's free speech, but then they're suing, media organizations, they're taking money away from universities. I mean, there's all sorts of things going on here that aren't completely
well, even with Elon,
consistent, let's just say.
Twitter is open until you criticize, it's like do what I say, not what I do. You see a lot of that. This one, I think the colleges, I think they haven't done enough, and I think it's a...
I didn't realize he was
nightmare.
this protester was living in a university
even though he's
apartment,
graduated.
even though he had graduated.
Yeah.
I mean, that's where you
He's
live.
just He's just there to
complicated. I'm not, by the way, I'm not defending this guy.
He's just there to
Not
agitate.
either, but I don't understand why the university didn't do something more.
Exactly.
You'd even use this guy if he gives you a chance to criticize the Trump administration.
I'm not.
They say, I know.
I'm not doing that at all. I'm just saying that there's a larger issue, not about this guy. Let's take him completely out.
Well,
of
that's who we're talking about.
Well, I'm not talking about him. I'm not talking about him.
But is it
because I don't know
okay to
him.
just take someone's green card or whatever just because you don't like their political views? But then again, like I said, if he's agitated to the point where someone's been hurt or property's been damaged, it's like, then I could see it.
Property damage?
Yeah,
We've pardoned people who have damaged our property.
I understand.
In the United States.
I understand.
Of the Capitol.
I understand, but this is a different connotation of being of harassing Jewish students. And when you damage the property, they're unsafe. They're spending $90,000 a year to go to this place, and they can't even go to.
Tell it to the guards at the Capitol. Right? I'm just saying that this whole thing, there's nothing about all of this. I'm not defending this guy at all. I'm just saying.
One's a pardon, the other is a green card getting taken away. You're mixing a lot of different metaphors here.
Justice is the broad. The broad question is what does a
Okay,
consistent
let's
form
have a
of
good
justice
day.
mean? And is this
And
a
I'll be
consistent
back.
form
You're
of
not
justice?
going to get that in the last administration or this administration.
I'm not suggesting, but shouldn't it be the ideal?
It should always be the ideal, just that we live in a real world.
So you're fine with that?
No, it's just that you want the ideal world when this guy's president. You didn't give a crap
That's
about
not
it.
true
when
at
the-
all.
Okay.
It's not true at all.
All right, when we come back, a check on consumers. Steve Leisman will join us with the latest CNBC NRF retail monitor. That's next. Squawk Box will be right back.
Oh, gosh. Well, I gotta go. Gotta go.
Spotlight.
I haven't talked to him in a while. Welcome back, everybody. The latest CNBC NRF retail monitor just out with a look at the state of the consumer today. Steve Leisman joins us right now with more on that. Hey, Steve.
Good morning, Becky. Yeah, consumer spending declined for a second straight month, according to the CNBC NRF February Retail Monitor, signaling that weather and uncertainty created by tariffs and other policies out of Washington continued taking a toll in February. The retail monitor, powered by real credit card spending data from Affinity Solutions, shows retail spending ex-auto and gas declining by a modest 0.22% after January's sharp 1.07% decline. Taking out restaurants showed the same 0.2 decline. The year-over-year rates falling to 3.4 for the headline and 4.1 for our core index, both down compared to a month ago. It was the first back-to-back monthly decline for the monitor. We have back data going back to October 2022. The NRF said in its analysis that consumers look to be less confident, and that could be leading them to boost savings. Quote, consumer spending dipped slightly again in February due to the combination of harsh winter weather and increased economic uncertainty caused by tariff and other policies that have started to negatively affect consumer sentiment. 9 of 12 retail sectors saw declines during the month, with the largest negative in gas stations. That should be good and should help other sectors, but building and garden supplies, furniture, clothing and health and personal care also on the decline. Gains in sporting goods and hobbies, non-store retailers and miscellaneous retailers, but 7 of the 12 sectors we follow saw a second monthly decline in a row. Now, we're just going to have to wait and see how much of the decline is weather and how much is confidence, both of whose effects could dissipate depending on the inherent vagaries of weather and policies that are out there. But the NRF does note the economic fundamentals remain strong, with low unemployment and wage gains that have been higher than inflation. So, Becky, consumers could be spending if they wanted to be spending.
Yeah, I guess I try and figure out, because when January happened, we characterized it as, well, it's kind of the hangover after that really big spending into the holiday season that we saw. February, a lot of times we said weather. I guess we're still trying to figure all of that out. But, Steve, there is a lot of recession talk all of a sudden. What's your view on that? What's your perspective?
Well, first of all, I think the U.S. economy is very dynamic, and companies have an ability to respond to changes in policies in ways that often surprise us. I'm watching one particular idea, Becky, the idea that you end up idling productive capacity. And these tariffs could suddenly make some factories that just close down because it's no longer profitable to run them. Even while the administration says there's a transition period. So that's what I'm watching. Are these tariffs on? Are they off? And then I think you have the combination also of this issue of confidence in CEO confidence and consumer confidence. We have to watch it. Maybe some stability of the administration could alleviate some of those concerns that are out there about the economy.
Shut down factories here in the United States or outside the United States that are producing products.
Both sides. But you've raised, with these tariffs, Becky, you raise the cost of the entire North American supply chain. That's why economists say these April tariffs have to come in to protect what you've done, which is raising the cost of the supply chain. So that's really the thing that people have to get used to, and whether or not that makes factories on either side of the border potentially inefficient or unprofitable.
Steve, thanks.
Coming up, what the markets are expecting from this week's inflation data. We've got some ideas. We'll tell you about the Squawk Box. Coming right back after this.
Inflation reports in focus this week. Joining us now, Bob Michael, Chief Investment Officer and Head of the Global Fixed Income, Currency and Commodities Group at JP Morgan Asset Management, where he oversees more than $800 billion in assets under management. And given your expertise, you can, we can look at fixed income, commodities. We just talked about, where you hang your hat. You should be the perfect person to let us know about inflation and whether it is there some new incremental inflation being added? Is it the same inflation that we didn't put to rest in the first place that's rearing its ugly head again? Is it some of both? Is there a reason to worry? Bond market doesn't seem to say. What is your analysis, taking all things into account?
Well, inflation was on a pretty good path. There was disinflation in place. Prices were coming down, not quite at the Fed's 2% target, but getting there. We're going to get some inflation data this week. It won't matter in the least. The market's going to look right through it because right now the market's concerned about the impact of tariffs. How much is it going to take to off of growth? What does that do to the probability of recession? And right now the market's pricing in a higher probability of recession and not so much the reset in prices from tariffs.
Okay, so if there's something to really be concerned with, it's not the tariffs causing inflation to suddenly spike higher again. It's a growth worry.
What's causing the growth worry? What's causing the downturn?
Well, there's a sense that we share with the Fed that rates are still too high for this economy, that the neutral rate is not 4 3/8%. It's probably not 3% either, but it's somewhere in the middle.
What's causing the slowdown?
The slowdown? I think just the extent of time. There's a tiredness by businesses and households. They look in pretty good shape, but we're already starting to see profit margins in corporate America start to come down a little bit. And I think just the uncertainty over policy is starting to give consumers and businesses a chance to pause.
But is the uncertainty over policy tariffs?
It's that, and it's the volatility of everything else. Last month, it was on immigration policy. What would that do to wage costs? Next month, it could be the Tax Cut and Jobs Act. It's just policy uncertainty. Markets don't like it.
Doge too, right?
Could be.
So all of this, though, the hope is it's a short-term game, Doge and all these other things. Do you see, though, the other side? Do you see the rainbow on the other side of this?
I do.
You do?
It feels to us like the nasty stuff is being tackled first. Immigration policy, tariffs. The other stuff could be positive. Deregulation. There's a benefit to that. An extension of the Tax Cut and Jobs Act.
Right.
Do you need to hang more off of that? That's the kind of thing that markets will like.
Deregulation, though, do you see, we were talking about mergers and acquisitions, for example, there's a real question about, how harsh this FTC is going to be. I know Lena Khan's no longer in the job, but some of the commentary and some of the deals that have even been blocked recently.
But deregulation, that's only 10% of what deregulation delivers in terms of benefits. I don't, when I hear deregulation, I'm not immediately hoping everybody's merging.
I understand that.
Permitting and just, it's just
100%, but it's very hard to quantify what the, quote, deregulatory landscape fundamentally does on an economic basis, right? I mean, it not only does it sound good, it should be good.
I'm not immediately
but I
thinking
don't think
banking fees for all these guys on Wall Street. That's the only thing that deregulates.
By the way, but bank stocks moved on the back of this.
And other things, and other reasons for deregulation, not just a million things that would be better for banks. Basel III, capital requirements across the board.
A lot of it was that there were going to be smaller banks that would be able to merge themselves. There was going to be M&A activity like crazy. There would be IPOs. There would be capital investments.
I think deregulation
was going to be
financial stakes
minuscule.
With the
M&A is minuscule for the benefits of deregulation.
Take M&A out of it.
The financial stakes will move based on what the fortunes of the country.
Right.
I just don't think you can use M&A as a gauge of whether deregulation is going to be bullish for the economy.
Well, look at the banks. Banks are holding a lot of regulatory capital for the Basel III endgame. If that's truly ended, then that's excess capital that can be pushed into the system, can be returned to shareholders, can be extended through credit in the system. Think about the energy industry. How do you incent producers to produce more energy? We started with inflation. You bring oil down to $50 a barrel and gas below $2 at the pump. That's pretty good for the consumer.
Oh, I thought you were negative at first. Now I think you're positive. I can't tell. You're an enigma.
It's good to be.
It is 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin, and the futures on this Monday morning are significantly weaker. You are now talking about the Dow futures off by more than 440 points. S&P futures down 70, the NASDAQ down by 278. Of course, this comes after a down week once again last week. Let's get over to Mike Santoli at the NYSE. Mike, these losses are really starting to add up.
They are, Becky. In fact, the second week in a row where we had kind of this phantom Friday afternoon rally that seemed to take the pressure off, that was kind of immediately given up on Monday morning. So down around 70 points in the S&P 500 futures. That means it's going to put the index, as indicated right now, around that 5,700 mark. We've spent the better part of a week there kind of chopping around that level, trying to make it count. It's unclear if the market is kind of overdone enough on the downside to make that truly the source of a sustainable rebound rally eventually. But clearly, market's feet are moving quickly here. And I keep pointing out, 5,700 brings you just above the July highs. It's 57.66. We kind of got there on Friday. So it shows you the market has got this sort of brittle state, even as people suggest that not too much has changed in terms of the known earnings estimates. And obviously, Treasury yields have become a little bit less challenging. Take a look at the way the market is going away from consumer cyclical plays toward defensive ones. So this is the equal weighted consumer discretionary ETF. This is consumer staples, and obviously it's just mirror image right here, right? You're kind of pouring out of the economically leveraged consumer names and going into the consumer staples, which, by the way, were really washed out. Nobody wanted them at all coming into this year. Now, there's something else going on aside from the growth scare concerns and the policy back and forth, which is there's been this real reversal in momentum strategies, and a lot of attention has gone on this. Hedge funds crowded into a lot of the same names. They have kind of hit the exits at the same time. That's this S&P Momentum ETF, which you can see from mid-February has really been straight down, and this is the minimum volatility, so the lowest volatility names within the S&P 500. That's acting as shelter. Everyone wants to sort of see some kind of evidence that this mechanical liquidation is maybe easing up, but really wasn't the case last week. We'll see if any of that can kick in this week, guys.
Yeah, and Mike, we were talking earlier this morning about technical levels with
Yeah.
Katie Stockton. I know that's something you kind of follow too, just in terms of where we stand with some of this stuff.
Right, so we've been, that 5,700 level on the S&P also coincides with its 200-day average. That's not necessarily something where it's going to automatically bounce, but it seems like it has some importance. That's probably why the market's tried to see if there's some traction around there. And then you talk about those mid-year lows, mid-year highs from 2024 in that 5,600 range. So it's within a few percent of having some consequential levels hit here. And a lot of folks who I watch who say, you know, here's what we want to see line up before we can say the market is really pulled back like a slingshot and ready to go, is there's not been a lot of panic evident in the options trading volumes or
Right.
ETF outflows or things like that where you start to see people say, get me out at any price. You don't always need that, but so far that hasn't shown up.
Okay, Mike, thank you. Mike Santoli.
Hey, Tom, a number of tech CEOs expected to head to the White House today for talks. These include the heads of IBM, HP, and Intel. Sources say the agenda items are going to include making sure that AI remains open-sourced, potential tariff exemptions, and efforts to limit the effects of export controls on computer chips. Join us right now with a look at the C-suite and managing around uncertainty. Alex Partners Executive Chairman Simon Freakley. Good morning to you.
Good morning, Andrew.
Okay, so if you're going into this meeting, what are you telling the president, and do you think the president's going to listen?
Well, AI, of course, is still a massive opportunity, but also a threat. And so I absolutely have to understand that on that agenda is going to be, you know, how do we make sure that the US continues to be the driver of AI for business? But they also have to be talking about tariffs, clearly. They have to be talking about what the impact of this whipsawing of tariff policy is going to be. I suspect it's going to be a lively meeting.
And where do you think, I mean, we've heard what the president said just even over the weekend, where he said, look, I'm not looking at the stock market, which obviously is a reversal in terms of how he thought about it during the first term. How long do you think that persists, and how politically palatable is that?
Well, the trouble for CEOs, Andrew, is they simply can't pivot at the speed at which policy is being announced. They wake up every morning with a different position on tariffs, so they just don't know what they're planning for. And of course, if you're an industrial CEO and you're having to plan industrial production, certainly if you're coming under increasing pressure, which they are, to bring production onshore, these are hundreds of $1 billion-dollar
Right.
decisions over
But
multi-year
if everybody's
periods.
playing chicken with each other on the tariffs, right? There's a massive game of chicken with multiple chickens playing chicken with each other.
Right.
At what point, if you're a U.S. CEO, and at what point do you advise the U.S. CEO, say, you know what, these tariffs are here for real, they're not going anywhere, it's actually worth you spending potentially billions of dollars to actually bring your manufacturing back to the U.S.? Or do you say, we don't really know what's going to happen with tariffs, so actually put your hands down, you can sit on them for a little bit, because you've got to figure out what's going to happen first.
So look, I think everybody knows the destination is clear. Tariffs will go up. It's a pressure to bring production on.
But do you think that the tariffs will go up forever? Do you think it's for a year? Do you think it's for 2 years? Do you think it's for the next 10 years? If it's for the next 10 years, you make the investment here.
I think
if you
it's-
think it's not, you may say, I'm going to wait to find out.
Well, as Chairman Powell said last week in different contexts, trying to distill the signal from the noise is hard. I think what every CEO that I speak to, our clients, they are planning for tariffs being here for the foreseeable future. It's very difficult to actually form a budget for the year, let alone a plan for 5 years. But they understand
But
they're
then
going to have to bring production.
why is General Motors not moving all of its car manufacturing back to the U.S. then?
Because it's very difficult, Andrew. I mean, these are plants that take years to build. They're billions of dollars of investment. Now, if you're a grocer, you know, if you're Walmart or Kroger, of course you can look immediately at whether you can second source from the US. Not straightforward, but possible. If you're GM or Ford...
But that's what I'm saying, all the hard choices.
They're hard choices, but of course these things can't be done swiftly. There's no quick solution to this. So how, for instance, one of the things we do with our clients is set up tariff war rooms. We have dozens of them going on at the moment. People understand how they can do tariff engineering, which means how do they look at different countries with different tariff likely outcomes to minimize the impact of tariff. How do they actually look at their
What's
product?
the best end run at the moment?
What is the
dare
what?
I say? The best end run, if you're sitting in this tariff war room and you're saying the smartest way to get the goods and to avoid the tariffs is to do what?
Well, what you do
Moving
is
goods through where?
it's not as simple as that. What you do is you look at every single component as how, not just how you source your product, how you construct your product. Can you bring product into the US that's partially engineered so you don't end up causing tariff cost on indirect cost? How do you rethink the production using different parts? All of these elements add up to tariff savings, but one thing, Andrew, and this is the key point, one thing is for sure, costs are going up, they will be borne by the customer, they won't be eaten in the margin, and so for the customer, whether it's a washing machine or a pickup truck, costs are going up.
So it's a tax on the American people?
Exactly. Now, Whirlpool, for instance, is a great example. Whirlpool in 2018, when the tariffs on China were upped, they decided to bring 90% of their production onshore. The component cost of a Whirlpool washing machine went up between 10 and 50%. So on average, excuse me, added $90 to every Whirlpool machine. That went to the customer. We're going to see this across the entire range of product. In grocers, the prices will go up, the portion sizes will go down, and ultimately it'll hit the wallet of the US voter.
You expecting a recession then?
Difficult to tell. I think that is the key question. We don't know, of course, but if inflation stays high, if unemployment starts to rise, it's a possibility.
Okay. Simon, thank you.
Thank you for having me.
Appreciate it. What do you think of that?
I think signal from the noise is making a comeback. I've heard it like 10 times in
that phrase.
I thought once we canceled Shep Smith that no one would ever can't get the signal from the noise again. Remember? That's the guy that used to do that, supposedly. Coming up, National Economic Council Director Kevin Hassett joins us to talk tariffs and recession risk. That interview right after the break. Squawk Box coming right back. Don't be afraid.
insurance.
Let's do halfers. Trying to talk Andrew into doing half of what you think, and just do it.
Of what I actually think.
Half of what you think that you're not saying now. I want you to start like I did. What? Welcome back to Squawk Box.
All in trouble.
Join us now. National Economic. It's out there in the ether. Hey, Hassett. He is here today.
Hey,
Kevin has. Tell us everything's going to be okay. Can you do that? Let's just start with that. Allay our fears, recession fears, inflation fears. The president acknowledged that maybe we have to wait a little bit, and that we're not a country that gauges its success completely on the stock market. That it could be the heartland repopulating with great jobs. Is that your story?
Yeah, let's think about near term and then medium term. Near term, we've got a Biden economy that, still most of Biden policies are in place. If you look at the Atlanta Fed GDP now number, it's showing negative first quarter, which is kind of, if you like, a metric of the inheritance of President Biden. A lot of that is also from a big increase in the trade deficit, which, as you know and you've been covering, Joe, is happening in part because people are anxious about future tariffs. And so they're stockpiling. And so that's a very, very temporary phenomenon. I think that medium term, what you're seeing is the biggest tax cuts in history, a massive deregulation, a productivity boom from artificial intelligence, and tariffs, which even if you take the high-end estimates of the tariff revenue, they're going to be just a tiny fraction of the size of the tax cuts, which are almost surely going to be in place by the summer. So if you're thinking about what's going to happen to capital formation in the U.S., if you take our cost of capital measures, it goes up 10, 11% over the next year. There are a lot of reasons to be extremely bullish about the economy going forward. But for sure, this quarter, there are some blips in the data, including the negative GDP Dow, which are related both to the Biden inheritance and to some timing effects that are happening ahead of tariffs.
The main criticism, I think, even among financial types of the Biden administration, was the inflation. Even people that didn't like the Biden administration have to acknowledge that the jobs picture was strong through most of the Biden administration, and the GDP numbers were strong. Maybe it was Keynesian. Maybe there's something comes home to roost from all that spending. Maybe that's what you're talking about. But you don't consider any of the current possibility of a softening economy. You don't think it has to do with the uncertainty of you don't think Trump owns any of that? I think, even someone that was right in the middle would not immediately attribute the soft. I'm seeing it on Twitter constantly. How's this guy doing now? How's that feel? How's winning feel with the economy? And they're not tying it to Biden, Kevin. They're tying it to some of the uncertainty from the Trump administration.
Well, let's be clear, though, Joe, that last year the Biden numbers, we kept getting these great jobs numbers, and then by the end of the year we see that they're revised down by a whole million. And so a lot of the numbers that looked kind of good at the advanced release weren't good in retrospect.
Well, they were still pretty good, and that was a technical thing.
No, even then. Technical, million jobs is more than a technical thing. But the thing that I would say is that uncertainty, I have a paper that Matt Jensen and I wrote, we published a while ago, on the impact of uncertainty on the economy. And basically what happens is when there's a lot of uncertainty, people who have big projects, like you got to nail down a new factory or something, tend to wait for the uncertainty to be resolved. But what I'm seeing in the jobs number, for example, is that the uncertainty is actually creating jobs in the U.S. Right now, we just saw 10,000 manufacturing jobs created in the U.S., 9,000 auto jobs, and that's after losing 110,000 manufacturing last year. And so what's going on with the trade policy, which is a small fraction of the overall policy, is that it's starting to have the intended effect of onshoring activity in the U.S. Now, people talk about the prices. What about the price of this, the price of that? Don't forget that when you increase labor demand in the U.S., you increase wages. Do you think, Joe, that real wages are going to be higher a year from now after we have the tax cuts and some tariff policy and deregulation and AI? Are real wages going to be higher? Well, yes, of course they are. So therefore, the welfare of Americans will be better off, and real wages decline for 3 of the 4 years under Joe Biden. And so I'm very optimistic about the economy, but I'm also mindful of the GDP down number, which is a very, very temporary phenomenon.
So are you foreshadowing if there is a recession, it's going to be Biden's? You're going to call it Biden's recession? I think The Commerce Secretary said there won't be one. The President seemed to at least acknowledge the possibility that there could be some near-term, I don't know if you call it weakness, but there could be some near-term disruptions, I think he said, from some of the policies that...
I'd just be very wary, Joe, of conversations about recession or not, given that we had 2 negative quarters. That used to be a recession under Biden, and then that wasn't a recession. I think that what's going to happen is the first quarter is going to squeak into the positive category, and then the second quarter is going to take off as everybody sees the reality of the tax cuts. Like, everybody's talking again a lot about uncertainty. For sure, there is some uncertainty over exactly how the trade policy will work itself out, but the tax policy is almost sure to work the way people are describing it in the House and the Senate bills. The deregulation is already underway, and the drilling, baby drilling, is going as well. And so there's a heck of a lot of uncertainty that's resolved. I think that in the end, the trade policy uncertainty is the one thing that people will see, and that is going to be resolved in early April, as President Trump has said. And so I think that we're pretty close to having the uncertainty behind us, and as you know, when that happens, then the economy really lifts off.
Okay, so the uncertainty, if we get that behind us in April, if it does bring some near-term pain or some near-term juggling or jostling that takes place, how long do you think that lasts, Kevin? Is this a situation where we have tariffs that kick in, they raise prices, and then it takes how long for us to adjust to it?
Here's the thing that a lot of people are saying that, Becky, but the way I like to think about it is, if you think about it this way, that the U.S. has a trade deficit of, about 1.2 trillion, and it's been very, very persistent. And so when you ask yourself, why is there a trade deficit that just keeps coming? Why is it that currency markets aren't adjusting so the trade deficit balances the way Adam Smith would say? Well, it's got to be because the supply of stuff sent to the U.S. is extremely inelastic. It's kind of like if you have an apple tree with 100 apples in it, and then you have a tariff, and then all of a sudden, people demand fewer apples. Well, the guy's got to sell 100 apples, right? And so he's going to have to eat the tariff. If he only sells 90 apples, 10 of them are going into the ground and rotting. And so I think that we've got very inelastic supply. That's why we've had these persistent trade deficits. And so the idea that American consumers are going to bear most of the tariff is just not economically literate, frankly. And it's got to be, the only explanation for the persistent trade deficit is that we've got lots of inelastic supply. And so if we put a tariff on foreign countries, then their capital and their workers, they're going to bear a good chunk of that tariff. And I think that then what we're doing is we're changing the tax code so that we're lowering taxes on the taxes that Americans bear and increasing taxes on the taxes that foreign inelastic supply bears. And that's very bullish for America.
Kevin, that's certainly what happened with the tariffs on China that were put in the last Trump administration. It was not passed directly onto the consumer. Much of that was picked up by manufacturing in China. But most economists think that there is a limit to how much can be absorbed before it does come back and really back the consumer too. Where do you think those limits are? What's a reasonable amount before you think, okay, they can't absorb anymore and they would raise prices?
Well, don't forget there's a huge amount of trade, almost $1 trillion of imports between Canada and Mexico. And one of the things that we talked about from the beginning and then did after we saw some progress on fentanyl is exclude the quote-unquote USMCA stuff. USMCA stuff is 50–60% of all the trade in Canada and Mexico. And to get something qualified as a USMCA good, you just have to have U.S. content. So if there's U.S. parts that get shipped over to Mexico and then they assemble them into a car, then if you put a tariff on that, then a lot of the tariff is on U.S. parts. That doesn't make sense, and that's why the exemptions are there. And so I would expect that one of the things that's going to happen is that people are going to have lots of levers that they can pull, as the final tariffs are visible. And one of them is having more U.S. content. If you have more U.S. content, then that'll be quite helpful. In the end, don't forget too, trade isn't the majority of the economy. It's a fraction of the economy. And if there's a little bit of change in the price of things, then you have to say, well, is that also going to affect wages? And as again, we saw big increase in manufacturing employment in February, which should increase the real wage. And so I think in the end, it's got to be, even with a tariff policy, a prudent tariff policy, that real wages are up a year from now.
It might not be, trade is not everything, obviously, but it is something on the margin. And we do keep hearing again and again, you have to acknowledge this, Kevin, that uncertainty causes CEOs and decision makers, when they're thinking about new projects or deploying capital or where to build something or when to build something. And Andrew has pointed out the merger and acquisition activity that we thought would be a big benefit from the deregulation that we're seeing with the FTC or whatever. You're not seeing that. and you are. It seems that you're seeing some hesitation by corporate decision makers to embark on big projects or capital deployment just because of the uncertainty. You don't. Will you acknowledge that?
Exactly. Oh, exactly, Joe. And again, I have a paper that's about 10 years old where I wrote a lot about this. What happens is if you have a big, what we call in economics, irreversible project, a thing where you nail it down and then it's not like a used car that you can sell right away. Then when there's a big election, then people tend to wait until both after the election happens, which would be November, but also into March or so, where they wait to see is Congress going to be able to function. And in that time period, big irreversible investments tend to slow down. In fact, in the paper that I wrote with Matt Jensen a while ago, I guess this one was with Joe Sullivan, that we found that the relative odds of recession were about double around an election year because people were holding off on the big projects. And so you can think that there's like a tariff effect on that, but really there's an election effect on that that Americans have experienced over and over and over again for every election. So and the good news is that election uncertainty usually gets resolved around March, which is about where
well, that's what I was going to say. Look, Kevin, in terms of looking at the numbers, looking at a calendar, between the tariff piece we're talking about in April, between what you're talking about, this sort of investment theory about uncertainty and the like, when would it show up in the numbers? When, I mean, to the extent that you have to plead patience with the American public to say, look, this is all going to work out, but it's going to take a little bit of time. The president's saying that there's a sort of a temporary period here. When do you think we'd be on the set having this conversation and either the markets would look different as a result of this or the sort of spirits in terms of around the economy would feel different?
I think there's some things that already you're seeing are moving in exactly the right direction. So if you look at what's happened to the 10-year rate, I think that all the spending that we put into our reconciliation package, plus the DOGE spending cuts are going to be on top of that. That's put a lot of downward pressure on interest rates. That's making it easier to buy a car, easier to buy a house. That kind of stuff is being resolved already. I think that the idea about when or how much do people have to move stuff from this country to that country, that's the stuff that I expect will be resolved and visible in April. But the uncertainty over that is already visible in the numbers. That's what I'm saying. So imagine we made 9,000 auto jobs in February, even though there aren't any auto tariffs, new auto tariffs in yet. That's because people are onshoring production, which bids up the wage and makes the welfare of Americans better, just as President Trump said.
I think you had a really a great Freudian slip there. You said, if you look at all the spending that we put into the reconciliation package, you meant spending cuts?
Spending cuts, yeah, that's right, spending cuts.
You left out, that was so
I felt the word cut, yeah.
Because Massey thinks it's spending. He's going, yeah, Kevin admitted it. He's nodding.
That's $2.5 trillion. It's $2.5 trillion in cuts.
$2.5 trillion in cuts. All right, Mr. Hassett, don't be a stranger.
Of course, good to be here.
Because the other side's gonna, in a vacuum, the other side's gonna define the narrative, and you come on and you say stuff that totally defines it from your side, and I like that. It's somewhere in the middle. Don't you think so, Becky?
We'll be right. We'll be right. Right before we're right again.
Is somewhere in the middle? How do we find it? You know what we're looking for? Signal from all the noise. Thank you, Kevin.
Thanks.
Good to have you on.
Thanks, Kevin. When we come back from Friday's jobs report to this week's big inflation reports, we're going to talk markets and the economy with Evercore's Roger Altman. As we head to a break, a check on shares of Apple. This after Friday's announcement that it's delaying an AI upgrade for Siri, but still expects to roll out the upgrade this year. We'll talk more about it this morning. Citi removing that stock from its positive catalyst watch list based on that delay. Apple shares right now sitting just at about $235. We're coming right back.
Here we go, Andrew. Your wish is my command. Beacon Roofing Supply and QXO are in discussions about a possible combination.
Boom!
I told you.
Booyah!
In which QXO would acquire Beacon in a deal valued at around $11 billion.
Hey now.
I don't know whether is that the
What would Lena Khan say?
report. That's this morning. I get that, but it's the 12 billion or what? 11 billion. Is that the price of one or the other, or the combined price?
My goodness.
Reports say that QXO would pay $124.35, not 35 cents a share for the roofing materials and building products distributed. That's a slight uptick from past offers. QXO tried to acquire Beacon for $124.25, but that deal was rejected. They kicked in a dime, I think. Is that what we said? Beacon has also delayed its investor day. And, Becky, we're watching some other stocks.
We are. I'm just up with market cap.
Yeah,
That 11 billion is the combined market cap.
Yeah, that's what I figured.
Yeah. We're also watching shares of Tesla today after shedding more than 10% last week and marking the 7th straight week of declines. That's a record for that stock. In the meantime, the Financial Times is reporting that wealthy Chinese investors are funneling tens of millions of dollars into private companies that are controlled by Musk. The FT says that includes XAI, Neuralink, and SpaceX, with China-based asset managers promoting the relationship between Elon Musk and President Trump as they work to raise capital.
Up next, a lot more. It was a rough week for the markets, as we all know, and now rumbles of the R word, hate to say that word, won't say it aloud, have investors now on edge as we head into another big week of economic data. Roger Altman of Evercore is going to be with us to discuss all of that and what's going on in the mind of CEOs in the corner office all over America. Before we go, though, I want to get a quick check on Bitcoin this morning. You're looking right now. It's sitting just about $82,890. Skybridge Capital's Anthony Scaramucci is going to join us to talk about crypto and so much more in just a moment. Squawk Box returns after this.
with it. Well, there could be more market uncertainty this week with tariff negotiations, the release of key inflation data, and a deadline for a government shutdown. Ahead of all of that, we want to bring in Roger Altman. He is the founder and senior chairman of Evercore. And Roger, you've been around to see a lot of discussions about what happens with the economy, where things are headed. How are you feeling right now? If you look at the numbers, the economy still looks pretty good, but there's a lot of talk of the odds of recession rising, not to a base case, but rising nonetheless.
Well, I think that's the big question underlying markets, which is growth really going to slow? I think it's a little too soon to judge. I mean, we saw Powell's comment Friday, in quote, in good shape.
Yeah.
Jobs number was fine, although it's backward looking. And I think there's some tension between the short-term outlook, where tariff and other policy uncertainty may be weighing on the markets and on the economy, and the medium-term outlook, where if the Trump tax cuts go through, and I think they will, and that overall budget goes through, you know, that may provide a boost. So very short term, I think there's some weakness developing. I mean, we all see the first quarter outlook being marked down. By the way, I saw Kevin Hassett's comment that's on Biden. Not sure about that, but
I called him out on it. I helped, didn't I?
you did. But I think medium term, it's too soon to judge whether this weakness would be enduring or not enduring, including we really don't know where tariffs are going. I mean, I see a scenario where possibly they don't last that long, and those that do last are very strategic. I mean, tariffs vis-a-vis China are pretty strategic in terms of the overall U.S.-China relationship. And some of the others, I think, are tactical. In other words, interim.
Okay, we have had people who have suggested, though, that this is not like Trump 1.0, that this is a different administration with very different thoughts on some of these things.
Yes.
And that if they are looking for money to make sure they balance the budget, they're going to have to do things like hit their biggest trading partners, and that would include U.S. and Canada and Mexico.
Yeah, but as you guys have been discussing at length, it's butting up against the markets. I mean, we've seen in the last week or two, when tariffs are delayed, markets rally. Mm-hmm. When tariffs go forward, or the talk is they're going forward, markets weaken. Eventually, that's going to take a toll on the thinking of the administration. Mm-hmm. I think it would take a toll on any administration, although I think President Trump's probably more sensitive to that than some of his predecessors.
So you are thinking of this as tariffs that go away for some of those major trading partners.
I just think it's possible. If we look at so much back and forth over the last just 1 week, how many different decisions came forward?
When you're sitting with CEOs, though, and they're talking about either investments, mergers, IPOs, all sorts of things, what is the language that they're using in the room right now?
Well, let's define our terms. Let's talk about the corporate sector, not Wall Street.
Okay, corporate sector.
Yeah, and secondly, as you guys know so well, there's no single view out there.
Right, of course.
Right? So it's a tale of two cities. Initially, following the election, there was optimism. The overall Trump bump, tax cuts coming, deregulation, pro-business administration, and markets rising sharply.
Right.
Now I'd say there's some uncertainty that's settling in. After all, business, for obvious reasons, likes predictable policies because they can plan against them.
Okay.
And so at the moment, that's not what the administration is providing. I think that's a fair comment. There's a lot of back and forth. There's a lot of changing of the mind. So there's a.
But do you believe it all? I mean, Kevin has just said, come April 2nd, you're going to know what the plan is forever.
I don't think that's the case.
Roger, you know what I was just thinking? That
Just let me give you a clearer answer. So, it's the views in the corporate sector are in transition.
Right.
They're transitioning from initial strong optimism to some uncertainty. I don't think they're negative, but there's just some uncertainty.
if you had to guess which party was saying we are going to sacrifice near-term stock market action for building out the middle class and bringing jobs back to the center of the country, and not everyone's going to get, we love cheap goods, but we're going to try to rebuild the middle class, which remember how many times President Biden said we're going to build from the middle class out. this almost sounds like a playbook. The rationale is a play. And I see this. If you don't, Democrats are going to have a hard time. What's the new message for Democrats right now? That's a good message. What these tariffs are supposedly going to accomplish. You've let the Republicans steal the whole middle class.
Okay, two-part reaction. Obviously, the Trump proposition is the impact of the tariffs on big exporters to the United States will be so punitive that they will move production
back here
and investment, production, and jobs back here.
Right.
And over a 4-year period, he's going to be president for 4 years.
It's not very long.
Well, no, but over a 4-year period, that's enough time for that to have effect.
Stop.
And if they stick with that,
But if they stick with that, there's going to be probably pain from the stock market in the short point.
yeah,
And
but
you said you
that's the
don't think
point Joe's
that's-
making. I mean, there is
you don't think that
I see short-term pain. It just has to be, because tariffs are a price increase on consumers,
Yeah.
which means less consumption, less investment, less jobs. But if that works in the long term, at 4 years I think is enough time, then it pays off.
Okay, but here's what investors are thinking right now. We've seen a sell-off that's begun. If you think that this is something that the president's going to say, forget about it, I don't want to feel more pain, you would not, you would potentially buy here. If not, you might say, I'm going to wait for better prices.
Well, and that's the equation, Andrew, that businesses are thinking. What is really going to be the ongoing tariff policy?
Right.
And right now it's hard to tell. It's very hard to tell because there have been so much back and forth.
In terms of the deregulatory agenda, how does that manifest itself? That was what sort of part of the animal spirits piece of this was. We talked about M&A activity in the month of January, which was remarkably low. Kevin Hassett said, be patient, it's always like that the first couple of months out of the gate. When you're talking to CEOs about doing mergers, about IPOs, are they saying, we got to wait, we got to see what the FTC is really doing? We were happy Lena Khan's not there, but we're not sure what the new sheriff really thinks?
Well, I think the market itself, which is now down for the year and was down 3-point-something% last week, is having a bigger effect on that than uncertainty about policy. I mean, I always say that M&A is strong when business conditions are good, equity values are high, and CEO confidence is positive.
Right.
And right now, there's a little uncertainty about business conditions. This question of short-term pain. Markets are weakening, and confidence is okay but not awesome. And so those aren't perfect conditions for strong M&A volume. Now, they may evolve into being, I mean, I have to be fair to Trump. A lot of his agenda, they haven't had time to implement it yet, right? I mean, the tax agenda, for example, much of the deregulation agenda is still in formation, so to speak. So we have to really look at this, not just short term, but medium term. And if all that comes forward, and markets respond positively, you're going to see strong M&A.
Okay.
I think.
Roger, thank you.
Thank you, guys.
When we come back, a lot more on Squawk. Anthony Scaramucci of Skybridge Capital. He's going to talk Bitcoin, possible stablecoin legislation, the newly established Bitcoin Reserve. Programming note, you don't want to miss Brian Sullivan. He's got an interview coming up with Energy Secretary Chris Wright. That's going to happen later today on Power Lunch. He's at the Sarah Week Conference. Stay tuned. You're watching Squawk, and this is CNBC. talk about Squawk Strategy, the company formerly known as MicroStrategy, now filing to sell up to $21 billion of its stock as part of a at-the-market program. It's going to use the proceeds for corporate purposes, which, if you know the company, means including Bitcoin acquisitions. Joining us right now, talk crypto and so much more, Anthony Scaramucci, founder and managing partner of Skybridge Capital. It's great to see you, Anthony. We're looking at Bitcoin sitting just about $82,000 right about now. It's obviously come down a bit. In the background, we've got this Bitcoin reserve, though, and I think a lot of the move prior to that had been on speculation that that would come about. Now there's all sorts of debate about how it's really going to work and whether the government and taxpayers are going to ultimately be buying Bitcoin. What do you think?
Well, good morning, Andrew. I love the strategy. I want to applaud David Sachs for the job that he's done in terms of organizing the administration, going to the Congress and talking to the Congress about the ideas around Bitcoin and stablecoin legislation. And I think if you read through the executive order, there's a lot of meat in there for Bitcoiners. The problem with Bitcoiners, unfortunately, they've been beaten down over the last 4 or 5 years. And so the expectations were very high that the Trump administration would just come in, turn on a switch, and they would have this halcyon era. I think what David Sachs has done, frankly, is brilliant because he's trying to create a bipartisan commitment and a bipartisan understanding to digital assets and the space of digital assets in the United States. So the trading is sloppy right now, but I think if you look forward over the next 3 to 6 months, you'll see a lot more institutional buying. And the fact that the United States is going to hold this asset means that other countries, Andrew, are going to end up buying this asset as well.
So how much of it, though, depends on the U.S. government and taxpayers buying Bitcoin? Or do you think just the idea that this reserve, which is coming from basically stolen or illicit Bitcoin, which I also don't think is a great advertisement for Bitcoin, how does that reserve therefore grow if there isn't additional money put in?
Well, okay, but there's been forfeitures of U.S. dollars. There's obviously frozen Russian assets. And so if you just equate Bitcoin to currency or dollars, then I think you can get over that assertion that it's quote unquote stolen. It's just a forfeited asset. But I think what David is basically saying, or what the communique from the Trump administration is saying, that they're not going to spend taxpayer dollars on this, but they will find revenue neutral ways to acquire Bitcoin. That could be selling other assets, frankly, that have been under forfeiture to the United States and transitioning them into Bitcoin. So again, it's a step in the right direction, and I think it's very, very important. If you think about the assets that are in our strategic reserve, they're nonpartisan. I don't think there's a debate in the Congress about holding gold or holding oil or some of the rare earth minerals or even some of the medical supplies, frankly, that the U.S. holds in its strategic reserve. And I think we want to get Bitcoin to that position, Andrew, and it will take some time. And I applaud these guys for having patience. I think if they went very, very quickly and sort of rammed this into place, there would have been a reaction formation on the side of the Democrats.
So here's the part this is the part that I'm confused about Bitcoin as a strategic reserve in this country. And as we've discussed, I mean, look, people used to say if the U.S. government was buying Solyndra, that was a terrible idea, that they don't know how to operate or run the post office, or all of the things that supposedly the government is completely incapable of doing. And so the idea that we are going to invest and potentially lever ourselves up, meaning use taxpayer debt effectively to do this, I think for people on the truly conservative side, and you could say conservative politically or conservative economically, they say that they don't understand this.
Okay, well, I would encourage them to do a lot more work on it, because if you accept what Michael Saylor is saying, that this is an operating software layer for the future of transactions, and if you believe what I believe, that this is a digital store of value and it's equivalent to digital gold, and when you go into the future 10 or 15 years from now, I do think the United States is going to want to have this as a reserve asset in order to maintain the stability of the dollar and the supremacy of the dollar. And so I think concomitant to that is the stablecoin legislation to obviously empower the dollar further. But again, this is not a Solyndra, it's not a company.
Think
think if the government was
Joe, I thought you were on my side on this one, Joe. Right?
No,
Or no?
you're gonna hear me on your side. Think if the government was totally all in on 2 or 3%, like governments that are totally at risk of the devaluation and we've seen what the Fed is capable of and what we're capable of in terms of spending. You would almost think that there's more risk in being stuck in fixed income, long duration assets. You'd almost want Bitcoin to offset the risk, which is in those things, I think, wouldn't you?
Yeah, I think again, what Andrew's saying, I think is more company and venture capital related. That's a question for another day related to a sovereign wealth fund and should the U.S. be in that business. But this is, again, if you think that this is a reserve asset and this is going to be digital gold, I think Joe believes that. I certainly believe that, and I've been a Bitcoin holder for just over 5 years. This is something I would want the country to own. To defend itself and to defend the currency. And I think guys like David Sachs, of course, understand that. I think they've done a great job of convincing President Trump of that. And what I would suggest to Democrats is that they get on board. Just because the Trump administration, this is a big danger now in our society. If the Trump administration has good ideas, let's call balls and strikes and say that they're good ideas. I think these guys make a mistake. If the president was right on the border, you reverse everything on the border and you cause a disaster on the border. Let's not do that here. Let's make this bipartisan. Let's get people to understand this better, Andrew. There's a lot of skeptics, particularly people my age or older, that don't understand it. I was at a Yale event on Saturday, and a couple of people that are roughly in the same demographic group as me hate it, don't understand it, or negative on it, think it's worthless. But it's a very valuable long-term strategic asset, and I believe the U.S. should own it. And I think David Sachs and his team has come up with a way for us to own it in a way that's the least controversial way, which is not having it cost the taxpayers anything additional to own the asset.
Yeah, okay, that you just answered my question.
Hey, Anthony, we got to go, but one last thing. How do you feel and how do you think the American public should feel about the empirical conflicts of interest that are presented by the people who are putting this all together? Meaning they own the asset and ostensibly should benefit as a result.
Okay, well, again, Sachs has said declaratively that he does not own the asset, that he sold all of his exposure. I think the people that are in the administration that own the asset should sell the asset. I think this is the problem. There are clear ethic rules and clear guidelines. When I went to go work in the administration, I had to put Skybridge up for sale. Of course, I got fired, and so good news for me is I didn't sell Skybridge. I was able to return back to Skybridge. But I think people that are in the administration, there are certain ethical guidelines that they should follow, and they should shed this asset if they own the asset. I think it's a dangerous thing.
I thought about you with all those crypto bros, Anthony, and I was like, I kind of thought maybe you wished you were there. Maybe next time. Next year.
No, Joe, I want to be with you, Joe. I don't need to be with them. I want to be with you, Joe.
I thought about you, though, because
this is more fun. This is more fun for me, Joe.
They're all there. And I was like, where is Anthony? And maybe I think next year.
I'm right here with you, Joe, right where I was intended to be, Joe. Right here.
All right.
Okay. Anthony, nice to see you, sir. Thank you.
All right, good to see you guys.
Still to come. Oracle set to report after the bell today. The stock up 38%. In a strong performance this year, really of its cloud business. We'll preview what you need to watch when the numbers hit. They always have this weird reporting, but it gives us something to talk about anyway in the middle of the lull of most earnings. You need to watch when the numbers hit. We'll be right back.
insurance.
All right, welcome back, everybody. Oracle is set to report its fiscal third quarter results after the bell today. Joining us for a preview of that is Alex Zukin, software equity research analyst at Wolfe Research. Alex, what are you looking for?
Look, we're looking for another strong quarter. We think Oracle's benefiting from the secular momentum in generative AI. We think they're one of the probably most up-and-coming neo clouds out there, supporting some of these large training workloads and clusters. You've seen them in the news with Stargate. You've seen them talking about Meta, some of these very large providers that we think position them really well for continued accelerating growth at scale. We're looking for a really strong bookings number in RPO. We're looking for accelerating IaaS growth, and ultimately looking for accelerating revenue growth, which we think they can sustain and maintain.
What about the guidance?
Yeah, look, on guidance, we think the world is changing pretty rapidly, so we wouldn't be surprised for them to be a little bit more conservative. But we think that that's in constant of all of the bookings coming off the balance sheet that they've been able to, really maintain throughout the course of the last 12 months. We think that's going to continue to drive the growth rate. So we think that they've done a pretty good job of letting everybody know that margins are going to trend down as more of these capacities come online. But we think there's a natural floor for that next year.
And very quickly, Alex, that stock's up 35% over the last year. What's your price target?
Our price target is 205, and we think that that stock can continue to move.
All right, that's a big move over the next 12 months. Alex, I want to thank you for joining us ahead of the numbers today. We appreciate it.
Thanks, guys.
Okay. Very quickly, take a look at the futures. They have weakened throughout the morning. The Dow futures are now down more than 450 points. The percentage drop for the NASDAQ is pretty strong, too. It's down by 310 points. S&P futures are off by 75. A lot to watch today. Make sure you follow us tomorrow, and we'll pick things off right now with Squawk on the Street. That's next.
Good Monday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer at Post 9 of the New York Stock Exchange. David Faber's on assignment. Stocks do look to give back all of Friday's late rally and then some ahead of a big week of inflation data and a government shutdown deadline. That's where our roadmap begins. As stocks headed toward another lower open. S&P's coming off the worst week of the year. Novo Nordisk shares tumbling pre-market. Some weaker than expected data for its latest weight loss drug. And more protests at Tesla showrooms over the weekend following Elon Musk's growing political involvement. Let's begin with the markets on track to extend last week's losses. Jim, you got some thoughts this morning about what is driving this sentiment right now?
Right. Look, I think that we're in this situation where people feel that there's nothing good now that can come to this administration. Obviously, we felt that there was a tremendous amount of good that will come. There's this perception, and a lot of it was from a Sunday talk show, that he's willing to that Trump's willing to take a recession, and it doesn't matter. I think all this is just talk. I mean, Carl, if we're going to become the Trump, they remove the put. If we're going to become all Trump all the time, then we're going to be never on a stock, and that's just not true. What you have to do is say, okay, well, who's not involved? Now, there were too much buying in J&J and Merkle on Friday. There was a rotation into dividend stocks. But people want to panic, and I want people to understand. When you see the prices underneath and what's known as a crawl, they're all down about 2%. That's someone just saying, listen, I'm not even going to wait for the open. It's a program. They give it to Goldman and say, listen, here's $1 billion worth of stock, and I don't want it at the opening. That's what goes on. And I've done these. I've panicked, too. I remember selling $200 million to Goldman and getting back a report down 3%. And I said, like, in the middle, I said, what an idiot I am. But that's what's happening. And they are idiots.
Do you mean it when you say panic? Or do you just mean
panic?
Sorry?
No, well, it's someone who comes in and says, you know what, it's all over, and get me out. A get out now strategy. And the get out now strategy causes what you see, that you see everything down 2%. And what I'm urging people to do is say, okay, look, I know it's being taken down by portfolio managers who think it's over, but think about where it bottomed on Friday. NVIDIA, let's use NVIDIA, which is probably the most hated stock other than Tesla, but at least has an event next week. NVIDIA traded down to 106. Good place to think about if it holds. Good place to buy some. If it doesn't, then look out. Probably goes to the 90s. And if you can't take that thing, Get out now. Get out now.
Yeah.
Because you're just going to have the same drumbeat every day.
Yeah, Ben Wright's great work this morning
fabulous
looking
piece.
at the multiple on the SMH over the last 3 years is up, what, only 20%?
Yeah, I thought that was an amazing piece. And yeah, look at Marvell. Okay, this is now the poster boy for not getting even more business than it did and not being able to do 20%, a little bit lower. Here's a stock that was at 68 when they only had 200 million in artificial intelligence, and the CEO bought a ton of stock, a little bit north. And then it goes all the way up because it does have the contract, and everyone's very excited. And now it's repealed all that and more that it had. It's now got 1.5 billion in AI. And what it says is AI is worthless. So the question is AI worthless? Well, that's NVIDIA at 90. Worthless.
Yeah.
And maybe some people just feel like, you know what? I have to sell NVIDIA because my stomach hurts from Trump. I watched Trump this Sunday, and what it says to me is that it's time to get out now from, I don't know, everything other than Johnson & Johnson. And all I'm saying is this is bad trading, all right? Now, these are people who want to get ahead of some sort of cataclysm that they see. But if you can't see the cataclysm, and what you see is the August 5th low beckoning, and that was the Japan carry trade low, then you shouldn't be sitting here thinking, get out now. Frank Holland had an amazing line.
I noticed you gave him a shout out.
Oh, well, it was so good. He said, look, because what people come on, and no offense to the people that I'm not going to mention the names, people like to hide behind the long term. I've seen this before. I remember that's what cowards did. You know what? I don't have to worry. I'm long term. Well, yeah, Frank came right back and said, well, even a long term person might find stock worth buying low. And it was just kind of like, well, that sounds glib, but it wasn't. It was rigorous, because that's what a good person does. They look at what they like and they pick.
Right. I noticed he also amplified Leslie Picker's tweet this morning, looking at the view that many consensus longs on no news triggered risk management to kick in. That
Right. Yeah, I mean, I'm not. When people lose money, I don't mean big. I've lost money. I've been trading since 1979. I've lost money. I've made money. I can tell you when I lost money. When I lost money was when I decided, get out now. It's over. When I made money is to take the other side of the trade, who was me, the get out now guy. This is no different. You know, except for the fact is, this was a belief in a president, and you now think he doesn't care about the averages, and it's an all-new president. It's a populist president. It's William Jennings Bryan. Well, actually, we elected McKinley, not William Jennings Bryan. Right. And people ought to go read the two, because one is raise less corn, more hell, and the other one is gold standard, and let's keep things strong. The business. So, I mean, anyone who's decided that Trump is now anti-capitalist and just doesn't care except for his base, complete mystery.
Well, I think I'll push back on one part of that. One might argue it's not the policy end game, it's the delivery, of the evolution of this policy that is driving hesitation.
Yeah, I did a piece this Sunday which just said for club members, that's a plug for the club, because what the hell else are we supposed to be doing? And one of the things I said was, okay, look, if you laid out the plan, and it's put 20% on Germany and 20% on Japan, 20% on Korea, then we would say, okay, we're going to get the beat out of us, and we know it, and we'll buy when he's finished those. But no, the problem is it's fit 25 and then no 25. It's just that. And then Howard Lutnick comes out, the Commerce Secretary, says there's going to be no recession. It's not up to the president whether there's going to be a recession, but suddenly we've endowed him with powers that I've never seen before. So all I'm saying is if you're at home and you're watching, you want to join the people who have that program because they think they're really clever. And by the way, when I did the program down 2%, I thought I could get back in down 4%, but it never went below where I sold it, so I couldn't. I remember I was selling Acme Markets, which was really good stock, but my mom liked Acme. And she had died, but I knew she liked Acme. And the stock was at 60, and I got a report from Goldman Sachs I'd sold it at 52. And it never traded lower than 53.
This informs so many of your picks, Jim, and your whole strategy. You do mention Lutnick. He was on Meet the Press. He was more forceful than the president on pushing back on the notion of recession. Take a look.
Should Americans brace for a recession?
Absolutely not. There's going to be no recession in America. What there's going to be is global tariffs are going to come down because President Trump has said, you want to charge us 100%? We're going to charge you 100%. And you know what they say? They say, no, don't charge us 100%. We'll bring ours down. We'll unleash America out to the world, grow our economy in a way we've never grown before. You are going to see over the next 2 years the greatest set of growth coming from America as Americans. You saw it, 1.3 trillion of new investment coming in America. Think of all those jobs. And remember, each trillion of investment in America is 1% of growth GDP. So Donald Trump is bringing growth to America. I would never bet on recession. No chance.
Meantime, you got Carney now, who's going to lead the Liberals in Canada and be Prime Minister, says vows to maintain retaliatory tariffs, quote, until Americans show us some respect. You called him a worthy opponent this morning.
Yeah, well, I mean, look, he Brookfield, he brought it to America. He was at Goldman for many, many years. He was the Bank of Canada, then Bank of England, the head. I remember when I met him. I sat down next to him at the White House correspondent dinner. And I didn't know who he was. He said, like, I'm a banker. I said, oh, well, I used to work at Goldman. I used to work at Goldman, like talking back and forth. And at the end, all he wanted to do was talk about my daughters, because she's got 4 of them. One of them's at Harvard. I had no, he just came and asked me about my daughters. I said, my daughters. I said, hey, which bank do you work at? He said, the Bank of England. I said, oh, God, do you run the Bank of England? He said, yeah. I said, well, I'm a complete idiot. I didn't know. But he's really smart. But what I love about him, totally unemotional. I couldn't get him off his game even about kids.
Interesting.
And I think that's what Claudia Sheinbaum is, president of Mexico. Totally unemotional. And that's what you need. Trudeau was wildly emotional. No, thank you.
Right. Page 1 of USA Today, the headline is Canadian Backlash, and it's all about their ability and their move to remove U.S. liquor from their shelves. They can do that.
They certainly can do it. It's controlled. That market's just okay.
Well, I mean, it is the biggest market, exporting market for U.S. Liquor.
I'd rather be in Total Wine and More in Costco.
Yeah, that's true.
No, I looked at that Canadian market because of mezcal that I'm involved in. Not the one that was mentioned on Squawk Box. That different mezcal. I don't know how that's doing. I know how mine's doing. I don't know how that's doing. But, let's say we raise average tariff on dutiable imports. Let's say we raise it 38 to 39. Let's say the overall effective tariff rate rises from, say, 14 to 20.
Effective tariff rate in the country.
Well, when we were growing up, we learned about this horrible thing. It was called the Smoot-Hawley Tariff of 1930 and precipitated the Depression. What I was just reading was the levels that Smoot-Hawley did. Now, the levels that President Trump was are higher than that.
Right.
And I think if you had said that you were going to do the tariffs of Trump and you went on Meet the Press and you said it wouldn't cause a recession, I think Hoover might have said the same thing. It just doesn't work like that. A recession comes if we have tariff. If we don't have tariff, we're terrific, and they roll them back. But not everybody comes out. Not everyone comes out of this unscathed. The U.S. didn't. Germany didn't. Actually, I think that maybe Greenland came out unscathed. The whole world was brought down by this. So I think that's again why people are what you see NASDAQ down 305. But the question is Trump more practical than that? We've now decided that Trump represents the party that we used to think was the Democratic Party, and he's pro-labor, anti-capitalist. I don't know. I think there's some flexibility coming, but I think we have to repeal everything that we thought Trump would give us. And what it's going to be hardest for is on the banks, because those are the ones that were going to be deregulated.
Anti-capitalism, bitch.
That is, and a return of capital market activity. We'll talk about.
Well, thank heaven, Bacon bought by
on the day
Brad
Faber's not
Jacobs.
here.
Thank you, Redfin. Holy cow! I thought that they were moribund, and suddenly they're alive and with
Jim
pleasure.
Cramer's wrong. He's pro-labor, pro-union, but he's not anti-capitalist. So get that straight, Jim Cramer. Hello, retail traders. We hit my first support at 567. Come close. We could hit 565 by the time the day's over. Now, these fat cats, look at that. The market's down again. Even the people on Wall Street don't know how bad the party has changed, the Democrats. I mean, when you allow men in girls' bathrooms, you got a sick problem. Especially with me. If I had kids, I'd be pissed. And the bad thing about it is there's a lot of Democrats in government. I think we'll recover from this morning. So I'm going to be looking heavily at calls. We already had one indication. I see a wick hit the 200 EMA. Well, I got 15 minutes, so I might debate on going there and make me a smoothie or have it before I go to bed. I gotta get that craving down for food. I was looking at this here. Well, that's Toronto. Let's go back and look at that hotel again. The 200 EMA. Good morning, Michelle. Good morning, Magnificent. Good morning, Link. Good morning, Chris. Good morning, Jim. China issued retaliatory tariffs. Very good. Let the trade war begin. Just trying to figure out what I keep buying from China. I buy a lot of clothes from China, I used to. But not much of anything anymore. I don't think none of my instruments are from China. I got a Taylor and a Martin. ukuleles from Hawaii. I don't know where my mandolin's made. I got to look that up. So let's see what China's doing. I'll probably shorten the sucker. Time to short them. Tesla hit my support that I called in the video at 252. Mike? Feeling pretty good. Let's see how the market reacts right at open. Good morning, YouTubers. He sure did, didn't he? We got a fallen wedge. Well, kinda. We could say it's a fallen wedge, but I'd like to see this one a little bit higher. But I could call that inverse head and shoulders, and that'd make it a true fallen wedge. On /ES. Now I traded this yesterday, made $500 on one trade, and I was in and out of it in minutes in a short period of time. Sunday. $400 and something anyway. Mister had a pretty good pullback here. Let me see where that 200 is. Let's look at the daily first. 250. So we got a gap at 282, and the bottom of the gap is at 268. So we pulled back to the gap. Bottom of the gap. Might be a good trade. We got two gaps. Pulled back. We pulled back pretty good. Yeah, I like that. We pulled right back to the 200 EMA. And then we got AVGO, which I was kind of eyeing on. 287. We got Apple we got to watch. I still think Apple's way overpriced, but when I say this market's overpriced, you better believe me. Still way overpriced, no matter how I look at it. We go down another 10%. NVIDIA, man, I'm telling you what, I'm really shook up about NVIDIA. Friday we had a 190-day low. I have triple bottom on the 1 hour. It could go a little bit lower. I'm seeing a lot of good deals, but I don't know yet. We could hit 107 and be a strong buy. Set an alert at 108.21. Kind of prepare myself in the name of the Lord, amen. I have 57.34, but I think we're going to open up a lot lower than that. We do have an inverse head and shoulders down here on the SPX. And it takes me right to that 57.30. And I still think we can open lower than that. That's a $40 dip. So your next support's right around in here at 57.09. Now I like that a lot better. Just because we're down so much. 59.07. What am I doing? You're setting an alert. That's what you're doing. And we got 5 minutes. Should I go make a cup of tea? Yeah, I need to warm up my flanges. Good morning, Johnny. Retail traders. I'm going to try to pull an Elvis at one of the restaurants here in town. So my sister wants to have her dinner here, so she was told that she only had a reservation. She had to have a reservation for 7. How about if I flip you $100 bill and get me in there? Reservation for 4. I want the whole place closed down, and I'll give you 10 grand. That'll open up an hour early. SMCI is popping. They'll be the judge of that. Yep, I'm the judge of it. Correct. Must have had some news or something. I want to see where SPX opens up. I got 2 more minutes. I think my water just got warm. See how fast it takes? I've been drinking decaffeinated products for about 7 months, and I really like how it's changed I sleep better. I'm not as tired. I am tired, but I'm not as tired. Caffeine's like a sugar high. And then I yawn. Okay, we have less than a minute. The crowd's going wild. We're going to find out where we open up here today. I'm saying 57.11.97. Prepare ye in the name of the Lord. Ooh, I was wrong. Let's look at them. Oh, I didn't set up gotta put my passwords in. Shit, Jim. Hully. Sometimes it takes a little bit too long for this Tastyworks set up. I should have timed myself. SPX. Ready to open. SPY might be cheap too. Today's the 10th. Oh, God. Boy, you ain't kidding about them premiums, Mike. 57.50s is what I'm looking at. We're here at 9:30. Let's do it. $9:30. We're at 10:40 right now. This is gonna be a fun day. It's the fastest scalp in the world. That stood there. Nobody wanted to buy it. I'm going to get the other one. I'm going to be looking at the SPY now. Okay, you see if we get the double bottom here. We got inverse, we got a little bitty spot right here. Another one right there. And then a strong buy right here. These things are going to be cheaper now. And then I'm going to look at the SPY. SPY's at my support. Now we can hit this little 565.34 area. We want to trade Tuesday. $5.75. Where's my SPY and SPX? There it is. VIX is elevated. Okay, ooh. Watch the SPX again. I think I like it right here. Do you understand me? It's dead. Dead. 790. It's the most wonderful time of the year. This is going to be a money-making machine today. I mean, when you're up a couple $100, you take profit. SPY's up $30. We're at $10. So I got one left. In and out, in and out. Beach trade, beach trade. Do. Tesla I got next for $244.78. It's another $3 dip. Spies moving. I should have took that trade. It was at 170 when I looked at it, but I just went ahead and went with SPX, and I still have one of them left. Remember, we love pullbacks. Jimmy loves knives. Huge spread on this. Okay. I gotta see where my. It's the most wonderful time of the year. $216. We're at 1070, 1080 here. I might. Might just do it. I might just take it. Brace it. It'd be nice to see a double top, baby. $11.30. I practiced this weekend on I Got Lucky song. Where's everybody at? 11:40. 11:60. I want to see a double top. Munich, Paris, everybody talk about pop music. Talk about. Jimmy wants to see a double top. He'll take no for an answer. I said I'd take no for an answer. I meant it. Most wonderful time of the year. Well, all the IRS employees are back to work today. They're not working from home like spoiled brats. 1160. Come on, give me 12 or 13. Nancy, will you give me a Q-tip, please, and then clean out my ears while I'm trading? Oh gosh, not again. Jim, I'm sorry, but we can't do your breaks. Always clean. This is a business phone. May I help you? Yeah, may I help you? Yeah, what's going on, baby? Yeah. He's back to his old cricket gym again. And for that, I must read a Bible verse. Learn, grow with knowledge and understanding. Matthew 11:29. Your directness, Jim, on the telephone is just overwhelming sometimes. Don't ever ask me to work for a call center. And say, baby, would you like to buy a boat yacht? I got one for sale here. I would love to see a double top. May a circle. AVGO's pulling back. Ooh, Apple. Big knife on Apple. Ladies and gentlemen, delayed Siri AI upgrade would hit iPhones. Apple's delayed Siri AI upgrade could hit iPhone sales, Citi says. Apple delays AI improvements for Siri. That's not good. Plus China. I still think it's way overbought. I'd like to see it right around 225, another $5 dip. We got a triple bottom off the wicks, just under 230. Should I sell my option here? Say yes. I'm going to say no. I can sell it at 970. I'll be up 200 bucks. But if we break it, we'll hit the double top because we got a trend line that says we will. So I wait. It's the most wonderful time of the year. Today I'm going to look up where my mandolin's made from. I got a rising wedge. Guild. Mike nailed it. Up with your heads. No, ain't this working?
So what does all of this mean for the market?
As long as people want to buy it, the price can go up.
Well, the Fed can't do everything.
Do everything they used to do to save this market.
Instead of taking cues, set the cues.
There's nowhere else I would want my money.
No more than 5.
Kevin Leary. These people like yelling at you.
The Fed can't do everything.
Stocks are getting hit right now. NASDAQ's down, and we do have some earnings. Oracle this week's going to be of interest. Angelo Zeno's back with us, VP Senior Equity Analyst.
That is correct.
Tom's next to me getting ready to trade. Angelo,
Words of wisdom.
Going to give us something here that we can go with?
I mean, let's hope, right? I mean,
hope.
We kind of look at the results here. I think as far as the quarter is concerned, they should be fine. You're looking at growth of about 8 to 9% here for the year-over-year basis, and that is expected to accelerate here.
Okay, I'm getting ready to get ready
in the May quarter.
You're ready to get back in this
reason
trade.
For that is the fact that Blackwell is now ramping. It's going to kind of get integrated across their ecosystem. When you kind of look at really what the main growth driver for Oracle is these days, it is kind of their cloud infrastructure business. It is now kind of growing at a year-over-year basis of north of 50%. It's about 17% of their sales. So we want to continue to see that trajectory improving as far as their cloud infrastructure business is concerned. There's obviously going to be a number of storylines wrapped around this call in terms of what does compute capacity look like in terms of supply demand as we progress through the year. How do things look like as far as the recent Stargate initiative is concerned, as well as kind of that partnership with that perceived better partnership with OpenAI. I think there are going to be a lot of kind of questions around that, and the hope is
okay, get ready.
Both OpenAI and Oracle have kind of strengthened that partnership, where over the next couple of years, that also kind of improves the growth trajectory of the company.
Angelo, are all of our tech companies basically going to be reduced to a function of compute capacity? Does it matter what else they do, or is that just right now going to be like the nominal driver for general interest in these stocks?
Yeah, I mean, as far as kind of, we've essentially seen the premium pretty much taken away across most of these AI-oriented names across the tech space, right, over the last couple of weeks. I mean, whether it be some of these cloud providers like an Oracle or Microsoft, or specifically as far as kind of these semi-AI plays out there. I mean, we've really kind of seen
do it, Jim.
the
6:30
really kind of deflated here. But when we kind of look ahead,
break it.
I think all eyes are going to be really on a number of things. One, what does the tariff situation look like? And two, yeah, I mean, as far as kind of the compute capacity issue is concerned, that Blackwell ramp, I think next week's going to be critically important as far as NVIDIA's GTC conference is concerned, what they have to say as far as kind of the ramp or metrics, performance metrics as far as the B300 Blackwell Ultra concerned, and into 2026 as far as what they can say about Ruby, which will kind of be their next platform out there, and the capabilities you'll see from a performance perspective on those platforms.
All right. Hey, Angela, real quick, after last week, should we be buying the dip on Marvell?
Yeah, I mean, I think it's kind of, this is one of these high growth names out there where I think most investors are going to continue to take a wait and see and hope for a bottoming here over the next kind of couple of weeks. But, that is a name that's going to, pretty much be tethered with the likes of an NVIDIA out there. So if, the NVIDIA story kind of starts to improve, next week after GTC or whatnot, I think the Marvell story starts to improve as well. But, right.
That's the first album I ever went on a radio station. Let It Be. The crowd's going wild here at the sports arena. They want to see Jim win on this trade. Double bottom, baby. Don't argue with me. I'm trying to tell you, we're now at $8. We're now at $8. The crowd's going wild here at the sports arena. I'm telling you. Let it be, let it be, let it be, let it be. Speaking words of wisdom, let it be. I was singing for Mike on a Monday morning. He looked into my eyes and said, let it be, let it be. Yeah. We're now at 8:10. I could make a business decision. But I'm not going to. Because I want to hit the 21. We're above the 9. We broke resistance. Barely. No, we didn't really come close. We can have a triple top. But I mean. I'm still in it. I'm holding on. I should have got out at 8, but Jimmy didn't do it. Let's hold the double bottom, or we're gonna. Well, I think we just had a new. I got a true double bottom here. Please hold the position. I'd like to see that candle close above 56.74.64. Break it. We have 3 black whores right here. Okay, this is it. I want to hold this position now. So let's do it. $5.30. I don't have much room to play with here. Come on, baby. Average is 580. I got $1,160 in this trade, and I'm even. Now, when you're in trouble and you're in doubt, give Washboardjim a shout. So if you're in trouble, you might want to get out even if you're not feeling good about the market. I'm still in it, but I thought about it. Because it's... I'm going to go in the kitchen and make me a smoothie here in a second. Matter of lunch. $4.80. Mike Carvana's at a double bottom. We could show up right when the doors open. $11 a.m. Well, this ain't working out. I'm going to hold on to it a little bit longer. If we go below this, I think I'll sell it. Break it. If you're down $100 even, get out of it. If you don't feel good about the trade. Slash ES is at a double bottom from Friday's low. I'm going to stay in it a little bit longer. So what the premiums are on this baby. Might just jump into it. Them things ain't cheap either. Got a new low. Show some respect. Oak. break it. Showing a little bit of life here. A little bit. Come on now. We're above the 9. I'm at 550. I could sell it here and be down 60. Be down 40. We've got to break this trend line. If we can break the trend line, we'll probably go higher. There's my even spot, 580. I didn't give up. Let's break it. Just a little bounce, that's all I ask. We can do it. We're squeezing right now. It's taking its time. $620, baby. Come on, you can do it. The Rocky theme song felt just perfect. Gives me goosebumps. Don't tease me, baby. Running high now. To make a business decision soon. It's complicating. The volume is very low. I made some beef stew over the weekend. I'm gonna have it. We got it warming up on the stove. Can't wait to eat it. I didn't eat none of it. I usually eat a bowl of it, but I didn't have any of it. So I'll find out with a taste test. Yeah, this thing ain't doing what I want it to do. Could have got out 620. Maybe. If it would have let me. We wait. We broke the resistance and we're squeezing between the 9 and the 21. There's a SPY at on the VWAP. Oh, that didn't help. Oh, we did hit my support level on the SPY. Real close to it. Yeah, it's not going to do what we want it to do. I'm going to get ready to go buy puts if this thing doesn't hold. And they would be the 5590s. And that's way out of the money. These things are so high. Okay, I'm gonna double down here. They better hold right here. I'm gonna be pissy. 430. I got 480. Yep, I think I got to get out of these. The Bears are in control. I got 480 here. I might be able to get out even. I got 6 of them. There's 470. Work your magic, Jimmy. Nobody do what I'm doing, whatever you do. So you can lose money. Oh God, stop it. You bears are disgusting. I took ate a piece of the meat and it was delicious. I can smell the aromas now. Oh, go. Now, should I get out or should I hold on to it? Yoko. Should I get out even? Above? Damn. Pressure's on. You know what I think? I think I should. While the getting is good. I don't want to, but I will. Come on, sell now. And all of a sudden, watch it break out, and I'll be sitting on my hands. Recession fears drive pre-market losses for U.S. equities. There's $5. Come on, give me 6. That'll be well worth what I've done here, and I'll get 600 out of the deal. Actually making my decision making hard here. Come on. I'd love to make money on this.
It's my money and I need it now.
It's my money and I need it now.
It's my money and I need it now.
It's my money and I need it now. It's my money and I need it now.
It's your money. Use it when you need it.
Dial 1-800-888-8686 and ask for Washboardjim with 10% of your gains. I take $5. Could have got 520, maybe 530 out of them. Okay, I'm gonna have my soup and then come back. Try and make another business decision, a wise one. We got a double bottom here on the /ES. Carvana broke Friday's low. Apple's coming down to my 225. I'm not done trading this yet. I mean, I'm done. I'm out. But I mean, I'm made $80. I mean, 80, 100, 20. I got my alert set for Apple at 226.50. SPY, we could have a triple bottom right off this support line. Tesla has a 1, 2, 3. Oh, hold on. I still think we're going to bounce. Intel's at 20. Amazon's down $6. Let me see here. I have 190.36 for that one that I did in the video. What about snow? Snow's at the 50 on the weekly. Yeah, we got 142 for snow, another $5 dip. Plus we have a 1, 2, 3 dip. Okay, watch that. Watch this. Oh yeah, just under the 200. Right at the 200. So there's double confirmation. Watch SPX here, 390. I'm gonna go get my soup and I'll be right back. So far I'm all green, all my trades. That's what I'm having for lunch today. Tastes good too. Soup. Oh yeah, that's good. Okay, on the 5 minute, we got a wedge. I'm going to jump back in these trades again. Yoko. Right at 320, the same ones with the fallen wedge on a 5 minute. You understand? I'm scared, Jim. I'm scared. I'm scared. Excuse you. A little more? Let's hope not. Prepare ye the name of the Lord. Always clean. This is a business phone. May I help you? That's what I thought. That's what I thought. You don't mess around with Jim, man. Not when he's at work. Big Jim. Big bad Jim. Well, Jim was a badass. He stood about 6'9". Everybody tried to get ahead of him and jump the line. He'd wail his fist as high as he could see, and everybody would run, just not to get hit with the big bad Jim. Big Jim, big bad Jim. Oh, I can't see my trade here. I was up at 410 there for a second. Break it. Man, that was good. I didn't add any salt, but it tastes salty. Not real salty, but probably some of the spices. That was good. I started a channel with just cooking out of an Instapot. We'd like to see this fallen wedge break out past the 9 on the 5-minute. That'll be the perfect time. Don't forget to set a stop because it might flop. Oh, uh-oh. Someone had a change of heart. There's 221, oh, $4. 221 bucks. 80, no, 240. We need you to break, for heaven's sakes. Say la-di-da. This will be 4 for 4. Oh, did we get stuck here?
Definitely the least confident and the least, I'd say, in quite some time. Well, obviously, we'll see how data comes in, but with an unknown and a tariff uncertainty on pricing, I do think that there's less of a willingness to make these pretty big ticket item purchases, which is entirely Wayfair, and they need to get with the times on their returns. You pay for shipping on your return.
Here comes the rant.
It's so expensive.
It's getting personal.
I know. I got personal on both 2 of these names, but that is to me the most. You have to pay such a sizable shipping fee to ship any items back. I mean, in this day and age, probably saves Wayfair some money, but it definitely doesn't make me a return customer.
No, for sure. All right. Do you hear that, Wayfair?
Oh, come on.
And I spend money on things.
The other thing too is that like housing's kind of dead. It's a lot of housing related stuff, so
right.
It's not looking great for Wayfair. Rick, the chart.
Well, it's not good. And I think that you could maybe make a couple of different arguments about what's been happening here. On one hand, our white lines give us a more of a falling wedge type of shape here, where we did make slightly lower lows during our second phase here, during our move to the downside, from which we are down more than 55% from those 50 highs. So, I mean, you could have it that way. You could also maybe give the yourself this horizontal ceiling right about here near 57, and then a horizontal low near about 38. So range bound to downward. Maybe it kind of depends a little bit subjectively on how you look at it. But either way, though, our recent price action has sent us below either of these boundaries, including our more kind of generous one with our
it does look a little low.
Trend line going across our lows here. I guess you could say, though, we are out of the oversold area, so that is a potentially maybe more bullish signal there. But things do not look good. What the bulls would really want to see would be a recapture of this area near 38 or so to kind of retest the old support, which is now resistance, and break back through it. We're below all our moving averages. Everything's kind of trending downward. You could say maybe even a descending triangle type shape here. Increasingly anxious sellers who are looking for less and less at the highs, and buyers who were overwhelmed eventually and pushed to the downside is the conventional thinking behind what was happening here. Notice as well, another not very good sign is that we had our volume profile point of control, our area of heaviest trading, right here near about 43.50 or so, which we have resoundingly fallen below now. So that was a place where it seems like perhaps the bulls were trying to make a stand and were not successful there. But we are close to our -1 standard deviation channel, potential support near about 32.
This has been a story of broken volume profiles. This entire segment, basically, areas that could have been support but failed for a lot of these charts. Appreciate it, Rick. Thank you. Thanks, Jenny. Coming up, we're going to talk about the sell-off with stocks down 3% in the NASDAQ.
You don't seem too happy today, Anthony.
So far since we rang the bell, we'll take you through some of the action.
Damn, the NASDAQ, NDX is down $620. This surprised everybody with a nice little breakout here on the falling wedge. YouTube, this is called a falling wedge. Now, I personally don't trade the 5-minute very often, but I switched to it just because I saw this wedge pattern. And I can get out of this trade right now for $150, but I want to see if we can break this wedge. That'll be the 1, 2, 3. 1, 2, 3. So we're in the sweet spot of the trade right now. This is the sweetest it can get. It can break out, maybe pull back again, but if it breaks out now, it's in the sweet spot. Do you understand? Say yes. Yoko, do you understand? Say yes. You're not going to say yes? Someone say yes. Good job, Chris. Thanks for showing up. Oh gosh, I should have sold her at 510. I think I could have got out, but I know I could have got out at 5. It's the falling wedge. It's the falling wedge. Let's do it this time. We're getting pretty tight. Oh, yes. He says it's getting close. Tempted to have another bowl of this soup. It's so good. I can warm up. I got some broth. I'll drink it. I'm gonna double down. So far the bulls aren't showing up. So let's go through my watch list here. Keep an eye on my trade. Amazon's getting close. VIX is at 2689. What's going to deal with here with Fifi? Tesla at 238. Tesla cuts price target to 220. UBS cuts price target to 225. Maintains a sell rating. I got 228. So believe me over them. I don't think it's going to work. This is number 4. Back to 3. Pretty sharp little drop there for a second. That don't make sense. Am I in the right trade? Something ain't right here. Because the stock's going up and the price is going down. Wonder why does it do that? Unless it's slow. Strange. Hold on to your horses. There's 3 back to even. I burnt the bottom of my lip the other day and it blistered a little bit and it's already healed up. Was it Saturday or? I think it was Saturday when I cooked the steak. The butter was a little bit too hot. So I'm up $30 on these. I'm gonna still hold on to this. We're squeezing more. That getting a little tighter and tighter. So I think I got less than 5 minutes. There we go. Now break out of this here wedge. What do you think about that, gentlemen? I wasn't scared. Magnificent. A+ for not being scared. Jim, your balls are just outstanding. You have the biggest balls of them all. So right now I'm drinking broth from my stew. I got like 2 cups of it, and I drank one already yesterday. Blanket. Heck, this might be another $1,000 trade. Get some good Trump news. Ooh, 4. Okay, now I got to make a business decision. A little bit of courage here. $3.90 I can get out right now if I wanted to, easily. Who nailed it? Yoko. Say you're sorry. One day you'll be as good as me. Maybe one day. I pay attention. I was in it before you were. Are you still in it? I am. Because I think we're going to break the 9. $50%. Very good. Good job, Yoko. I'll give you 25% of the credit. If you're nice, I'll give you 30% of the credit. We would like for a breakout, please. Would that be nice to get a couple bucks out of this trade? If we break the 9, do you see where the next resistance is? Do you see where the next resistance is? I'll show it to you. Oh, God. How long am I going to have to deal with this? Always clean. This is Jim. May I help you?
Hello?
Yeah, did you hear me burp?
Good morning. My name is Irene.
Irene?
Now be eligible for improved Medicare coverage recently updated in your state. Just to confirm, you currently have Medicare Parts A and B, correct?
Nope.
Unfortunately, you are not eligible for the benefits we're offering.
Well, that ain't fair. I don't even know what Medicare, whatever it is, Part A and Part B is. Makes me sound like an old man. I'll wait until Obama. I'll wait until Trump fixes it. Yoko's proud of himself. Let's give Yoko a hand, everybody. $420, baby. Tweezer 3 minute. Oh. Tweezer 5 minute. $4. Come on, baby. I'm gonna take profit. I'm gonna put in a fake sell. I'm the master of this trade. $567.30. How about VWAP? We got to break this resistance where we are right now. God, I love that broth. It's a little tense there at the end. For some reason, I got this trend line on here right now. And it's hit it twice for the last 2 minutes. And we got an inverse head and shoulders. Tweezer bottom with 3 black whores on the 3 minute. Oh, there we go. I'm at 430 now. Did you get out of your position? Oh, God, that's so good. Mm. I'm making love to my beef broth.
Jim, I said professional.
Just if she knew I was making love to beef broth, she'd probably really go nuts. Having an issue on Twitter today. been a rough one. Apple's about to hit my support. Watch Apple. See if the market doesn't turn around when we hit 224.27. I was very impressed with that. That broth. I'm having internet connections again. That was OBS found up. Oh, God. Always clean. May I help you? This is Washboardjim, the sneaky snake trader. Hello, my name is Dora. I would like to know if you're eligible for Medicaid Part A and Part B. Dora, I adore you. I adore you. With more drama, Mama. Well. It's a real slow day today. Too bad I wasn't getting my car worked on today. So Tesla, my next support is at 228.61. 228.61. Okay. What time is it? 10:20. God, it's gonna be a long day. I gotta see my accountant. I might go see him. Take a small break. Oh, I gotta deposit a check too. I might just do that, get that out of the way, instead of wait. Spy trying to create a rising wedge on the bottom. Can it get to the VWAP today? I think it can. These little rebounds are pretty strong. We got a tweezer bottom on the wicks on Apple. On the 1 hour. I'm going to share that. Gooey. One wild and crazy day. I'll be back. Oak. Break it. Break it. Can't see the thing. We broke to 63 now. This is a strawberry, banana, tablespoon of brown sugar, and almond milk shake. Break it. My name is Human. Yoko, you listen to that? My name is Human. Okay. I could probably listen to that, but I couldn't look at him. That's a pretty good shake. Spy was call was at $1, and now it's $1.33. Home Depot had a huge sell-off the other day. Elliott Wave forecast on Home Depot. I got 382.62 to break. I think I talked about this one in my video. IWM had a support this morning, that 123 on the 1 hour. I talked about this in the video. We definitely hit our support on the SPY. Well, 4 for 4 today. I don't know what to do now. It's kind of boring. We went below my support. I had 564.81. We hit 563.06. I wonder what CNBC's got to say. Probably negative.
Stock took a sharp dip lower when DeepSeek, you might remember, rattled the AI companies back in January. Street's going to watch for any signs of strength in the AI business, specifically AI revenues in tonight's results. Shares are down more than 22% since the November all-time highs.
You people sound shocked when something's overbought.
Let's turn to markets abroad. European markets are lower today with Germany.
It's still way overbought.
JP Morgan now joining Goldman Sachs by boosting its growth forecast. For the euro area, they say the revision is mostly driven by optimism in Germany over its plans to reform fiscal spending. But they also expect slightly stronger growth across the rest of the region. We're also watching Canada today as former central banker Mark Carney won the election to become the next prime minister.
Ooh.
He will replace Justin Trudeau, who announced his resignation in January. And turning to China, the CSI 300 and Hang Seng both lower today. That's as China's CPI came in negative for the first time in 13 months, a decline in food, tobacco, and alcohol prices weighing on that number. Also today, China's retaliatory tariffs on U.S. agriculture products go into effect. That includes 10% tariffs on soybeans, beef, and fruits, and 15% on chicken, corn, cotton, and wheat. A lot of global news today, a lot of it pertaining to that trade war we've been talking about.
Definitely has the globe's attention. Meantime, we're coming off a session lows here back to 56.50. Let's get post to post with Bob Bassani, see what's moving. Hey, Bob.
Oh, good to see you. We are just off the lows, and the problem is, of course, we're very much risk off because of economic uncertainty. A lot of tech stuff is 20% off where it was recently. Like ServiceNow just had a rough month here. I mean, this was $1,000 towards the end of February. There's 20% off, $800 right now. Speculative tech's been hit even harder. I call it smaller speculative tech. Shopify, for example. I mean, it was 125 at the end of February. There you go, look, 94. There's almost 25%. Off. Twilio, which does communication software and things like that, same thing. I mean, Twilio was 120 at the end of February, now $100. As you can see, the volumes on these have picked up in the last few weeks, so it's not just like a buyer strike. There's actually genuine selling going on. You can see this in Kathy Wood's fund, the ARC Innovation. Another good example.
It was only up 300%.
Towards the end of February. So they're, 49 now, just broke $50. There's 25% off. The same with Bitcoin, 20%. It was $100,000.
It's only 25% off a 300% increase.
Bitcoin ETFs that was so popular last year. See this volume? That's picking up. That's bigger than it normally has.
See, I don't
The
listen to
last
this crap.
2 days, maybe a week and a half, volume here has picked up as these come down. There's stuff that's holding up very well. Believe it or not, you can buy consumer staples in one group. This is
Stock could be up 500% and it pulled back 5% and they'd be in a panic mode. I remember this guy when the market was pulling back during Obama. When's it gonna stop? He got real mad. That was back in 2007 and 8.
problem is you get days where you close on the highs like you did like last Wednesday and last Friday, and then you open the next day.
See,
down.
this one's
That's
still
back
way
down.
up,
and that
way
kind of
too
messes
high.
with everybody's head. And the problem that's going on right now
We
is
had a
once you start
200%,
introducing a different equation,
300%
once you start
run in
talking slowdown, economic slowdown, or
a
heaven
very
forbid,
short
recession,
period
you
of
start throwing
time.
phrases around. You can't put a floor on the market easily when you're in the middle of it, and that's what causes all of this mind-bending confusion here about what we're doing here. Because now you have to figure out what the earnings are going to look like 6 months from now, what kind of economic slowdown you're going to have. You can't do it. It's hard to put a floor on the. And the president was making a comment this weekend saying it's not down that much, and he's right. Carl, the S&P is only down 8% from a high. We're not even in corrections territory, not even down 10%.
Exactly.
So you can see how it's playing with people's heads because they can't get their head around where the economy is going right now, and that's what causes all of this confusion and closing up on the high and then gap down the next
I'm not
day. Carl, back to
confused.
you.
See if we can get some of Friday's rally back. Bob Pisani. When we come back.
You're confused. The markets ran up too damn much in a short period of time. Okay? Too little. 8 months ago was $50. It ran all the way to 150. Too much, too fast.
This trade, the objective is the stock should trade to which that $4 premium will roll to zero. But if it doesn't and it does fall, you'd be assigned the shares at 75 if it falls below that, but your cost basis is $71. So effectively, if you're looking to basically buy the stock at a cheaper price and sell premium to take on that bet, this is certainly a trade you could consider.
All right, with our disruptor every day, George Sillis. Thank you for that. Appreciate a good look there at DocuSign. Coming up next, it's time for our 360 round. How about a preview of Oracle?
So here's another one. Docu they were just talking about. $48 9 months ago, and it ran all the way up to 107. So it's a 200 and some percent increase. Big old gap up here on earnings. Huge. 20 bucks. It should be right around 61 bucks right now. I'm thinking about SPX again. Snake breakout, pullback. I missed it. I was jacking. 11 bucks ago. I definitely see things different than these guys do. Like Beta. Beta's another one that's kind of overbought. Even where it is now, it's still overbought. They were pumping this thing at 745. It's going to go to $1,000. Where'd it come from? It's up 100% almost. In a year, less than a year. And stocks don't run like that. They're not supposed to in a way. To be normal. Google's the one I was watching. I had Google on my watch list. And it went below my support that I did on the video. So this could be a buy. It's down 40 bucks in the past month and a half. Microsoft shares platform faces strong medium-term tailwinds. I think I'm going to go run to the bank. Go see my account. Well, I'll go see my accountant after I get out of here. I'm going to go run to the bank, get that out of the way. Get some oxygen in my brain. Come back and do some more trading. Right now, I've got my average in almost, which is $1,000. I got the best momentum this morning right out of the gate. Kind of a low volume day. Let's go spy. Pay attention, Jim. You're not paying attention. Okay, well, I'm going to go to the bank, and I'll be right back. Tomorrow I got to go get my brakes done. I say we break 565, we go higher, Yoko, on SPY. Even.
That you may be buying here on this big dip that we've seen for tech. Quickly, Alonso.
Yeah, so look, there's a sea of red out there today, but today we're looking at Tesla. It's, at this point down 7-8%.
Quickly, Elijah.
Meta, we're looking at Google and Amazon today.
That's fast.
All right, and Danielle, what else do you like in tech?
I like Amazon and I like Broadcom. I like the way that
I said Amazon.
is sitting on the 200 simple. Amazon did break through that critical support zone. However, this is a stock that I'm continuing to add to my long-term portfolio. And I think that it has pretty major growth potential here. And eventually at some point when sentiment shifts, we're going to see Amazon fly back up to the upside.
Yeah, I saw an outperform rating from Wolf Research this morning. They have a target of 190 from 210 for
Amazon.
Oracle. And it's right now at 149.
It's now 57
so
degrees
we'll get those
outside.
numbers later today. And as you noted, the options market betting on about $14 swing. So we'll look for all of that. Alonso Munoz and Daniela Shea, thank you both for being with us. Thanks for being with us here on Trading 360. I'm Nicole Petalides. Download our free Schwab Network app. It's available in the Apple App Store. 24/7, schwabnetwork.com. I'll see you at 2 o'clock for the watch list. Please join me then. Fast Market is next.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds,
I will be
money
right
market
back.
funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Join me, Oliver Rennick, alongside Schwab Network's options experts as we explore the second derivative. Gamma On is a brand new limited series to take your trading skills to the next level. Subscribe to Schwab Network's YouTube channel now. Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage and insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 800 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Good afternoon, traders, and welcome to Fast Market here on the Schwab Network. I'm Tom White. We've got a great lineup for you today. We'll talk markets. They're deep in the red at session lows, and then we'll have some option strategies. We're going to cover Oracle, which is down over 25% from its all-time highs into their earnings, and Taiwan Semi, which is in bear market territory and is now below a key support level. And like Folio, we'll have sentiment data in Dick's Sporting Goods. The stock's off only about 6% so far this year into earnings tomorrow morning. Now let's take a look at those major indices, which, as I mentioned, are deep in the red on the sell-off today. S&P 500 down 2.1%. Dow Jones down nearly 500 points. NASDAQ 100 off 3%, over 3%, to lead to the downside in the small caps. Russell 2000 down 1.6% on the day. To help me break down this red across the board, let's bring in my co-host. That's Kevin Hanks. Kevin, give me your take here on the equity markets. It just feels like, you know, those rallies that they were selling last week, it just feels like there's nobody out there willing to stick their neck out and buy this market at this point. Kev, do we have you?
Yeah, good morning, Tom. Yeah, I think the markets are getting real thin here. And, yeah, I'm here.
Yeah. Go ahead.
I'm here.
You got it? Yep.
You got it? Okay, great. So, big percentage numbers down today.
Well, hey,
Am I good?
Yeah, we're going to come back to Kev in a minute. I think we got some troubles with his audio. Let's bring in our next guest. That's going to be Alex Coffey, senior equity contributor here on the network. Alex, same question to you. Right across the board, we're at session lows. The S&P 500 now down 8% from its all-time highs that we saw just a few weeks ago. Give me your take here. It just doesn't seem like anybody's out there willing to stick their neck out and buy anything.
Well, we've had a situation, I would say, Tom, over the last couple of weeks where it's been a battle. Now, the bears have been winning that battle, but on balance, you know, for every 100-point sell-off, there's been, at least one 100-point rally. And so we had one of those to close out the session on Friday. Gap down open yesterday when we opened at, the Sunday market open for futures. And it's been selling ever since for the most part. When you look at today, though, what makes today, and look, this is subject to change at any notice because, of course, we've seen a couple of these rallies kind of take hold towards the end of the day a handful of times last week. But today's really the first day that you're starting to see those signs that a little bit of capitulation has happened. Now, it's not fully there yet. It's not as obvious as it's been in the past. But you now have VIX at 26.5. That's getting pretty elevated. Once you start getting to the high 20s, unless you have true crash-like conditions, there tends to be sort of a ceiling in this area. One of the things I like to look at is the relationship of that volatility curve. Because typically, when you get to oversold conditions, what you see is really more short-term volatility starts to spike up and really become very elevated versus the rest of volatility. Is essentially the logic would be you're more scared about today, the next week, maybe next month, versus where you are maybe 3 months or 6 months or a year out. This is the first time we're starting to actually see some separation, but it's still minor. You have a 3-month volatility around 25. You have regular 1-month volatility around 26.5. That's not a huge gap, but it is starting to show signs of a gap. I would still argue that that's pretty flat, though. What you'd like to see, if you're looking for an oversold indication, is that really widens out. Right. What I've been watching as well is the dispersion relationship to volatility. So overall index level volatility versus sort of the average individual name that makes up the component of the S&P 500. You're not really seeing that narrow out as much as you were late last week. So that's still to be determined. As that approaches 1, so it'd be DSPX and VIX, that relationship approaches 1, you tend to get more oversold conditions, but you don't have as many occurrences to look back at over time. Volatility still remains to be seen. New lows barely today, so remains to be seen if you have that blow off in equity markets. To me, this still looks like a broad deleveraging in tech and doesn't look like it's over yet.
Yeah, I think that's part of the issue here. The NASDAQ 100 now down about 12% from its all-time highs through some key support levels. That RSI getting below the 30 level, so oversold on a technical basis. But you know what? Sometimes when you look at these markets, you start getting a little bit fearful, but it feels like downside or risk-off mentality continues to kind of snowball where, hey, now we've got people that are rotating out of specific sectors. Maybe they're not done. And then you start seeing, hey, maybe there's margin calls out there where some investors that had been using leverage have to start getting out of things. We still have 3 of the 11 major indices in positive territory today. Energy, consumer staples, and utilities at this point. So it's not completely broad-based, but it almost selling begets more selling in markets like this.
Yeah, well said. I think that there's another important piece to this too, which is it's on heavy volume. So this tension, this back and forth battle continues to wage on. But at some point, if the bears continue to win, those who've been buying on this way down may also join the sellers. And so at some point, we're coming from conditions where there wasn't a lot of shorts in the market. We're coming from a place where there was a little bit of a one-sided concentrated trade, particularly in some of these mega cap tech names, where if the buyers stop trying to pick a bottom and stop trying to, buy this dip, you could see that acceleration happen. But when that acceleration happens, if it happens, that's more of your indication that, at least on a short-term basis, you could be reaching something that's a little bit more tradable from a bottom standpoint. You don't really have, this might be a tradable bottom, but it's hard to see it being a V bottom in the way that things are trading now, where it's much more of a back and forth battle. And so as it stands right now, I would expect more of the same. But if you do really see a flush, you really do see volatility explode, perhaps you have a little bit more of an aggressive tradable bottom.
Yeah, maybe that VIX gets above the 30 level. But this doesn't feel like what we saw last August, at the beginning of August, and the beginning of September. Those quick V bottoms that rebounded exponentially over the next several weeks after we bottomed out. But let's bring in Kevin Hinks, my co-host here. Kevin, just give me your take here on the selling. It just feels like it's heavy, and rallies might get sold in this type of environment just because it feels like there's so much pressure to the downside here on the equity market.
Well, I think we're looking for some type of catalyst.
Yeah.
Is what we're looking for. Is CPI Wednesday, is that a new catalyst? If those numbers come in as expected, it's going to show all 4 metrics. Month-over-month headline, year-over-year headline, month-over-month core, and year-over-year core all lower. And I think that inflation is a key part of this going forward, because that's going to allow interest rates to come down quicker. Interest rates coming down quicker are going to make stocks more attractive quicker. So I think the earnings have been good. I think the key theme from this earnings season has been the guidance, which hasn't been poor, but it's been cautious. And the market at the valuations that it was just couldn't withstand cautious guidance. And so, Alex is right. Look at the consumer staple sectors of the S&P 500. Look at the right side of the heat map. It's doing fairly well, actually. This is a left side NASDAQ part of the S&P that is really weak and trying desperately to find some level of price discovery that makes it look attractive. Now, what could make it look attractive? Jerome Powell spoke on Friday. Suddenly everything seemed better. We're 9 days away from a Fed meeting. Jerome Powell's going to speak then, even though they're not expected to lower rates. So I think we're looking for some type of catalyst to stop. And frankly, members of the Trump administration that went on the Sunday morning talk shows didn't really talk anyone out of the downside. I think we're down today because of what they said on the Sunday morning talk shows. They just didn't work against, other than Howard Lutnick, who said, there's no way we're going into a recession. Everyone else was like, yeah, well, we're in a transition period. Didn't really tell us what transition period means, but all things considered, Tom, in a normal year, in a normal economy, you can have a 5 to 10% sell-off at any point in time for any reason. Now, the NASDAQ and S&P we're right in between that 5 and 10% level. Now, as you know, some of the Magnificent Seven names are down much more than that. You look at Cathie Wood's fund. You look at
I'm home, Jake
of
Paul.
Bitcoin.
Double
20%
bottom
off
on the SPY.
these.
Yoko.
So there's things that are down
Another wedge.
big off their recent highs. And like I said, some stocks like consumer staples, some others are hanging in there pretty well. So yeah, it's like big numbers some places, very small to good numbers in other places. It's just a volatile market, and the VIX at 26, almost 27, is confirming that.
Yep, you see here from the heat map, you're getting led by Exxon, Coca-Cola, Pepsi's up, those some staples in there, Alex. It doesn't give you good confirmation about what's going on in the overall market when it's getting led by then. But, Kevin makes a good point. We didn't have any 10% pullbacks throughout 2024. It's been like one of the longest stretches without a correction type of pullback in the S&P 500.
S&P. There definitely wasn't the NASDAQ in late July, early August.
Yeah, but I think that's
Premiums are so
is,
damn high.
The valuations were elevated, right? Now the administration's making some changes. Kevin mentioned the CPI data that comes out on Wednesday morning. That's going to be key because now you've got crude oil back below $67 a barrel. You've got the 10-year yield down at 4.21%.
SPY's on when to go.
Consumer confidence and sentiment data. So maybe those inflation numbers actually
There's
will
a
start
frickin'
coming
high.
down, and pretty rapidly.
Yeah, so there's a couple things that I want to add to this conversation.
You have to go farther out to get them cheaper. For example, that's March 21. Never mind. I was looking at the wrong date. I'm not going to say that. Those things are high. The 570s at 210. We got a wedge. These are the 570s, but they're expensive. I don't know. I'm just not much of a trading mood today. Major indices are trading lower in recession worries. Look at putt stocks. TLRY. 67 cents. No. Nope, I'm not in anything right now. I just got back from the bank. I want to be. I should have bought these here 570s at $2.07. I seen the wedge from far away. It's a double bottom falling wedge.
Things and shows no signs of weakness. So one of the good news is, and I have to be positive because you know why, Tom?
Why?
Because everyone is negative. You watch the morning shows, you watch the morning news, financial news, It is negative across the board. It's 98% negative. It's depressing
It
to
is.
listen to, because we have a 4.1 unemployment rate. We have inflation that is on its way down from high levels, and boy,
Him and
this
I are
market
thinking the
is
same.
They
Him and I are thinking the exact same thing. Now, we just had a huge drop here on the SPX, so watch this. I mean, that dropped $100 right there, that premium, just on that little bitty candle. The 5690s, and we've got another wedge breakout. We got two wedges, one here, breakout with three soldiers. Then we have another wedge right here. So I'll just look, get ready. Prepare ye in the name of the Lord. 770. $760. And these are different calls now. I got out of these here earlier. So these are the 90s. They're at 720. Okay, right about now. $7.10. Let's see what happens here. I'll type in two falling wedges. I'm in them now. Ooh. No. Dang, low. Okay. Let's see what you're made of, Jimmy. 590. $6.10 and $5.90. Butcher coming in. Might have to get back out then, huh? Randy? This is real risky. I agree with him though.
A lot, except they were 2%. They went up a full percent, which for them, that's pretty incredible growth. For them to go to 2 to 3% are pretty good, solid numbers for them in terms of growth. So Oracle is starting to slowly creep up in terms of cloud infrastructure. They're involved in the AI data centers. Their stuff matches up with Azure, Google Cloud, and AWS. It works well with them, so they're very compatible there. This is a company that I think is in the run for TikTok, although I don't know. I think Larry Ellison will probably back away from that. But this is a company doing all the right things, just at a slower level than some of the big names. But slowly but surely, their market share in cloud is creeping higher. It's something worth watching, Tom.
Yeah, it
Definitely
is.
trying to make some inroads against the big 3 or 4 in that space. Alex, when you take a look at this, they issued guidance on December 9th, their last earnings, 7 to 9% revenue growth for the third quarter. $1.48, they're expecting an EPS, $14.3 billion in revenue. I mean, pretty decent growth rates, but it's almost like this market's been setting up like, hey, you better beat EPS and revenue estimates and guide higher, or we're going to punish you, even though stocks have been punished.
Yeah, so first thing that I do when I'm looking at earnings in this environment is I kind of bucket them in kind of how many eyes are going to be on this particular name. Marvell maybe a little bit less than Broadcom and NVIDIA. Oracle a little bit closer to a Broadcom or NVIDIA in terms of the attention it's going to garner. So when I looked at those names, you haven't had volatility as high as it's been, and particularly in Oracle, in 3 years, essentially. This is the highest point of volatility basically at any point in the last 3 years. So to me, the first thing that came off in my head was, okay, looking at volatility selling strategies because you have an opportunity. Doesn't mean it's going to work. Doesn't mean that it's ultimately the right trade. But based off the information we have here, we have an extreme and implied volatility. So I looked at a selling strategy there. Now, what worked in both NVIDIA and Broadcom was the anticipation that these companies are executing well, but the market's just not in an environment to
New low.
Right.
And so if you think the same could apply to Oracle, I looked at selling an iron condor, basically using both sides of the market here to sell volatility. I do think that the risk is probably greater to the downside that this doesn't work in the event that they do disappoint. But you start to get down with the strikes that I've selected into an area where you could argue technically there's some support. And so what I looked at was this Friday's 133, 128 put vertical alongside the 167.5, 172.5 call vertical. So it's a $5 wide spread. Looking for at least $1.50, which would be 30 cents on the dollar. You can make 150 on 350 in risk, and your break-evens are way outside the expected move at 130, 150, and 169. What I would say my base case would be for this to work would be they have something that's positive. You see a rally like you did in Broadcom, like you did in NVIDIA, and by the time we open, it's closer to unchanged just because the market environment is selling rallies. And so if that is to play out, this is a strategy that could work out pretty nicely in a short amount of time, given it expires at the end of the week. Now, what's your risk? Your risk is what I laid out isn't what happens. Gaps down significantly to the downside. It has a huge run to the upside. The market turns around. It goes outside your strikes. But the nice thing is you have defined risk, and it would be something that would be a surprise that leads to that. So with this, risk defined, neutral strategy. And of course, if you don't have a neutral opinion, you could look to just do half this trade or adjust it to better fit your personal projections for what Oracle or any other name might do.
Yeah, 2 quarters ago, this stock gapped up pretty significantly on earnings. We've basically nearly filled that gap to the downside from prior to that earnings. But let's look at Alex's trade. March 14th, a weekly option, so just 4 days to expiration. Selling an iron condor, IV percentile rank, as Alex mentioned, at 3-year highs. It's 100% right now. So the highest level that we've seen in over 52 weeks. Selling the 167.5 strike call by the 172.5 strike call. Short $5
Back to
call
590.
vertical. And then on the put side, sell the 133 put by the 128 strike put. collecting roughly a credit of about $1.50. That's what you can make on this one. $350 in risk, and that's below 128 or above 172.5. Kevin, you got good probabilities on this one. You're not collecting maybe as much as some people like, but when you widen out the strikes like Alex has, it gives you some opportunity just because you've got better probabilities that it'll still be within a specific range.
See, there's two things you can do, guys. When you get elevated implied volatility, you either collect more premium or you go to that premium level that is in line with the thresholds, which is 30 cents per dollar, 150, and you widen out your strikes to make the probabilities higher. And that's what Alex did. You've got a $13 move times 2 is $26. Alex is $34 wide on his strikes. So he's got very high probabilities. The stock could move a standard deviation and he's still out inside his strikes. So there's the two things you can do. You can either get bigger premiums or widen out your strikes and make your percentages go higher. So a nice way to still get $1.50 on an iron condor, but really reduce your risk out in terms of the movement on the stock.
Yep, and those probabilities we talk about, the 133 strike that you sold on the puts, about 79.5%, or 79.5% that'll be out of the money at expiration, and that 167.5 strike call, about 86%. But Alex, when you look at this, you're expecting a vol collapse post earnings, which historically we typically see in names. But I think the key with the strategy like this, especially in this type of environment, is that you're risk defined. So hey, if you're neutral on this and you think it's going to be between that range that you mentioned, 169 on the upside and 130, 150 on the downside, that I'm comfortable with that, with the amount of risk that I've got if you think it's going to wind up trading between those two break evens.
Yeah, two things I would say is, first, I have no idea what's going to happen in work life. I'm using this example trade to set up conditions that I may be comfortable with given the market's dynamics. I think it's possible that we have a situation where implied volatility is so elevated that it's overstating what's going to happen in Oracle. That said, it's as high as it is for a reason. So you're always kind of pushing back on the market whenever you do anything with
too
this.
low.
But, the last thing I would say is, if you looked at how NVIDIA traded around its earnings, you look at how Broadcom traded around its earnings, the market presented an opportunity to cover those strategies relatively early the next day for nice winners. But in the case of NVIDIA, it took that opportunity away quickly. In the case of Broadcom, it's largely would still been there. But I would just say, don't be greedy. If you have an opportunity to take profits and it's at a number that you're comfortable with, this was an earnings trade. Once earnings are over, it's a different trade then. So
They're moving now.
Think about opening maybe a new strategy in Oracle, but the exact trade that I'm looking at,
Break out.
Earnings, and once earnings are over, I personally would probably think about taking this off if it had a possibility of being closed for a winner.
Yep, and that's what you expect. Positive time decay on this also. But at the same time, as Alex mentioned, this is risk defined. And in this type of environment, anything can happen. You just don't want a 2 or 3 standard deviation move
7:30
in the shares, because that hurts a neutral strategy like this. But you're taking advantage of the higher implied volatility. All right, thanks to Alex Coffey, senior equity contributor here on the network, helping us out with markets and Oracle. But coming up after the break, Landon Schwan from Likefolio, he's going to join us to take a look at sentiment data. And Dick's Sporting Goods, the retailer stock, has pulled back about 15% from its all-time highs in January into their earnings tomorrow morning. Stick around.
Huh. My heart's a little low today, 114 over 71. You do it one more time.
Today with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern.
There's 750.
Market on close. No place better than the Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Dear, 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 dear. Down, baby, got it. Woo!
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
8:30.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low
Yoko,
fees.
I sold one, kept one, and sold the other.
Carl.
You ought to be proud of me.
Schwab, a modern approach to wealth management.
Where's my chat room?
Welcome back to Fast Market here on the Schwab Network. It's time for cash tags. For that, let's bring in our next guest. That's going to be Landon Swan, co-founder of Likefolio. Welcome back to the show, Landon.
Thank you. Happy Monday.
Happy Monday to you too. Happy Monday to Dick's Sporting Goods investors. If you've been in the stock,
Yay. We could go to 200, 56.70 on the SPX. Magnificent, you can give me a good grade. Magnificent. Mrs. Joe Biden, would you please write an executive order for Washboardjim for a good grade? Magnificent. Thank you very much. I was worried. There goes 9. It'll be one of these where I go, shit. Nine. Oh, no. God, no. Oh, no. Let's left $600 on the table. Oh, God, I left 700 on the table. No, I didn't leave 700. I left 400. Oh, well. Oh, God. They went to a grand. Okay, we're back out again. Back to 710. Did you get out, Yoko? Are you listening? Oh. The answer is no. Daniel, did you get in? Rob? He's waiting for the end of the day. Rob says he's waiting for the end of the day price to catch up. Now, I've done 5 scalps today, and I'm up over $1,250. I'm taking my time, and I'm not giving up. There's many times where I should have gave up and sold them for a loss, but I did not. I didn't sell one for loss. I added on every trade. Just not holding my support levels or my resistance areas where I want it to break. My squeezes, it's just not holding them. So like this previous one right here, I got in it, it broke, then it pulled back, and then I added more, and I sold it. Same right here, same wedge, breaks out. I was up a little bit, then I was down a lot, and I added on, and I got out at the double top out of the wedge. See, these things are at 5. These are back down to where I got in at, and it dipped lower than that. So this is called inverse head and shoulders. If I was to jump in this trade, I'd probably jump in it, and it'd pull back to this previous resistance. But this would be the place on an average day where I'd want to go ahead and get in the trade. Do you understand? Say yes. Jim, you sound like a drill sergeant. Because I am. See? Didn't I tell you to pull back? I'd be down $50, $60, $80. If I got back in at 590, I'm going to try this blood pressure one more time. I didn't like where it was sitting. I'm going to have to go work out or something. That's one better. 118 over 69. It's now 11:42 a.m. Sell the rip, buy the dip. Go make me a cup of coffee. I'll be right back.
Paying roughly about an 870
Good.
debit on it we've got there. Now, the markets are wide in here, so price discovery may be warranted in this one when putting on trades in a name that has a wide bid-ask spread between the bid and the offer on these options. So keep that in mind. 870 debit, there's your risk, 870 bucks per spread. If you look at break-evens, you need the stock to go higher, right? You want it to go at or near the 230 level, but anything maybe above 215, 216, as you start going higher, you're going to be potentially profitable on this type of trade. You just need the move to go higher on this one, and on a percentage basis, it's not that high at this. Because it's a $20 wide bullish call diagonal, you're paying less than half the width of this call diagonal, and that's because of that vol dispersion that we talk about with diagonals, because the near-term options that you're selling on the 230 strike and the March 14th weekly options, 121% implied volatility on aggregate in that series. Buying in the March 21st monthly options, the 210 strike call, about a 78% implied volatility on aggregate. So that lowers the entry point and risk on this potential trade. You do have some time to risk on that short 230 call over the next 4 days also, so keep that in mind. But if you look at a call diagonal, if you think it's going higher, it does need to go higher to get into profitability on that, but not much on a percentage basis. All right, let's take a quick break. When we come back, we're going to take a look at Taiwan Semi. Chip manufacturer stock is in bear market territory after hitting all-time highs in January. Stick around.
Get ready. We've been getting little bounces out of these things. Now we're at a double bottom out of the wedge. We're coming down one more time. So I'm going to jump in these things again. This is the same one at 560.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week.
Washboardjim ends 560.
On all your streaming devices. Schwab Network is available anytime, anywhere, on any device for free. No place better than the Schwab Network.
Randy, have you made one trade today? Randy's scared. I don't blame him. We're at 620. Yabba dabba doobie. We are at 620. Scalp number 7. We want a breaky. Okay, we're going for a classic song right now to get this stock going. Has anybody ever gone, 550. Has anybody ever gone fishing before?
I've been thinking lately about the people I meet, the car wash on the corner and the hole in the street, the way my ankles hurt with shoes on my feet, and I'm wondering if I'm gonna see tomorrow. Father, forgive us for what we must do. You forgive us, we'll forgive you. We'll forgive each other till we
Both turn blue, whistling, fishing in the heaven.
I was in the army, but I never dug a trench. Used to bust my knuckles on a monkey wrench. I go to town and drink, give the girls a pinch, but I don't think they ever even notice me.
Father, forgive us for what we must do. You forgive us, we'll forgive you.
We'll
forgive each other till we both turn blue. Go whistling, fishing in the heaven.
Fish and whistle, whistle and fish. Eat everything that they put on your dish. And when we get through, we'll make a big wish that we never have to do this again. Oh, the very first job I said thank you and please. They made me scrub a parking lot down on my knees. Then I got fired for being scared of bees, and they only give me 50 cents an hour. Father,
Forgive us for what we must do.
you forgive
Us, we'll forgive you.
We'll forgive each other till we both turn blue. Then we'll whistle
And fishing in the heaven.
fish and whistle and fish. Eat everything
That you put on the dish.
and when we get through, we'll make a
Big wish. Never have to do this again. Again. Again.
Father, forgive us for what we must do. You forgive us, we'll forgive you. We'll forgive each other till we both turn blue. Then we'll whistle and go fishing in heaven. We'll whistle and go fishing in heaven. We'll whistle and go fishing in heaven.
Break it. Go whistling, fishing in heaven. by John Prine. George.
Just being sold to actually
I was
distinguish
up.
what price action is meaningful relative to the underlying business. But when it comes down to Taiwan Semiconductor, they've been diversifying globally now for years. And I think that there are always going to be some problems based upon the earthquake zones that they operate mainly in that region of the world. But nonetheless, I think it's going to be something they're going to overcome. But it may in fact encroach on some of their existing inventory.
It's encroaching on me right now.
Quarter, and that might create that setback. But again, it's tough to tell if that setback is being priced in right now, or essentially, what's happening now is just an overall, sell first, ask questions.
There's
later kind of
$630.
environment that we're in.
That's $80
But
bucks.
Irrespective, like I said, of that,
We want
this
it to
is
break the
time. I know
21.
It's such a difficult time for investors because it's so
Now I want you to see
emotional, but
something.
this is the time to
660.
really look at companies
There's
that are
$100
being,
bucks.
overshooting to the downside and oversold.
Now, we have a head and shoulders right here. You got the left shoulder, the head, and the right shoulder at the 63. So you have two confirmations to maybe exit the trade. Do you understand? Yes, I understand. Another A+ trade. Seven for 7 today. Seven for 7. Truly answer me, Father, forgive me for what I must do. You forgive me, and I'll forgive you. I'll forgive each other till we both turn blue. Go whistling, fishing into heaven. Whistling, fishing into heaven. I know you love me singing, Yoko. I'm a rock star. It's the best. I am the best. There's me at Chicks Beach, West Virginia, live. Them speakers all amped up to my washboard. Here we go again. We're going to trade number 7 and number 8. These things now are at 510. I think we can go down more. Do you see what I see, Jim? I'll show you what I see. Do you see what I see, little one? It's called a 1-2 freebie. Right now I'm at 1400. Uh-oh, we went below support. There it is. Nope, we're still above it. We are still above it. See where the body of the candle is on the trend line? I'm using the bodies. The body here. 1, 2 bits, and a freebie. You go in small, and then if it dips on you, you add another one. But I ain't got in yet. Because I don't know. I'm going to go make a cup of coffee and then come back. I'd like to be comfortable. If I'm not comfortable, I've learned that I should never take a trade. Like I feel like I need a fart. So if I get to fart out, I'll be comfortable. Oh, I'm comfortable. Jim, you're so funny. Who thinks I'm funny in the room? MJ Trader, am I funny? Say yes. This room is not for free speech. Say what I tell you to say. Oh, glad I didn't take it, see? I wasn't comfortable. I just had a successful trade. Why would I want to ruin it? Now they're cheap. $4.30. Yeah. That was nice. $4.30. There they are again. Trade number 8. I'll go into the kitchen, make my coffee, and this thing better be back when I get back. Danger, Will Robinson, danger. New low. You can do it. Hmm. Do 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 do. $370. Take it. I'm $370. Okay. Oops. $430 and $370. Might not be a smart move, but we'll see. Not as confident with this one. It's number 8. Well, this ain't working. Where's the phone? Well, my taxes get filed today. My business, I'm getting a little bit of money back. My personal, I have to pay a lot. And tonight I win the Powerball. Man. Well, that fucked me. The market's definitely bearish. I'm still in them. I just got 2 of them. I'll probably end up adding 4 more. Maybe 6. Or even 8. Definitely 4. Got $800 in the trade. Ooh, that really knocked down the dot. That dipped too much. Take off my shoes. Bounce, baby. My timing's been way off today. It doesn't hold my supports. I mean, I should wait 20. I mean, on every one of them. No possibility of running back up here. 56.38. I got to break the 21 and I got to get up to the 63. These are EMAs. 9, 21, and 63, and then the 200 to SMA. I try to make it as simple as I can, the strategy. I could have added right there, but I did not. That would have been a good ad. $2.90 maybe, or $3. Got 4 of them. I'd be even. At $3.50. Jenny.
Technicals. In Oracle, of course, I had our earnings out today after the close. We'll be right back.
I'll be right back. She says I'll be right back. $3.70. So I'm not looking that bad now. Meta down $31. $5.94. I mean that's a pretty number to see. $3.80. Give me back to $4.30. I'm gonna lay down on my bed for a second. Feel real tired.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close.
This afternoon would be margin calls. I posted a video yesterday.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
No politics, no noise, from bell to bell and beyond. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. It's now time for our Chartmaster segment. Joining us, of course, is our lead markets technician, Rick Ducat, to help us break down the technicals in 2 tech names, 2 big tech names at that. So we've Oracle with earnings out after the close. We also are talking Alphabet today, given all of its DOJ headlines. So we'll start off with Oracle here. A pretty substantial pullback from highs, but you'd be hard-pressed to find a name that hasn't at this point with Intel.
The word oracle kind of speaks to seeing into the future, you know. That would make trading too easy. It'd be boring. We don't want that.
It'd be cool today, but you're right.
Yeah, I mean, you know, if you saw this one coming, you might have done pretty well. But nevertheless here, you know, that's not the point of technical analysis. We're not trying to predict. We're just trying to identify the key areas. And we're kind of in between 2 of those areas right now. If you look back here, you can see that we had an earnings gap to the upside that gives us 2 fairly convenient points to keep an eye on. The beginning of the gap and the low point after the gap up. 143.30, 153.12 respectively. We are in the middle of that area. Our upper level of our gap also happens to line up almost exactly with our purple 252-day exponential moving average. So we have some pretty easy upside and downside points to keep an eye on for a potential breakout. RSI, our measure of momentum, moving lower as price continues to kind of break downward here. It is a worrying sign that we did break through not only this low, but the subsequent 2 tests of that same low recently here. So we broke through not only a repeatedly tested boundary, but also our longest term moving average that we follow here. So a technical breakdown happening. We'll have to see if it actually takes hold and materializes further to the downside, Jenny.
I mean, hopefully not further to the downside, but we have earnings. So now there's, I think, that major risk that things are turbulent even still ahead for Oracle. So as far as some levels we're watching, I mean, give us some takes for support and resistance.
So we already talked about 143 and 153. Generally speaking, those were our upside and downside price extreme boundaries. When we look at volume profile and standard deviation channels, this shows us different things. So for example, just a little bit below our lower boundary, we have not only our volume profile point of control, but also our -2 standard deviation channel. The point of control is the area of heaviest trading. So this was an important price level in the past, that there was a very large amount of trading activity at this level. So it seems like one that stands out to the downside. It also almost lines up with our -2 standard deviation channel, which is 1, 2 standard deviations below our blue linear regression line, which is our line of best fit. So an idea of fair value, we are at an almost more extreme point to the downside. That would be where you might expect to find potential support. So around 140 to the downside, around 153 to the upside. That's kind of the headline there, I guess.
Yeah, and down about 25.5% from highs, but still remaining at least well off of its lows here. So we're sort of setting up for an interesting report, I think, especially given the turbulence we saw on the back of AI-driven names last week with earnings. So with this in mind, maybe leading into a more bearish example trade here, considering the overall market weakness.
Yeah, this is a situation where we presented this last week, and sort of the idea being that good is just not being rewarded at the moment. And that's subject to change at any moment. But whenever you're putting an example trade on, you're somewhat embracing that uncertainty. We don't know what's going to happen. And so, Jenny, in this case, it's another bearish strategy. It's at the expected move based off the market maker move generated by the platform. And it's basically just asking the market to do something different than it's done for 2 weeks in order for this one not to work. It expires at the end of the week. It's selling a call vertical. It's the 160, 162.5 call vertical. Again, expiring at the end of the week. You collect the 65-cent credit. Means you can make $65 for every one of these spreads on $185 in risk, but a 3-to-1 risk reward. Break even is at 160.65. So if the market rewards Oracle because the numbers are good,
there we go,
and it
$4.
adjusts all the way through that, yeah, you have risk, but it's risk defined, so you're not going to get totally steamrolled. But at the same time, if it does what it's been doing, which is rallies even for good news, Broadcom, perfect example, are sold. Rallies
man, I should have added
for bad news are
that'd
really,
be up
really
real nice.
Well, all you're asking is, don't really care what happens as long as
That would be up real nice on that
Yeah,
trade.
and I think that's a good point, because also we have a bit more time. I know expiring Friday, so we have a bit more time, because again, we could see a pop on the back of earnings as we're still so early in the week, and then things could unravel by Friday. As we know, these trading weeks do tend to bring many different seasons of price activity. But now, looking at Alphabet here, this name also pulling back pretty substantially from
It
its
sucks. I
highs.
should have added.
Not the worst of the Mag 7, but definitely not the best, as we're down about 20% now from its 52-week high.
Yes, and I think the best thing you could say about this one today is that it hasn't broken through this support zone that we could identify. If we were to look back, we could see that we had this period here during the September, October months where we hit a bottom near about 161. Then, if you fast forward a little bit further in time, we had this low point here. This gives us not only our blue trend line, but also another important low point to keep an eye on. So that was about 164. You know, once again, moving forward in time, we can see that we broke through our trend line. We formed more of this rather steep, rather narrow falling wedge type shape here, from which we did break to the upside, as well as break above our purple 252-day exponential moving average. But it was not to be. It did not really take hold. Now we are retesting not only our old boundary of our wedge type shape, but also the previous low near about 164, as we have given up the purple 252-day EMA that we so recently tried to move above. Now we can see RSI as well, after the initial pop, is fading once again and approaching that oversold area. So beware if we start to move into our support zone between about 161 to 164 and RSI breaks into that oversold area once again, Jenny.
Okay, so last but not least, here we're assessing some levels as we move forward in Alphabet shares. Hopefully, again, seeing a degree of a recovery because the nosedive has felt pretty substantial. This name hasn't been like a massive seller on each session like Tesla today, for example, but the slow churn, or not slow, the pretty stark churn has still been definitely felt. So what are we watching for price going forward?
The supportive area that we mentioned earlier has some additional weight here. It's also the site of our point of control. Once again, the area of heaviest trading. This volume profile is not quite as starkly divided as our last one, but you can still see the clear areas right here near about 164, right here near about 175. Those are the near-term places of interest to consider. If we were to keep moving lower beyond our support zone, -2 standard deviation channel comes in near about 150, 850. That's our orange solid line there. To the upside, we've got our volume node and our -1 standard deviation channel, 172 to 175 or so for that upside potential resistance.
Okay, and Alphabet, of course, 2 days down, about 4 3/4%. So appreciate it, Rick, as always. Now we look at trading this name, of course, and again, for example purposes, leaning into a lot more of the same and a lot more of the just overall pessimism we're seeing in big tech right now.
And there's a belief, I think, Jenny, amongst traders in particular, that there needs to be an acceleration to the downside before this is over. We haven't quite got that yet. So say you're in that camp and you're looking for a big dramatic drawdown to kind of culminate the end of this current period of weakness, you could still see quite a bit more downside in a name like Alphabet. At the same time, there's already been quite a bit of downside in a name like Alphabet. So I wanted to do something that would benefit if things accelerate, but it doesn't risk a ton if it doesn't. And so it's buying the full calendar spread,
Google.
selling the March 21st expiration, buying the end of the month, March 28th expiration, and it centers around 150. Now 150 is a big round number, but it also is pretty much that range where we got to late July, early August of last year. There could be a relatively decent level of support at that point if it does ultimately get that far. And so that's the logic behind it. It's a 50-cent debit, so you're only risking $50 per spread. It's inherently a lower probability trade, as you need another 10% or so to the downside for this to get to that level, but it's one that would benefit in two ways. It's a positive volatility or Vega trade, Jenny, so if you do see volatility start to expand dramatically in the move to the downside, it can work to benefit this strategy as well. So looking for kind of a meltdown to culminate the end of this, and this is a strategy that would benefit if it goes to 150-ish. And it stops there.
And like you said, we have a bit more time with this one, but obviously we don't have earnings imminently, so we have some wiggle room here to work with when it comes to Alphabet. But coming up next, we will talk actually another one of Alphabet's Mag 7 peers, and that is Apple, which is taking it on the chin today alongside Big Tech. We are down now almost 6% on the session on the back of a negative update out of Siri and some concerns that are following their Apple Intelligence build-out.
Damn. Stocks just ain't doing good today. There's Tesla.
Empower your portfolio with the Schwab Network. Schwab.
Anthony, can I have a job? I want to work with Jenny and Nicole. And I forgot the blonde. She ain't been on here for a week or two. The one I really like. Well, Tesla's really took it apart. Oh, I'm gonna look at Guild. G-I-L-D. See, Guild broke out. Shocked me today. PLTR. Well, they were pumping the heck out of this stock. It's down $50. Always clean. Retail traders. Yeah, this is always clean. Retail traders. May I help you? Hello? God, man. I got the perfect answer now. Always clean. Retail traders. They leave me alone. This one here, remarkably, those recession fears grow. I heard, what's her name? Trish was saying that they're going to lay off 45,000 IRS workers. I don't believe that. I don't even think they hired that many. They were on a spending spree, I know that. I do janitorial work for them. And they used, like when they had their seminars, they'd ship you out to do like these little work sessions where they could do it on the internet. Just sit there, in the office and do it. But no, they get everybody together and they send one lady out to test the water. And I'm going, what the heck? They have a special lady that comes out and tests the water. I need to call up this one company. Speaking of companies, if I can remember their name. Yeah, this is Jim at the IRS building. We're supposed to get a sink fixed, and we're waiting for a part. You can call me back. I'm going to be out for a little bit tomorrow. 417 lost you. I can't remember my number. I'll call you back. More drama, mama. That's on the 5 minute. So let's look at the 1 minute. It's one of them days. I can't believe I've done as well as I've done today. Ooh, man, Apple's right at support. I could have bought a ton of them puts. Apple hit my support, but I don't know if it's going to hold or not. Unbelievable. That's what you are. Yeah, see it. That's just no. Really, I can't call that a fallen wedge, but that's what it is. That one guy say 225 was support on Tesla. Yep. UBS cut start to 225. Maintain sell rating. That's what you are. Randy, how's your ITM doing in this tragedy? Not very good. I don't think you have to say, to be honest, because you're always honest. What was that called again? What did I call it? RITM? I'm not doing too bad. Compared. It's at support 1159 right now. If that holds, you'll be fine. Uh-oh. This don't look good. What? RITM Property Trust announces pricing of a public offering? What the hell's wrong with them people? Huh. That was on the 26th. That's interesting. NVIDIA hit my support that Jimmy called. NVIDIA hit my support that I called earlier. NVIDIA. But I don't want to trade it. Oh, God. SPX. I know a lady that made almost $2,000 on the put on IWM. QQQ's below the 200 for the second day, or third day. 2 more hours and 10 minutes, a little more. Well, let's see if we can get another scalp in here on the SPX. And I move it up to 56.60. At 390. Now let's see if we can hold this support. Probably not. This one here is number 9. Number 9, number 9, number 9, number 9. So far, I'm 8 for 8. Unbelievable. That's what you are. We hit 370. Dang, gummit. Ugh. No. No. It might go down some more again. The TTM's telling me it is. This is a TTM chart.
States. This is becoming a U.S.-backed industry. And then with wind, 90% of the wind turbine is made.
Dow falls 800
only 5%
points.
is sourced from other places. batteries. Our batteries
And I said we'd recover.
are going to be sourced entirely out of the United States going forward. So this is an industry, $1 trillion industry that's becoming a U.S. industry that's relying on U.S. wind, U.S. solar, and it's helping to create significant capital investments in Republican districts. We're going to spend $120 billion as a company over the next 4 years. That's our expectation.
Who in the heck are you?
80% of that money is going to Republican states.
John Ketchum, Chair, CEO, and President of NextEra Energy, the biggest renewables producer and gas producer in the United States. John, really appreciate it. And Kelly, you know, all these things that John just talked about are topics that we're going to have with the United States Secretary of Energy, Chris Wright. He will join us exclusively here in about 15 minutes, right at the top of the 2 o'clock show. We're going to talk about all these issues because I know this, and I don't know a lot about politics, Kelly, but I do know whether you're on the red team or the blue team, everybody's on the green team. And I don't mean green energy, I mean money. So we're going to talk about all that coming up at the top of Power Lunch.
And I like your point about the shift in tone at that conference. It's not, you know, the oil and gas event that it used to be anymore by a long shot. Brian, we'll see you then. No. Thanks so much, Brian Sullivan.
Thanks.
Coming up, Oracle lower ahead of its earnings after the bell. The shares were at a 6-month low, believe it or not, and down more than 22% from its November record close. Here's another check at the market broadly as we are right around session lows.
Business guy.
Fresh ones, we'll call it. The Dow down 805 now. The Nasdaq down 4.25% for its worst
I'm at
day
440 now.
The 10-year yield still hovering right around 421, 422. We'll be right back after this.
Did I put this here in there? This trading room? If I did, I'll do it again. Did I? No, I did not. Yes, I did. We're at 440. Donald Trump, my favorite man of all times. What is it you like about Donald Trump, James? He's got a beautiful wife. What you are.
You're down 95%. Have you ever considered selling?
No, I can't. That's a... no.
You're down 95%. Have you ever considered selling?
No, I can't. That's a... no.
A reality. Welcome back. The Nasdaq having its worst day since 2022. The Mag 7 down 5.5%. Not helping sentiment on top of tariffs and a recession and everything else. A Chinese startup unveiling a new AI agent that some are calling China's next DeepSeek moment. Deirdre Bosa has more. Deirdre?
Hey, Kelly. So let me tell you about Manus. It was released last week by a Chinese company built
as a general AI agent that turns your thoughts into actions, basically promising to outperform OpenAI's deep research and have even broader capabilities. What followed the release was a lot of hype that has continued to today. Many calling it, as Kelly said, China's next DeepSeek moment. I've also heard the AI agent that we were promised. And so Manus, if it does live up to this hype, could provide more reason for investors to buy the China AI story and leave the US one behind amid all these threats of a recession. Now, just as DeepSeek introduced the China trade and hurt ours, showing that AI can be done on the cheap, Manus could underpin that momentum in an already tough market. As we pointed out before, the China and US AI trades, already they're going in opposite directions this year, as you can see from the chart on your screen. But with regards to Manus, skepticism is creeping in. It's a flashy debut, influencer-driven buzz, invitation-only access. By contrast, DeepSeek let its technology speak for itself. It was widely accessible, and it was open source, giving developers the ability to look behind the curtain, confirm its credibility themselves. Users on X, meanwhile, have said that they've encountered error messages, endless loops while testing Manus. Also unclear how it was developed and whether it uses its own AI model. For now, though, Kelly, you've got tariffs, huge ramps in CapEx, Apple's Siri delays, recession fears. That is all taking center stage. China making progress in the background, and this is indeed a very ugly mix as the AI trade unwinds here. And a note to leave it on. Deirdre, thanks, and thanks for watching The Exchange. Power Lunch picks things up next. Don't go anywhere.
Kemptown reaches 5 miles long. Breakout. Breakout. The Apple's bounced twice off that support of mine. Slash ES is down pretty good. Tesla has a new low. Well, I'd say we're in bear territory. Let me look on the... We're at the bottom of that support. Should have added right there at 330. Yeah, we're definitely in SPX.
Invesco.com.
That's right. We do have a market sell-off on this Monday. And
There's
welcome
Kelly.
to everybody. I am Brian Sullivan in Houston at the big CERAWeek Energy Conference.
And I'm Kelly Evans at CNBC headquarters, and we are looking, like Brian said, at another big market sell-off. 800 points for the Dow, in fact, we're pretty much at session lows. The The S&P is down 2 3/4%. The Nasdaq down 4 1/4 for its worst day since 2022. Dow's negative on the year. The Nasdaq's down 9%, and Tesla is one of the biggest losers today. All of these kind of growthy, high-flying momentum stocks. This time, it's down nearly 14% this afternoon. It's wiped out its post-election rally and then some. It's down 10% since the election, and from its $488 high, the stock has lost more than half its value. That high was on December 18th. It's lost about $800 billion in market cap. Meta is another big decliner. Remember that 20-day win streak? All the gains over that streak are gone. The stock is lower now than it was on Jan 17th when that winning stretch began. And Apple's also getting hit hard today. You heard Deirdre talking about that a moment ago.
Yeah.
On pace for its worst day in 2.5 years with a nearly 6% decline. Apple delayed its Siri AI upgrade, which was supposed to be a big driver of phone sales and utilization. And Bitcoin is below 80,000 once again, managing to hold on to some of its post-election bounce, at least for now, Brian.
All right, well, thank you very much, Kelly. Listen,
I like this Brian guy.
Secretary Christopher Wright making some headlines here at the CERAWeek conference after he slammed the Biden administration's climate policies, said that renewable energy cannot replace fully natural gas. Let's talk about that, tariffs, and a lot more. We have.
Well, now you say it.
Well,
he's out of office.
Secretary Wright, thank
Pussy.
you very much for joining us. A lot on the
He says it now when he's out of office. Why do you like?
part or
These
all
CEOs
of,
annoy
of
me.
the stock sell-off. Where do we stand with
They'll take all that free money in, then when you're gone, they'll backstab your ass.
Now, think of Trump's last term. He engaged on tariff dialogue really with his eye on how to make things better for Americans. Think of his words here. We want free and fair trade, reciprocal tariffs, and we want to stop the importation of fentanyl. There's just been an absolute human crisis. So he's a businessman who wants what's best for the American people. Right now, we're in the middle of what's going on, the scrum. I think the end result.
I agree with him there.
Well, I'm sure you have a lot of Canadian friends, right?
Rob.
Friends in Mexico as well. There's a lot of them from both countries walking around.
We're at
They
the
all
bottom of the
come to you, and
flag.
I'm sure to you and say, we're not the problem. 4.5 million barrels a day of imported Canadian crude oil are helping, not hurting. And they all wonder what's going on. Is there
Jimmy
any
added.
window or insight into why this has all happened?
Look, there's a huge concern about the trafficking of drugs. And I think we've got to work together. All three nations have to work diligently to reduce the flow of drugs. This is thousands, tens of thousands, maybe 100,000 needless loss of American lives. It's a problem in Canada and Mexico as well. So that's a huge issue, and I think it gets underplayed sometime. And the other is just to get free flow of goods both ways. There's a 250% tariff on American dairy farmers to sell into Canada. Like, that hurts Americans.
God.
So let's focus on what hopefully the end goal is.
How much?
Which is free and fair trade, reciprocal tariffs.
Is it possible that there are no tariffs?
That's probably possible. I think we could get to no tariffs or very low tariffs, but it's got to be reciprocal. It's got to be the countries working together to better the outcome for American citizens.
If I look back at Trump 1, 2016 to 2020, I see we added about 3 million barrels of oil production a day when the average price was, I think, in the mid-50s. So we added production at a time when oil prices were not sky high.
Yes.
But that wasn't 13 million barrels of oil a day like we are now, Chris. Is it possible to add more barrels at 66 bucks a barrel like we are right now?
Absolutely. Look, the easiest production to grow in the United States is natural gas and natural gas liquids. I think you're still seeing growth there at a pretty good clip. We can grow crude oil barrels as well. Key thing with President Trump is to lower the cost for American producers, lower the uncertainty for American producers, so that it's a better climate to invest. That lowers their cost of production. The break-even for American producers is going to be pushed down.
And of course, they just start folks, if you're hearing in the background, there's like somebody on a microphone right behind. Of course, it started right during this interview, so apologies for that. That said, do you feel like there's the tariffs and I hate to harp on it, they're not helping that. You're a CEO. How do we get more confidence? I don't think tariffs help with that.
Yeah, well, particularly uncertainty around tariffs. But this is, we're 50 days into the administration. The accomplishments in the first 50 days have been tremendous. 4 actions already on LNG exports.
Yep.
We're getting rid of nonsense across the board, but we're in the middle of negotiations for where things are going to go with tariffs. So that feels frightening and gripping right now, but this time will pass. Deals will be made, we'll get certainty, and we'll have a positive economic environment for Americans going forward.
You've talked about climate, and I know you just did a big talk with leaders in Africa.
Yes.
And you talked about something that not a lot of our viewers really understand, which is how much, while we have this beautiful energy situation in the United States, a lot of people cut firewood. Their children suffer all these household diseases because they're breathing in all this noxious garbage because they've got to produce wood fire to whatever. How do we get the rest of the world, and I primarily mean Europe, on board with the idea that the rest of the world just wants a little bit of what we have, which is the lights and the heat works, and we've actually brought down carbon emissions in the United States by increased use of gas. How do we get Europe? They still seem like they're not on board with that thinking.
Yeah, they've gone a long way down a road that I think was destined to lead to where they got, which is high energy prices, exporting of their industries outside. Germany, this industrial powerhouse, the United Kingdom, the birthplace of the Industrial Revolution. So, but I think you're seeing uncertainty in Europe. You're seeing citizens upset. You're seeing political upheaval. Making energy expensive and unreliable is a surefire way to lead to political uncertainty. I hope we see a turn in Europe. I believe we will see a turn in Europe. But I can certainly say we've seen a turn in the United States. Just a return to common sense.
Well, we're connected, though. I think the U.S. and Europe, because, you know, my producer here, Harry, and I, we've stood on LNG ships in Rotterdam saying this is an American cargo that's coming from Calcasieu Pass in Louisiana to Brunsbüttel, Germany. Here's what people don't realize. Russian gas exports, not pipeline gas, that's the Nord Stream's blown up, but LNG exports are at record
They definitely
highs.
put Dave.
Europe right now is buying record amounts of natural gas from Vladimir Putin.
Boom,
Doesn't
baby.
sound true, but it is. How do we stop that? Because I think and I hope that President Trump, like he said this weekend, wants to slow down Vladimir Putin's energy sales to the world, not accelerate them.
Absolutely. There actually are still pipeline gas imports from Russia into Europe too. The southern pipeline still remains. So yeah, I think Europe saw that huge mistake to bet so much of their energy future on a very uncertain supplier that's become a significant adversary. I think the answer to a lot of this is make sure your energy suppliers are your allies and they're strong and they're reliable. So the rapid ramp up of U.S. LNG exports into Europe have taken about half of the gas that was displaced from Russia from the United States. Yeah. Norway's ramped up and some other sources as well. But that's what the United States is all about. We're going to grow our energy production, grow our LNG exports, grow our trade, grow our connection with Europe. I think this is a stable, secure supply, not only economically good for the U.S. and Europe, but it's good for world peace. It's good for stability. That's a lot of this administration. Grow American energy exports to our allies.
That's critical, and we talked about, you know, the way they say, well, if you want to starve Russia of money for war, you cut off their energy exports. People have said, you know, Russia is a gas station with nuclear bombs. So what
Neither get out now even.
About that? How do we approach, as the energy secretary, how do you approach Russia sanctions? They're under sanction now, but they're still selling a lot of oil around the world because they're using these sort of unregistered ships and doing all this stuff.
What are you in, Rob?
Level of sanctions on Russia and Iran, and maybe a little bit on Venezuela, that would not destroy Europe, but would also benefit the United States of America.
Yeah, of course, that ultimate call is up to the president. I'm highly confident in his leadership. Of course, I'm in dialogue with him about the trade-offs here. But you mentioned Iran as well. The president last go-round put tight sanctions on Iran, enforced those sanctions, drove down Iranian oil exports to very insignificant amount. It starved that regime's ability to fund terrorist organizations and foment trouble.
There, oh gosh, 390.
Sanctions, they just stopped enforcing them.
440.
Cash, and we've seen what's happened with the Houthis,
Okay.
Hezbollah.
Okay, panic attack.
You know, you don't want your allies wealthy and able to evade sanctions.
Out at 5.
And bold leader, and he will make the decisions. The screws are turned on Iran again. Venezuela. This is leverage he can apply to drive towards peace and
Number 9.
outcomes for the United States.
Yeah, we just saw the
Number 9.
cancellation or pending cancellation of export supplies from Venezuela. Chevron's probably not super happy about that. We're going to see where that goes. So, do you think the U.S. then, Mr. Secretary, can make up for if we really hit Iran and Russia? Okay, because to your point, Iran's foreign currency reserves crashed, and now they've come back as their sales of oil have gone back up around the world. If we really push them.
Never found a four-leaf clover, bring this luck to me. Rabbit shooting no lucky star, no magic wishing tree. Well, I got lucky, yes, I got lucky when I traded you. Ooh, got no rainbow around my shoulder, no horseshoe on my door. But I got you to hold me tight. Who could ask for more? Well, I got lucky. I got lucky when I traded you. All this rolling around with only fingers crossed. I'm afraid the love I found just might get lost. So won't you tell me that you love me? Let it make my day. Yeah, I know that my good luck is really here to stay. Oh, I got lucky. Yes, I got lucky when I traded you. I always walk around with all my fingers crossed. I'm afraid the love I found just might get lost. So won't you tell me that you love me? Let's make my day. Then I'll know my good luck is really here to stay. I got lucky. I got lucky when I traded you. I got lucky. I got lucky when I traded you. That made my day. What you think about that, Rob? Woo! Chris loves it when I sing. You know who Elvis Presley is, don't you? He's my stepdaddy. You were muted. What? That was nice. That was really nice. I couldn't believe it. I said, seen that big candle come in. I said, $5. It went higher than that. I sold it in heat. Once it hit that 63, I was out like a rocket. Because we hit the 63 here, we hit the 63 here, and we hit the 63 there, and boom, baby. Thank you, Kelly. She reminds me of a little Tom girl. Probably was when she was young.
To one of the most bearish guests we have.
She's probably one of the best ones on here, too. When it comes to talking about the market.
Obligations, that was up 49% last
Man, that
year
was good.
to $97 billion, but that
I didn't know what I was going to do.
From the previous quarter where it was at $100 billion on that. But, you know, this is all going to be, I think, about guidance. I think the top and bottom line numbers aren't
smart to add on.
much, unless it's a severe beat. It's all going to be about guidance moving forward. They are making some inroads in the cloud side of their business, starting to pick up growth there. They're expecting anywhere near about 25% growth rate for their cloud side of their business as they try to catch up to the big three in that space. But we did see some bullish activity in here, and not like a massive trade, but I just think it stuck out to me. Maybe somebody trying.
Magnificent. You got to put a poll in the room saying, are we in favor of Jim singing? Yes or no? Or does Jim have a great voice? Yes or no? Are you there? No. That didn't even get the poll out yet. You had to comment?
You found.
Yeah, it's pretty surprising. This legacy tech company still up about 5-6% so far in 2025. So it's outperformed in the tech sector, down over 1% today, but still up about 28% from year ago levels. So it's had a nice run over the last year as the need for networking supplies as they build
I
up
got
data
lucky.
centers is starting to ramp up recently. Last quarter, they beat on EPS, they beat on revenue, they raised fiscal year 2025 EPS and revenue estimates. It was a good quarter for Cisco last quarter.
Cisco
they also
kid.
raised their repurchase program by about $15 billion, and they raised their dividend 3%. So things going well for this legacy tech players. Citigroup at the end of February raised their price target up to $73 and keeps a buy rating on the shares. So things going well compared to the other tech names in this space. But we did see some unusual option activity to the downside. Maybe a trader out there thinking that, hey, I got to hedge my long stock or take a speculative position to the downside. This was out in the September 55 strike puts. So this has about 193 days in it. So this trader's given himself plenty of duration for this stock to maybe start to crater to the downside. But he bought 10,000 of the September 55 strike puts, paid an average debit of $1.43 on those. So the break even of 53.57 over the next 193 days. That's about 14% below the current share price. So if Cisco catches up with the rest of the tech space and starts going down, that's how this trader's going to make money, but he needs a pretty big move to the downside.
Yeah, at least he has some time for it, to your point, so he can sleep tonight. But, you know, we will see. And this, as the S&P and the Nasdaq are below the 50-day, below the 200-day, but a name like Johnson & Johnson, has been running up. I mean, a completely different picture. I mean, this has gone from $140 to almost $170 in a short period of time. So some
I told you to be careful that the market was up too much already.
Yeah, I think a lot of these sectors that have been beaten down in 2024 are starting to see a little bit of a resurgence as we've seen that rotation out of big tech, and I think they're going into safety names. You look at today, staples are up, energy's up a little bit, healthcare just down a little bit, but you're starting to see some push into some of the healthcare names like Johnson.
Okay, we're getting ready for an inverse head and shoulders again.
Maybe a little bit of a safety play here. It's upset.
Prepare ye. So how do you put it? How do you do the poll thing? Get ready. We have an inverse head and shoulders down here at $5,605. Well, I'm glad I wasn't in the kitchen when that happened. I'd have come back crying. It puts me over my, almost 100% over my limit, my average. Oh, he did get it up. Well, I'm definitely going to put okay. I got the first vote in. I don't know who voted no, don't I? Well, whatever the results are, I will abide by them. It'll be hard. I might slip up every great once in a while, but spank. And I'll leave it in there until the end of the day, or at least till power hour. You got to get your vote in before power hour. You can take the vote back if you like, if it's a no, but not if it's a yes.
Welcome back to the watch list. I'm Nicole Petalides, live on the floor of the New
Okay,
York
get
Stock
ready.
Exchange. The Nasdaq is having its worst day since September of 2022. This is the worst day selling off. Last week was the worst week of the year, and you're seeing the S&P right now down, what, 2.7%. So what's going on here? Let's get right to Phil Blancato.
Get ready.
Chief market strategist at Oatsake. Well, good to see you. I haven't seen you in a long time. Glad you're here. Great day to be here.
Right about now.
You tell me.
You look at a market like
Right
this,
now.
and certainly there is this concern about how bad could this get?
How bad can it
And
get?
You touched on it right out of the gates here. I look at the Nasdaq, what it's doing today, and I'm just not in the camp that it's that bad. I mean, you even heard the Fed chairman come
I'm
out
not
and
in the
talk
camp
about
either.
that. When you look at what happened in way back when the market burst in the 2000 era, when we wiped out $5 trillion off the Nasdaq, this is not that time period. Then we used to have companies with wild PE ratios. They really didn't have one because there was no E in the P. But today you're looking at a company like NVIDIA that's obviously a global leader, tremendous earnings growth, tremendous revenue growth, and you're finally getting it at a discount. So I just think things are very different today than at any time, even comparably to where we were back when. If the labor market holds on like
Number
it is,
11.
and you saw earnings season coming quite strong, the tariff headline and the price to stocks are causing this because stocks were not cheap, but this is not a reason to panic. It's clearly not at all.
I see the book in the back that says "Don't panic."
Don't panic.
That's sort of where you are right now. It's interesting because at that time, and we were here. I was here at that time. We talked about the path to profitability, and you had a lot of these companies that really didn't have profitability at that time, didn't have the same fundamentals and revenue on the books. So you're not. So you're saying it's not apples to apples.
We need a big bounce, please.
Back then.
We have a double bottom.
Exactly. I mean, come on, for gosh sakes, look at Microsoft, look at Apple, look at Meta's earnings, look at Google's earnings. These are, think about it. When we talk about American exceptionalism, it's the diversity of the American economy, it's the strength of our economy and the size. But really, it comes down to what we've done with these 7 names in the last few years have changed the narrative of the globe. We would have never gotten through the pandemic without these names. We were in a scenario today where these names are driving global change. And granted, they got expensive, so we're pulling back here. It's really hard to make a $3 trillion company a $6 trillion company. There are competitors for names like Tesla and so many other things in the space. But at the end of the day, you got to realize today we don't have tech billionaires taking money out of a startup idea like we did then. We don't have a scenario where these companies don't have tremendous. Look at their margins. Look at the net margin on NVIDIA. Double the market in most cases. So I think this is your chance, everybody. Please listen. You're finally getting some good names on sale. You had a chance to buy NVIDIA
Exactly.
in a long, long time. There's a blip here and there, but you're getting an opportunity to enter quality names on sale. The old narrative of sell when people are greedy and buy when they're fearful is staring you in the face. And by the way, if you haven't taken profits from those names, you still can do that too.
Right, understood. So this is it. This is your moment. Mag 7 names, many of which are down at least 10%. We were talking about Tesla down probably 40 or 50% off its highs. But I just saw this some short time ago. We liked Apple, Microsoft, Amazon, Tesla. Wanted it in a barbell approach, but said, hey,
Barbell.
I'm in. I'm in when I see the S&P.
I don't think I'll ever understand what that means.
These averages, 200-day moving averages, that this is the buying opportunity. You brought us some names today, names like JP Morgan, Entergy, and also Costco. Tell me about those names.
Well, I know a lot of folks.
You may take the
nerds,
trade.
and maybe they still own NVIDIA at 20, and it's trading at 110 last I looked. So, okay, let's say you don't want to be in those names because of the volatility. Let's take some profits. Nothing wrong with that. What's happening this year is diversification is working. Right now, the biggest pressure is on those tech names.
Break it. We got to break the 21 and hit the 63.
So nothing wrong with doing that classic diversification model, which is buy the dividend. Dividends help smooth off the bottom of when markets are volatile. So you look at a JP Morgan, for example, you're finally getting a bellwether bank, arguably the best bank in the world today. Global footprint, emerging in Europe, emerging in Asia, a company that's done a lot right. As their net interest margins go down, their lending rates.
Randy, make sure you vote.
It's a company that I think you're getting at a very fair rate. You're looking at 7 to 8% earnings growth for the next 2 years coming, a decent dividend at 2%. You're buying a steady Eddie payer in your portfolio. The next one is an interesting name. When I think about what I want to do in energy, Entergy Corp is a name that you hear so much buzz around the electrification of America. What is a company with 1/5 of its energy production coming out of nuclear?
See, if you vote yes, I make excellent calls.
consumers under pressure yet. But if this continues,
We're at
to be some
260.
bit of stagflation where prices stay higher, example eggs, and wages continue to trend down a bit, consumers going to get a little less hesitant. You're already seeing some of that noise in leisure. You're seeing more goods buying right now than you are leisure. What wins in that kind of bit slower growth environment because of the tariff headlines and maybe higher costs? Costco. You're getting it a little bit cheaper.
Costco.
A great name, now a global footprint. But really, their online user base,
I got lucky.
50 million online users, is an expansionary area where we get lots of new revenue from. I think that's a name you could add, set it, forget it, and not have to worry about it for many years to come.
All right, JP Morgan Energy and Costco. You know, it's also interesting as back then we were talking about .com this, .com that. It became the .com bubble as we know it. And now it's AI this and AI that. And while we didn't necessarily understand the .com bubble when it was happening, we don't always understand AI either. You know, how these companies will monetize this, etc. Is AI revolutionary for these companies? Do you think that happens quickly? And then I do want to ask you about some of the economic reports this week. So just a quick thought on the AI.
You know, when we look at AI, I'll keep it as simple as possible. While NVIDIA is an interesting name to think about, it's that everything around the CapEx spending, how much companies are going to spend on AI, and it's supposed to accelerate to where every single company in the United States and to a great degree globally is going to spend between 15 to 25% of their CapEx budget, money they spend on growing their company, on AI. And the reason why you see it everywhere today is because it's about productivity. American productivity is up the last year and a half. And it's not totally because of AI, it's partially. But I think whether it's when you go into a McDonald's and you're touching on a kiosk there to order your food, so one less body in there, greater efficiency.
I will make a guarantee, though. If I keep singing, it won't be every single day. It'll only be when I do a real good trade. I do about 4 or 5 times a day. Sure you don't want to take that vote back? That no vote?
The next phase of that is AI. So for me, if you don't want to be in those big tech names, at least go into the supply chain around it. Who's making the chip? Who's installing the software? What companies are benefiting from it from a productivity standpoint? That to me, there is no bust in AI. It's the beginning of a generational change.
Whoa.
And I think we've got to grab onto it because it's going to change the way we work and live over the next 10 years.
And just when we talk about the CPI and PPI, I can't believe that we're back to the CPI and PPI. I feel like they just came, but you know, here we are again. I mean, a quick thought.
Well, you know what's funny about both of those?
I didn't trade one put today, and I'm ashamed. I didn't think it was going to be like
I'm
this.
57 years old. When I grew up at
So I bought every dip. And I've had to average down. I made over $2,000. But if I would have went straight puts, I don't go on. I could have made probably 5x of that. A good $10,000 a day. I thought we were going to have a good week. We were going to consolidate, but I was way off. That's what I said in the video. That we would consolidate and go right and then bounce up a little bit off the 200, and we didn't do it. In fact, we went below it. It's not looking good at all. I'm not had a bad day though. I mean, it's better 2x. Nothing's held. Every call I've made has not held. I mean, it's dipped. Almost every one of them. I think every one of them. Like this one here, I should have sold at 260. But I wanted to hit that 200. I wanted to hit that 63 and get out, and I just waited. Now I got a 1, 2, 3 down here. And it's a wedge. It could drop a little bit more. We'll find out here shortly. Have a different change of attitude, Randy. Come in here thinking you can kick its ass like you did that post office mailman. I feel real good today. I still feel good, but I'm really disappointed I didn't trade puts. I mean, I do it I'm just a bull. We're both bulls. No matter how you come in here, I'm just programmed that way. So I might have to get stopped out on this one. I said it before, and it knife, and then grab them real cheap and buy a bunch of them. Right now, I just got 5 of these at $2.10. If it gets cheap, like $1, $1.25, I might get 10. I looked at the puts this morning, the 5600s, and I looked at another one too. I looked at the 5590s. They were way out of the money, but they had good volume above all the other ones. I should have bought them. Then at $2, the 590s, I was looking at $2, and now they're $7.20. And the 5600s, I was looking at them at $3, and they're now at $11.20 with a 1380 high. You got free eggs at Kroger? Really? Well, I'm hearing about all these tariffs. Some of them are taking 250% markup on tariffs on us. They're mad because they got to pay for their own wars. Trump's bashing their green energy scam. Okay, here we go. But I don't know. I'm going to try not to get too caught up in that hate. Because I hated what was going on before. But I felt like I was the only one that didn't like it. Okay, here we come. These things are way out of the money. I don't know if they're going to recover. $125. We'll see. Then I have to just put a stop to it. I waited for 125. Got 15 contracts at 125, so I gotta. or 10. One, come on, give me a good break here. 154 average. There's 150. I'm even almost. You know what to do. Break it. Crazy robot, really. Break it. YouTube, you can vote too. Play my ukulele? I'd do that. I haven't played it in a long time. Break. If we get to the 63, I bet you it goes up to $2. Right now we're bearish. We'll go through the watch list while I watch this thing break. Anybody get in at 120? 125? If you did, I think we're going to break to 21. It's having a hard time. No.
big, fewer than half. Okay, so that's 40%. That's a pretty.
Oh, we're talking about the SPX?
Not, adding risk. They're not, risk averse. They're not doing anything. Interesting.
Well, I think it comes down to your time horizon, Nicole, and I think that's important. If you'll definitely see more activity from a trader base than you will from the investors, and
oh, we're down $170. God.
2023 and 2024, you had 20% year-over-year growth in both of those years in terms of the market, and even though this feels really like a pretty severe pullback right now, I mean, we're basically 10% off the highs that we saw a couple weeks ago. It just happened so quickly. I think that's what caught people by surprise a little bit, caught them a little off guard.
Not me.
I will note this. One of the things that kind of stood out to me in the trader sentiment report was the idea that about 25% of the people that responded said, we're starting to use options now as a way to hedge. And when we look at the options activity that we've seen overall in the market, in 2024, I think an average day was around 51, 52 million contracts. That number's already up over 70 million contracts a day just in these last couple of weeks. You're really starting to see that activity kind of pick up. And it's been more so on the hedging side. That's absolutely been where we've seen it. It's starting to get to the area now where I will say this, the hedging activity is so skewed to the bearish side that you might start to see some of that start to pull back a little bit. And if that's the case, and you start to see some call buying, that could be something that maybe gives this market a little bit of a short-term bottom and an opportunity to kind of pull back a little and move back up a little bit.
All right, Joe Mazzola, because what a wild week we're having. And
Market's
it's
down
just
10%.
the beginning,
Monday.
Joe Mazzola.
Yeah.
I know. Okay, here we go. Joe Mazzola, head trading and derivative strategist at Charles Schwab. Still ahead, we bring in our panel to discuss Bitcoin after we've seen some recent weakness. Let's find out why.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Yes.
Carl?
We got 10 minutes to power hour.
Schwab, a modern approach to wealth management.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Hey, Dad, I have a question for you.
Sure.
When did
Market's
Granddad
down
first
only
start
10%.
Granddad had an account
From
with
the
Schwab
top.
before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations. Someday it'll be their turn.
Welcome back to the watch list. Of course, it was the first ever summit, a crypto summit in Washington at the White House. And we've watched Bitcoin taking center stage. And now there's been a shift in the mindset in America for about the digital assets and the future there. Let's talk about this overall. And we speak now with Natalie Burnell and Cooper Scanlon. Thank you both for being with us. So, Cooper, I'll start with you. Some of your thoughts about what's going on in the world of Bitcoin? Because when we heard the announcement that it was going into the U.S. Sovereign Wealth Reserve, it took off only to see it sell off again. Is that what you anticipated?
Thanks for having us, Nicole. Great to see you, Natalie. From the Bitcoin side, right now we're seeing tremendous interest from institutions in recognizing this as an asset class, as well as from the digital assets summit, Bitcoin being at the centerfold here as the leading crypto asset. I think that with the dip in consumer confidence recently, and with short-term economic realities becoming more apparent compared to long-term excitement for the space, it's only natural that we see a bit of a correction within the market, but I think that long-term sentiment is still incredibly high, higher than it's ever been.
Yep,
Long-term,
I agree.
higher than it's ever been. Natalie Brunell, you have your upcoming book, Bitcoin is for Everyone. Why is that? Because your long-term view is the same?
Oh, absolutely. I mean, I see Bitcoin as ethical money, and the United States, I think, needs to accumulate it, but I'm really passionate about educating the average person to accumulate it for themselves as a savings technology. I think
You got a B right back there.
Bitcoin, and as we see now, nations will have strategic Bitcoin reserves. That was what was so exciting about last week. I know it's not reflected in the price, but the fact that a global superpower, the United States, basically is saying that Bitcoin is a legitimate macro asset. It's a neutral reserve asset, and it should be held because it has that 21 million finite supply cap. That is a massive signal to the rest of the world. But again, it's just not priced in yet, given all of the things that are happening on the macro and geopolitical level.
There are some folks who agree with you, right, that the government's interest in this brings some validation to these digital assets. At the same time, is it as ethical when you have big governments buying big portions of the small 21 million Bitcoin, right? You know, will they be able to, while they won't be able to mine for more, they may be able to somehow manipulate it or move it? Or is that something people talk about, Natalie, or not really?
No, I mean, the government can accumulate it in the same way that a person can. You have to expend energy resources, or you have to purchase Bitcoin in order to have it. You can't print it out of thin air, and that's the massive shift that we're going to see. We have a financial system right now that's controlled by bureaucrats, where they change the value of money every single day, and it has so much of an impact on the market. We really don't have free market capitalism. I think we have more of corporatism or crony capitalism, because there's so much government intervention with that core unit at the base layer, which is the dollar, which is our fiat currencies. And so if we remove government and politics from money, I think we would actually have a much more productive and prosperous society.
Exactly.
Yeah, we actually spoke with John Sally, and he was a director. He was an executive producer.
She's 100% right.
Bitcoin, which was a very interesting documentary, and says a lot of what you're saying here. Cooper, what are your thoughts about this? Because you're looking at this as, look, it's nice to have America involved. In fact, it protects America in some ways when they get more involved, and protects the dollar. Is that right?
Yeah, absolutely. The biggest takeaway for me from the Digital Asset Summit was the emphasizing on stablecoin legislation and market structuring, which is what the key positive actors in the space have been asking for all along. Clear rules that can protect consumers while enabling innovation. I think in terms of US dollar supremacy and the position of the United States in global markets, stablecoins prove a very simple way, an effective way for onboarding folks, particularly from key emerging markets such as Nigeria, Turkey, Korea, Vietnam, and Thailand, where these nations already have large populations, essentially holding US dollars through stablecoins as a hedge against volatility, which has brought them into crypto. And so this provides an opportunity for the United States to solidify its part in these economies of the future by onboarding them into digital assets like stablecoins, as well as making sure that it's US interests that are at the heart of these nations, as opposed to peers in which we're competing with for these active roles in these emerging nations.
And Cooper, you wrote Bitcoin, Ethereum, Movement, Solana. These are all the things that they do serve unique, important functions. Thank you both very much. Cooper Scanlon of Movement Labs and Natalie Brunell. You have your book, Bitcoin is for Everyone. Thank you both. Great to see you.
Thank you so much.
That's going to do it for us here on the watch list. Download our free Schwab Network app. It's available in the Apple App Store. 24/7, schwabnetwork.com. I'm Nicole Pedalides. Thanks for being with me. Keep it right here.
Yeah, we're way below my support.
And the Dow is down over 1,000 points.
So go to the monthly. On SPY, we dropped 530.
Investor Checking, the checking account investors named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors.
We didn't hold the 9.
Limited ATM fee rebates for cash withdrawals worldwide. No overdraft fees.
So we can drop to the 21 like we did here.
Keep your money safe. Also, because you're investing,
That's right around 5:30.
to your Schwab One brokerage account, you can manage your checking and
Not today, but I mean
in
that can
one
happen.
convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
531.
It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on next gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com on all your streaming devices. Schwab Network is available anytime, anywhere, on any device for free. No place better than the Schwab Network.
Hey, Dad. I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations.
Mare's down
Someday
to
it'll be their turn.
1330. Soundhound's down.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the
Hood was
earliest
another one that
analyst
had a
calls.
huge
Get your
run.
watch list ready. 8 a.m. Eastern. Morning Movers only on Schwab Network.
Ooh, Mr. down $50. $52. I had this one on watch.
I'm Oliver Rennick. Get ready to cut the cord. Market on close.
Reddick was another one that had a humongous run. Oh. Way overbought.
Good
Reddick
afternoon,
was.
Welcome to the Market on Close. I'm Oliver Rennick, and it's red across the board.
Coin down
Nasty
37.
position with stocks at their lows. Equities are getting slammed across the board, and there's not much relief.
Yeah, these are hard
There
sell-offs.
used to be relief. It's not there today. This
I
is
did not
one.
see this coming
This
at
is
all.
Serious selling, and it's been unrelenting generally. A lot of head fakes, but now at this point, wasn't a lot of back and forth. This is just straight down, breaking through support levels over the past week and continuing to carve out room to the downside on the charts. S&P's at 55.81, the lowest since September. Good bit of trading around this level last summer. Maybe you find some support at it, but we already blasted through the old all-time high from the summer last year. First time we got to 56.50, so there's just really nothing on the chart that's holding right now, and big tech is getting hit the worst. The Nasdaq's down 4.5%, the Russell's down 3.25%. Like I said, nowhere to hide really. Bonds, and finally the dollar a bit, which I do think tells you something important.
Golly,
Let's go
Dow
through the
Jones
numbers
down
and
a
let's check
grand.
out the session here. Let's wade through the bloodbath. Magnificent 7, MAGS ETF. Brilliant thing, and while it works, About as easy of an alpha as you can get in the market for the last 2 years, breaking down.
Bitcoin's coming close to my support.
NVIDIA, but it has been for a while. NVIDIA down 6%.
What's this, Mags? Magnificent 7? MAGS.
Some of the big sell-offs we had, I guess
I
that's
want to
not
know
that
that
alarming. Tesla's down 15%, which is definitely a huge sell-off, but that is one that's had a ton of Trump premium in it that probably needed to come out. Bitcoin down 11%. Obviously, Bitcoin has not graduated from being a higher beta version of risk assets.
I like that one.
Is what it is. Not sure why anyone thought it would change, but I'm not going to beat that dead horse. Maybe later in the show. Look at the Apple and semiconductor chart. I want to look at that one because Apple has been a stalwart. Apple has been steady, but if it breaks down, folks use it to go for cash, for liquidity. That's what it looks like today. Apple has been resolute above 230 bucks and shattering that in today's sell-off. So Apple now catching down to the rest of the semiconductor trade, which probably makes sense. It was a tough sell, in my opinion, describing Apple as a defensive trader.
Be careful, everybody.
Valuation in that stock. And given that we're taking a machete to a bunch of the AI stuff, there might even be a message there that Apple never really had an AI premium baked in, which then it's like, why was it trading at that valuation? So I do think there's a lot of holes to poke into the Apple story. And today's really the first day it's broken. So you don't want to see that break further, obviously. Now, if you look at bonds, something's working. Treasuries are rallying. That's what they're supposed to do. And we did see about 3.5 days, call it 4, of rising yields last week around decent economic data, providing some relief to the growth scare narrative. But if 10 years fall below 4.2%, as you can see on this chart, that would be below the previous low from December last year, which would mean a pretty big reversal on what's generally been sticky and or climbing treasury yields post-COVID. You don't want to see that line start to reverse too much, because then you're either talking Fed to the rescue, nobody wants that, and Powell doesn't seem interested in coming to any rescue. It doesn't appear obvious that we need rescuing. If the 10-year yield goes below that line, in my mind, that's saying something big. That definitely is going to put the growth scare conversation back on the table in a more real way. Finally today, speaking of nowhere to hide, that's the theme. That's the theme. EFA, that's the EFI, that's the rest of the world. It's been a really great year for the international trade. We've talked a ton about that. It's been a really strong, especially compared to us, obviously. There's a story of the dollar tied in there as well.
I don't think we've seen a sell-off like this since I've been in the room.
That the rest of the world
since we've had the
might
room.
narrow the gap economically with
Probably
us here
have,
in the great United States of America. EFA up 8.9% on the year. It's looking great, but today it's down. Can't really see it on the line chart.
So far, I'm 10 for 11.
So the point is, EFA is down 3%. FXI, Chinese stocks, are down 3%.
And I barely got.
That is something new.
That last one I got out, but not
talk about some more of that later.
not enough to hurt.
Coming up, Vincent Dillard is on with us.
Actually, it was a good trade still.
Kick things off. We got Liz on Saunders at the bell. So we got a ton going on. I got Jenny Horn.
Could have been a lot worse if I'd have held it.
Of Next Gen.
That's
Some of this
fact.
stuff, Jenny, just feels like, it's been waiting to happen. Especially Apple. I feel like you and I have been the only
I
sober
couldn't get out
people on
green
Apple
because it
for
sold
like
off too fast.
3 months.
Months, ever since WWDC, we were like, wait a second, there was so much promise, so much of almost like the Elon Musk playbook from Tim Cook, and all this riding on this super cycle, which I was like, I have the model that gives you access to Apple Intelligence. It is light years behind Gemini at this point, and I mean, like so many of the other smartphones, it's actually making me maybe want to be a convert.
I'm telling you, more so than ever, and believe me, you know this because you were giving me grief from like day one.
I know.
Network for
Green bubble guy.
User. But more people than ever I've seen that don't have the latest iPhone.
Yes.
And that when I show them the Gemini on my Alphabet, on my Google phone, they're like, oh wow, that's actually pretty great. So this whole narrative that Apple was like, for some reason, a logical place to hide out. Today, it being down 6% to me is one of the biggest events of the session.
I know, because I also think that it's sentiment change when we're seeing the disarray right now that's happening on their development side of Apple Intelligence. Yeah. Again, an earnings call that we were like all excited about these pockets of growth that don't have Apple Intelligence yet. But if we're already seeing delays in certain rollouts, the namesake
I'll be
being
right
Siri,
back.
I mean, we're seeing that delayed till 2026. This is a tone that we haven't heard from Apple. Apple's usually reliable. I mean, it's our tried and true of the tech names. There was a reason it hadn't pulled back as substantially. It also just hadn't seen the same volatility, but so much of that WWDC momentum that just carried through, and it was like, we haven't actually gotten numbers to prove any of the super cycle narrative or the hype around AI. And their spend is, I mean, maybe not as eye-watering as some of the bigger, I mean, like the Amazons and Metas, but it's still like considerable and closer to China. We just somehow, the DeepSeek sell-off was a non-event for Apple, and I'm not really sure why.
That's what's so weird about it. This is why I feel like there's always been a massive logical gap in the Apple safety trade story, is partly because it didn't sell off in DeepSeek when everything else AI sold off, which basically means it's not an AI trade. But if it's not an AI trade, then what do they got going for them right now?
Well, and what were we riding on for the last 4 months?
People were trading it like a bond.
Yeah.
So today it breaks down. That to me is surprising. Tesla down 15%.
Tesla is taking it on the chin today. And I mean, at session lows, I don't think it helps that the platform being X is reporting this massive cyber attack. 40,000 users reporting out earlier today. So that, I mean, even though not Tesla.
I didn't notice. I'm not as active these days.
No, I didn't notice either. So that goes to show maybe we're doing our job to stay off social media. But yeah, 40,000 outages, that's definitely not helping. I also think you consider the news cycle that has been Tesla, not Elon Musk, Tesla. I mean, we're seeing falling sales in Germany, which I disregard. It's like 2% of their sales. But I also look at the competition right now in China, the way we're seeing more and more of these companies mass market these low-cost vehicles. That was supposed to be Tesla's big catalyst this year. We've got no real updates on that. We got, sure, some margin improvement on its last earnings call, but we still also rallied on very, I'd say, tepid guide for this year. Like, all of the fundamental story of Tesla has been very lukewarm, if that. And we were caught up in the election euphoria. So I actually think that this is probably a necessary pullback.
Yeah, absolutely. In the same ballpark with you there. It is now, it has closed the gap and is now selling below it. That's what today represents for Tesla. A lot of these are breaking their entire Trump bump now full circle. Of course, I've been hammering the table on Bitcoin, full circle being closer to 70K. So Tesla is another one, though, that checks the box off.
I was going to say, those charts trade right now and in an odd correlation. I think that speaks to the post-election euphoria just completely waning, which is perhaps, again, necessary when you had these things just ridiculous. But the correlation of Bitcoin and Tesla recently has been interesting, I think.
Yeah. Appreciate it. Thanks, Jenny. Good analysis. Oh, we didn't even talk about the travel stuff, though, by the way. Which was also so strong.
I mean, United posted its best year on record and was unstoppable. It was like no narrative could shift. I mean, we could talk about jet fuel prices and flux. We could talk about, I guess there was positive sentiment from is the demand. But right now, I think you lose your faith of your U.S. consumer. That has been another driving force of so many of the tourism stocks, where I think many that look at the credit situation, the continuous debt load, we're like, when is this going to stop?
Well, maybe it is.
Maybe it is.
Airlines, what are we down in jets right now? 6%. That's heavy stuff. All right, thanks, Jenny. Appreciate it. Good stuff. Host of Next Gen. Joining us, Vincent Lars, Director of Global Macro Strategy at StoneX Group. Okay, Vincent, so are we turning off the inflation alarm and turning on the growth alarm, the stock market alarm? I mean, we are falling apart here today.
Well, I think you got one of these two parts right.
Not ready to turn off the inflation part yet?
I'm not ready. No. I mean, it's possible. We have a big, big report tomorrow. But my not tomorrow, Wednesday. But my hinge is that growth is going to fall before inflation, if inflation falls at all. And unfortunately, the Fed has lost a lot of political capital by, doing the transitory mistake, the 50 basis point cut in September, and I'm not sure to what extent they can be proactive again. Now is probably necessary. 3 months ago was a mistake, but there's some path dependency because there is too much 3 months ago, they may not have that bullet. Now that things look like they're turning sour. And my guess is we won't see any inflation data on Wednesday. And yeah, that's why the market's setting off. It's realizing it's a stagflationary mix, which is the absolute worst for risk assets.
Do you think that it behooves this administration to encourage or at least not interfere with equity market downside or the popping of various risk asset bubbles if that helps bring inflation down?
It's always hard to project intentions in any administration, but especially I think in this administration. I would, yes. I mean, I think one of the biggest problems we have in the U.S. is the price of assets have gone far, far above incomes, and as a result, it's been difficult to form households. We have a big inequality problem. We have this sticky inflation problem because these assets represent spending power, and yeah, over time we need to get the two more in line. Now, I would much prefer that to happen from rising income than from falling asset prices, but that's what I would do. And I suspect that view, okay, is certainly few administrations want to have a bear market, so I don't think it's the mainstream. But in terms of what Trump tweets about, he hasn't tweeted about the stock market once since he took office, and he's really paid great attention to blame it on Biden. This is still Biden's economy. This is Biden's sell-off. Compare that to 2016, 2020, when he was constantly tweeting about the stock market.
Yep.
What is he tweeting about right now?
Big difference.
Treasury yields. And that's what Scott Bessent keeps telling us. Judge me on the 10-year yield, not the stock market. So the whole notion that there is a Trump put somewhere is wishful thinking. And Bessent said that much. I think it was on CNBC, right? He was asked about it. Is there a Trump put? He said, no, there's a Trump call. I said, well, today we don't need a call, man. We need a put.
Vincent, so far, to your point, bonds have been working pretty reliably. A little bit of a hiccup last week, when we saw some of the economic data look a little bit better. Bonds firm up. Dollar, though, has gotten shattered during all of this. Today's the first day where the dollar's perking up a little bit, and you are seeing a little bit more of a traditional safety bid there. What do you make of that?
No, I think that's the key thing to watch.
Me too.
Is not so much the dollar. I think but really is the level of yields.
Okay.
If we see yields continue to fall, treasuries continue to be bid, I don't think we're going to have a bear market. We're getting to the point, we've broken down that 200-day moving average, but, resistance line made to be broken. We're about 10% down. Your P ratio's gone from 26 to 20. At the same time, bond yields have gone from 4.8 to 4%. So we've restored a full percentage point of equity risk.
Think we still got more leg
It could be
down?
the case that at the end of the day we go back to stock because we have to. This is not my expectation. I think there is more downside on treasuries, and that's what would lead the second phase of the bear market. The second phase of the equity bear market will be because we realize that yields are not going to.
I'm about done trading now.
The reason that yields have fallen is because of very temporary.
But I should buy the dip, especially at the end of the day.
Repo facility that's soon going to be over. We have a problem when it comes to maturity of the debt that's on the balance sheet of the Fed and the maturity of the debt that's been issued by the Treasury. We need to issue a lot of long duration debt. So my view is that ability that treasuries have to act as a buffer against equity losses is not much of it. We've already had it. And the worst case scenario really would be one where we see that the low was in for yields, but the low is not in for stocks.
Well, that would be really problematic. Let's see if that happened on Wednesday. You get an inflation number, and now you got to add in yield pressure on top of whatever other mechanics are driving this thing already, because clearly we have not had any yield pressure. So let's hope that either doesn't happen or takes a while to manifest. But given your analysis on bonds,
Here's one where I should have added. That'd have been great.
Vincent, the last part is: do you think that the Doge
Like 300% from the bottom.
Do you think there's any possibility these yields have come down because people are looking at what they're doing and saying maybe the U.S. becomes more affordable?
Just hit 90.
Situation.
Hit the 63.
I think it's one of these where it's St. Thomas, right? I'll trust it when I see it. Now, in terms of sentiment, what you're saying is entirely true. I think that's part of the story. It's the market thing. Oh, Elon Musk is way more serious than we thought. Maybe we're gonna slash, maybe not a full trillion, or it is 2 trillion, but enough so that it makes a difference. And that's part of that compression in yields. Now, the way I look at it, I'm a big daily treasury statement. I look at the cash moving in and out of the Treasury General account. So far, we are not seeing it. The operational deficit of the US government is 15% larger than it was last year over the same period. Now, you could say, listen, it's normal. Those are going to take time, right? All the people who got the buyout offer from Elon Musk, they had 8 months where they don't even need to show up to work. They still collect benefits. So in a way, we won't be able to tell whether it's real or not. But at this point, if we just look at hard numbers, how big is the deficit? Is the deficit shrinking? The answer is that it is not. And my suspicion is that a lot of this Doge stuff is going to be thrown out the bus if we see a bear market. I think Trump is going to have Elon Musk jump on his word and okay, stop scaring the market with that crap, and then we got to backtrack. And at the end of the day, yeah, we'll have longer deficits, and that's one reason why I expect yields to come back up.
Okay. Like the few steps ahead there, I think in the near term we'll focus on inflation tomorrow and hope that situation of bond selling doesn't happen. Thanks, Vincent. Great to catch up. Great to see you, sir. Thank you. Vincent Dillard, Director of Global Macro Strategy at StoneX Group. Coming back, let's talk with the stock picker and a macro guy too. Nick Aurora rejoins me on set as we talk about the AI trade and where there are some Bible dips out there.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization. And track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Boom. We're going to the 200, I think.
It's an ugly day for stocks out there. Equity is down with the NASDAQ lower by more than 4%. Let's talk about
That's 300% gain right there on that 25 cent if I'd have bought it.
Portfolio, if you had any hedges
Maybe,
on.
if I got in there.
Joins us, founder of the Aurora Report. Good to see you, Nick.
Good to see you, Oliver.
All right, so we were just talking about this pullback.
I'll get tired.
If you were hedged, if you were short, what do you think you do here? Like, how much worse does this get? Should you start taking profits?
So, in our work, what we use money flows, right? Everyday money flows in or out of the market. So we look at where the congestion zones are for money flows, where the money was coming in last time.
Okay.
And that zone in S&P 500 is 5,400 to 5,550, somewhere in there.
Okay.
We're kind of there.
Okay.
So that's going to act strong support. At least we think so, right? So we are as much as our portfolios are 57% protected with cash, hedges.
How do you do hedges?
So hedges, we do a combination. We don't use one thing. So we use inverse ETFs, right, depending on the composition of the portfolio.
Who's
we
this?
use VIX ETFs like VXX.
Oh, that guy.
And then, of course, we use put options, like put spreads, you
Okay.
know, because that kind of reduces our premium. And our hedges are like extremely profitable.
This
Like,
guy,
in
I
the
think, is
down
really
day,
funny.
You know, when everybody's screaming.
His
they
personality,
shout.
his
Right,
his
our
him.
long portfolios are only, you know, with the upper band of protection, only 43% exposed today. That helps.
Okay, yeah.
And then we also short, right? And the short positions are doing great.
What do you, for the stuff that you're outright short, is how close it is to start taking the majority of
Which
profits
I
on
do.
there?
For example,
You got VIX 28.
Which, we're short on CrowdStrike. We took profits today, we're out.
Okay.
Right?
Earnings
CrowdStrike
plays?
was- Yeah, earnings plays. So we're going to get out more and more of the short positions, and we're going to start taking out the hedges. We'll start realizing their profits. And then somewhere here, we'll start buying new stuff, but slowly.
Okay.
Because first thing we want to do is take the hedges off, take those profits. That's
Yeah.
the first thing we want to do.
Yeah. And if you see things breaking down further, well, you mentioned the kind of support zone. Tell me about some of these groups that we've talked about before, the quantum stuff, the AI. When you look at the way just any kind of form of tech broke down, technically, it's hard to figure out, you know, where some of these things are going, given how long the run was. How do you kind of monitor to see if this high beta stuff, you know, what's possible?
Okay. So I would not buy any of this stuff for investment purposes. Investment meaning longer term at this point. So we have been in the mode of trading it, both long sides and short sides. So right now we're short a lot of the stuff. Some of the stuff that were long, we already took profits very recently. So I'm going to be in the mode of covering shorts now. Probably do some short-term
I knew it was him when I heard his voice.
which I think we'll see somewhere here.
What do you think leads us from a bounce?
I think only Trump knows, but we have a shot at going lower.
Yeah.
So I would not be very aggressive in buying a lot of long-term positions. I'd be more in the mode of protecting ourselves. Now,
I see.
There are always special cases, you know, that we try to buy. Today we bought something called Beacon Roofing, right? Who cares about Beacon Roofing? So BECN.
Okay, just showed up on a...
Yeah, it's
On
going to
alert?
get bought out. It's probably going to get bought out, right?
Okay.
So, you know, we'll make 15-20% probably on it, probably in the next couple of months. So we'll look for those special situations.
Not buying the broad market.
Not buying the broad market.
Maybe
not
taking
just
some profits if you had hedges.
hedges, taking profits.
Okay, but then if you buy on top of that, then that becomes too skewed bullish for you.
Too bullish, not going there yet.
Okay. How about the commodity situation? Gold, which has fizzled a little bit under 3,000. You've watched gold. You've moved some gold markets in the
Yes,
past.
yes.
I've seen the articles about it.
Yeah.
What do you think about it right here?
So my calls have moved gold market across the globe. So we took some profits on gold here. We're holding bulk of our positions. And I think if gold dips to around 2,500, 2,400, we'll probably
It's a big
add.
dip.
It's a big dip.
It's a big dip.
But that's okay. You know, our average price in gold is about $1,200 at this point. So we're sitting very pretty.
So you view it as buy and hold, but wait for
Buying and
big
hold.
downside.
Now we may do again, just like nuclear stocks and so on. We may do some short-term trades, but for a longer term, I think I would wait for 2,500 range. But to some degree, it depends on dollar, right? As you know,
We've been
you watch
talking about
dollar.
that this afternoon.
Yeah, you watch dollar closely. And
Do you
so-
notice today's little perk up in the dollar?
Yes.
What do you think about that?
I think that's more of a safe haven buying, which we'll see.
Finally,
Yeah,
right?
finally.
Because it wasn't working for like the last 3 weeks.
Right. And, you know, we are positioning yen, for example. You know, that's our, you know, we think ultimately we're going to get to 120 yens to a dollar, right? Right now we're 147 or somewhere.
Okay.
And we've been buying when we were 160, so that position is slightly.
So you'd rather be long yen than short the dollar?
Absolutely, absolutely.
Okay. You'd rather be long yen than long the dollar too?
Right, right. And if euro pulls back, I would buy euro again.
Yeah.
Right? Because look at what's happening. Now we're trying, talk about things we're buying. We want to buy European defense stocks, right? I should have sent you a chart, but
it's a very hot trade right now.
It's hot
because the narrative is they're going to come to the table and fund NATO and their peers, etc.
That's right. And the thing that most people are missing is what's the equivalent of parliament in Germany is going to need 2/3 approval on a lot of these things, and the majority party is going to be highly dependent on Greens, which are environmentalist parties.
This guy's really funny.
Last election, and they want big spend on the environment, which kind of goes against everything.
In a cool way.
So it's not going to be that easy. So somewhere,
look at that run back up.
Dad damn it! Oh, Greens are not going along. The Parliament can't pass.
Oh
this.
my God!
Euro drops.
Euro drops.
And then
we'll buy euro. We'll buy euro.
Can you believe that?
Okay. So you think that some of this kind of international.
I sold these things for a little bitty loss, a couple $100, and now I'd be up 65 times 15. Oh, that's stupid of me. I'd be up $1,000. Oh, I'd be up easy $1,000 right now. Frick. I can't believe it. I started thinking, man, it wasn't going to recover, but jeez. God. Jim, why? I mean, if I would have held him, I would have been crying my eyes out because it went to 25 cents. I had an average of 150 something. I would have lost about all of it. But I had to do something. And that last run up, I got out of them, and I tried to get out of them with a little bit of profit, but that would have been $1,000. That's so stupid. Oh boy. Rest in peace, Jim. That really hurts. I can't believe it. I can believe it, but I mean, I can't believe it. Especially when I was having such a great day.
negative gamma area when you're kind of looking at the volume flows. And we tried to stay there for about maybe 10 minutes or so, then we flushed right down. Now we did actually see some flows at the 55, 75 level. We pushed through that, and then we started seeing some buyers kind of stepping in. Now, the key is going to be 56.23. I'll be very precise there for the S&P 500 to really try to recover and get above that level. There is still a short zone at that level if you're kind of looking at the overall primary trend. We have this channel line to the downside. There's another channel that you could also make, which would align with that 56.23 level. And if we can actually recover from there, then maybe we continue to see some buyers really try to step in. But I would just be very cautious, very low liquidity, short covering a little rally that we just saw there, and then you could actually see some shorts kind of stepping in. What I will want to call out here, the E-mini S&P 500 futures, if you're looking at the volume, so uptick versus downtick, so the volume that occurred on upticks versus downticks, it was pretty much at around 95% before that bottom, and now you're sitting at around 70%. So that actually means that there was a lot of trading that took place right there at those lows of around 55.64, which is a good thing, but once again, kind of indicates short covering. We also are getting close to that 10% correction level, 55.50 if you're looking at the E-mini S&P 500 level. And then we kind of talked about that gap on this chart, that yellow block that we have on that chart, that it would create this void. And as soon as we touched that gap to the downside is really when you started seeing accelerated selling pretty much across the board here. So we're trying to recover. Maybe we can recover that gap, but that's something I'm keeping my eye out on for the next 30 minutes going into the closing.
All right, finally got the RSI oversold, took a big puke. I think we used that word a couple times last week when anticipating the options, and they were stacking up mostly negatively. With that persistent lower highs, lower lows, breakage of support, and now further beyond that election level, we really kind of opened up a can of worms here. I think a lot of people were hoping we wouldn't do.
Yeah, what was actually different for today than what we've seen over the last couple of weeks here, Oliver, we have had these rotation trades going into defensive stocks, especially high yield dividend stocks have been bringing that up, and also just defensive in nature. If you're looking at consumer staples or utilities or anything.
SPX 55, 56, 60, 150 to 220, 245.
But today you actually saw dividend stocks in the defensive
But I couldn't buy all them that I had. Nice recovery so far. Rob was right. Rob, you still trading it
here today, but once we kind of got to that level, you started seeing that aggressive selling to the downside for the broader equity market. You started seeing traders selling out of those defensive stocks. So this was the first sell everything type of event that we've had throughout this whole downturn. It was more than just a rotation today. This was truly selling where we got to those lows. Now we're seeing a nice little bounce. SPY outperforming those dividend stocks as well. What's really catching a bounce right now? Communication services as well as information technology. Let's see if that's going to be able to hold and we can kind of push higher here going into the close. But once again, I would be very cautious. And if this is a capitulation type of an event, you would look for a follow-up
Bingo.
1 or 2 days before we may have short sellers kind of getting back into the market and trying to knock this down. We are not out of the woods yet by any stretch of the imagination. Hopefully we can recover as much of the losses that we can for today.
All right. So maybe some capitulation signs, possibly like a flush, at least short term. We also talked VIX in the stair step from last week. We're seeing VIX come in as we speak here a bit after hitting 29.6. We're at 27.5. Does the vol structure look capitulatory, KG?
Not really. If you kind of look at it, the front end is still really elevated compared to what we're seeing on the back end. And in fact, the backwardation's got even worse. So there's more concern about what's happening in the near term than there is across the curve. Now, you may say that probably could be the start of vol kind of coming down a little bit lower. I would just, once again, I would express some caution there. I'm still kind of scratching my head to figure out why vol has not really ramped up in the manner that it should, given the aggressive nature of the selling off. But maybe, once again, people may not want to hold, may not want to hedge. They might be utilizing zero BTE, which is going to impact the volatility.
Always clean this, Jim.
There could be a multitude of factors here, but the backwardation is still getting more aggressive, actually, day by day. So until that actually starts to back off, I would stay, once again, a little bit cautious. And when we're looking at this chart, We're holding in that bottom end of that channel line. So we went right through it, touched 55.64, keeping that one intact. Once again, technically you would say follow through day for tomorrow if we can. Hopefully the news will allow us to do so.
All right. So we've got obviously a lot ahead of us here in an uphill battle. As Vincent Dillard was talking to us about at the top of the show, if that CPI print doesn't go well, that would be a really nasty additional dagger to have in our side. Okay, anything else, KG? What else you got for me? We got a minute.
Yeah, I would just say once again, be very cautious with this. And if you're trading options, risk define is going to be very key. You're seeing a lot of burn when it comes to premiums right now because of this aggressive selling to the downside. Calls are really holding up any type of value, obviously, because we continue to melt down. And what I'm also noticing is that the premiums on the downside of the puts themselves, however, are just really elevated. And in fact, if you actually look at an options chain, you can look at an options chain for tomorrow. Let's see people's look at the options chain for tomorrow. There's bids, and there's actually active markets 300 points away from where we are at right now, just for 0 DTE. And that kind of tells you that this market obviously is very active, but that could also be very dangerous for those that think those premiums are going to last for that long. Usually we will see a removal of volatility, a drop in IV, even if we do have aggressive selling on the downside. Generally, we do see a top in the IV, and that could really crush those positions.
I mean, your odds of vol crush when you're at VIX 28 are very high, very high. Now, last week when we did talk about the potential for downside, we talked about how there is a kind of threshold. Technically, if you break down, you can have those big moves. But now when you're nearing VIX 30, as we did intraday, this helps get you some way there towards kind of a higher level of confidence for some degree of capitulation. Whether or not that lasts more than an afternoon or a day, obviously, we have no idea.
Yeah, I agree. Usually those events are 2-3 day events, and also kind of aligns with news items. Right now, this just seems to be we have news, but this seems to be a little bit more mechanical in nature. When you're kind of looking at the price action, it symbolizes the same. When you just have an aggressive selling, stair-step approach to the downside before that major flush, kind of just tells you that there is just a massive de-risking event that is taking place. The other side of that, though, once again, I always have to say this, long-term investors, there are some value plays that are out there. There are some things that are working or that might be a little bit oversold that people may have had on their watch list. So look around. You always got to be active in this market here.
All right, thanks, KG. Appreciate good analysis of the intraday levels and the technical situation. We'll take a break from some of the market big picture stuff and macro discussion, see if we're able to run this bid up at all over the next 20 minutes. When we come back, we're going to talk about a business that's had a tremendous stock return over the past year. Willis Lease Financial trading at $153 and did get hit on earnings, but is still up 230%. We've got the CEO coming on next.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading.
They're going to work on the bathroom tomorrow morning.
With a wider range of opportunities.
Wednesday morning.
Brilliantly with Schwab.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free.
We are sorry, there is no one available to take your call. Please record your message after the tone. Press star to discard the recording, or press any digit to end the recording.
Spot a trend in electric vehicles?
Yeah, this is Jim again. We could do it tomorrow morning.
Or want to explore the space economy?
Give me a call back if you can.
Each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes 40 customizable themes, up to 25 stocks in just a few clicks.
Accelerate your market knowledge and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Going to take a break from the market for a moment and dive into a company that's had a huge return over the last year, benefiting from a lot of travel and also a need for updated flights and aeronautical needs of the big airline industry. Austin Willis is CEO of Willis Lease Finance Corporation. Austin, thanks for being here on the Schwab Network.
Thanks for having me.
All right, so how much of that did I get right? How much did I assume there? It was a big year for travel. And I know there was a lot going on with most airlines' fleets, so I guess you guys have been able to benefit from that.
Yeah, this is Jim
It's been a
again.
great year for us. 2024.
Did I
was
just speak to you?
fantastic. Record revenues, record profits, margins, return on
Well, I
equity.
spoke to a lady
21%, so we're
that's going to go up to
thrilled.
the IRS
It's
and
a
put a
function
new
of
sink
number of
in.
different things. Obviously, the return of travel after COVID is a big part of it. But it's sort of a bigger trend that we've seen with respect to jet engines more specifically, and the maintenance required to get them back up in the air. All the supply chain issues have made it difficult to overhaul engines and keep them flying, and we've been in a great position to supply those engines to airlines globally.
I don't want to pour salt in the wound of the industry, but just from kind of armchair perspective, how much of that was Boeing related and attention now being focused very, very, very deeply on planes and the way things are put together and how things are maintained?
Sure. So it's not really Boeing specific or Airbus specific. It's more general. The engines, the previous generation of engines were having a bow wave of maintenance that's really been in the works for the last decade or so. And that combined with the next generation of engines, the LEAP, like the one right behind me, the geared turbofan and the GENX, they're starting to come through their own teething issues. And it's the combination of the two which has caused so much pressure on the supply chain.
Where are the vulnerable parts of the airline supply chain right now as we talk about tariffs? How much is already purchased, is just sitting waiting to be used, and how much is up for grabs and can change according to what happens for tariffs?
Yeah, the tariff question's a big one. And look, it's still so fluid. It's going to be hard to say what the long-term impacts are. I can tell you from our perspective, the tariffs imposed on Mexico, Canada, and China haven't had an immediate impact on us, but it's still early days. We really don't know what the long-term view is going to be. I think there's a potential for some inflationary element to come in, but again, we don't know exactly to what extent. That being said, we've seen inflation over the past 2 years, and frankly, we have been beneficiaries of it. If you look at our market value of our assets relative to book value, at the end of the year, we were a little bit under $600 million above book value. So I think that's a testament to our portfolio.
Yeah, your finances, just looking through them, have been pretty impenetrable the last at least a year from the data I'm looking at. And your top line has been growing in the mid 30%. So where is that coming from? I guess as a traveler, I don't really think about it too much. I think a lot of folks probably in my shoes just kind of assume everything's there when you get there. But what's going on behind the scenes that's driving that type of growth in this economy? You really only get that in tech stuff.
Yeah, so it's been general utilization across our fleet and a high demand for our assets. But another really important part, and I mentioned this on our earnings call today, is the demand for outsourcing of the engine maintenance for a lot of the airlines. The airlines really crave.
We're going to get the men's
simplistic
bathroom
operating
sink
model,
fixed
and what we've
Wednesday
done
morning.
is managed to insource that
They got the
maintenance
part
risk
in.
from them. So we do big programs, like one in particular called Constant Thrust, where we'll do a sale leaseback on a fleet of assets, and when one of their engines becomes unserviceable, we just replace it with another engine from our portfolio. So it really eliminates a lot of the headache, the maintenance headache and burden for the customer, and that's been a big boon for us.
Got it. How competitive is that? Are there businesses that align with your own? Is there what's the end goal? I mean, if you're going to continue to rack up cash, what do you do with it?
Reinvest it. The engine right behind us is LEAP-1B, the engine that powers the 737 MAX aircraft. We've sold some assets over the past few years consistent with our operating model, and we use that money to reinvest in the future most in-demand technology that we see out there. So we do have competition, but there really isn't anybody that does exactly what we do. There's some engine lessors, there's some services businesses, but there's not many that combine that services enhanced leasing products like we do.
Got it. Well, thanks for the introduction. We'll definitely be paying closer attention. At least I will. Thanks, Austin.
Thanks for your time. Take care.
Absolutely. Stock hit on the quarter, but an incredible year behind it. Austin Willis, CEO of Willis Lease Finance Corporation. Keep in mind, too, we were just talking about all the airlines are selling off as well, so there might be some sympathy selling there, too, for Willis. NASDAQ down 4%. That bid did not run.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 800 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network. I'm Nicole Petalides, host of Trading 360 and The Watch List, live on the floor of the New York Stock Exchange, where we bring you breaking news, experts, CEOs, influencers, and analysts. It's all available on Schwab Network.
Stocks still near the lows of the day. The Nasdaq's down 4%, Apple's down 5%, Tesla's down 16%. Liz Ann Saunders, Chief Investment Strategist at Charles Schwab, here with us, maybe to find some light at the end of the tunnel. Liz Ann, how rough is it? How dark is it?
Well, it's rough and it's dark, and there are some metrics that suggest the market's oversold, but not quite the full washout that would suggest a technical bounce could come in, at least in the near term. I think we're seeing some margin calls on a day like today, and it's also the case that even though bearish sentiment has accelerated to a significant degree, which sometimes can serve as a contrarian indicator, behavioral measures of investor sentiment, like fund flows or the put-call ratio, are not showing a commensurate extreme like the attitudinal measures of sentiment. So I think for now, the momentum is on the downside. At some point, the technical conditions might suggest to some investors to step in and try to play a tradable bounce, but it's hard to judge that point from my vantage point.
Yeah, mine too. Anytime it's looked like there's supposed to be support on the chart, it hasn't lasted very long. We were talking about some signs of capitulation, some widening out of the selling, like Apple, which finally got hit really hard today. A few areas that were kind of hideouts. The international trade too, one today. What do you make of that, Lizanne?
Yeah, so I think that there clearly has been a shift away from maybe this sort of broad theme of U.S. exceptionalism, and that's manifested itself in outperformance by non-U.S. You've seen a shift in bias in terms of what's working. Our colleague Jeff Kleintop has written about the pseudo, new Magnificent Seven, given that the 7 largest defense stocks in Europe are doing incredibly well on a year-to-date basis, performance-wise. And to your point, Magnificent Seven at best is maybe the meh 7. Because only one stock among the 7 is outperforming the S&P, and that's Meta, and not to a significant degree. The other 6 stocks are significantly underperforming. And the number 2, which is Apple, you mentioned, this is before today, was still ranked at worse than 350th on the ranking, and then you've got Tesla literally bringing up the rear as the worst performing stock on a year-to-date basis. And clearly the focus has been by investors at the sector level on more defensive areas of the market. You have a day like today with utilities and energy, the only ones being up, and on a year-to-date basis, healthcare and consumer staples leading the pack. And I think that defensive bias is probably going to persist in this near term.
Okay. With the tech rollover happening, how much do you think this helps kind of cure maybe an ill of the concentrated portfolio? Obviously, this is not the preferred way to go about it. Hopefully, folks adjusted on the way up as it was getting particularly top heavy. But if one didn't make those tweaks, Lizanne, what do you do now? I mean, do you feel that these are the areas that you want to count on again to bring us back?
I don't know that we necessarily need to count on them. That said, even though we really have been pushing over the last many months the idea of rebalancing volatility or portfolio-based rebalancing, not fully away from those names, but not allowing them to become as concentrated in your own portfolio as they might have represented in the S&P. And we've also pointed out that the perception that you had to own those stocks in size I think was misguided. That's an institutional problem, not an individual investor problem. For institutions that are benchmarked against the S&P, which is a cap-weighted index, on a quarterly basis, they are at the mercy of the construction of the indexes. Individual investors should not think that way. Hedge funds have been moving out of those names, in part reflecting what had become concentrated holdings there. As to when they might offer a tradable bounce, we've also been saying that with these rapid-fire sector rotations we're seeing on a week-to-week basis, healthcare is the best performing sector this year. It was only last week that it was the best performing sector for a given week. It actually was the worst performing sector 2 weeks this year, even though it's on a year-to-date basis at the top of the leaderboard. Tech has been the best performing sector during a week this year, yet it's the second worst performing sector. So you see these wild sector rotations at times back into tech or back into the Magnificent Seven, short-lived, at least those bursts this year. It is really tricky to try to play that trading game, but that concentration risk has been real, and we're seeing it manifest itself in how markets have been performing and the dispersion even among the Mag 7.
Do you think, Lizanne, or I guess, it's probably too early to know, obviously, but it's a fun one to think about, I guess, is will that concentration come back anytime soon, or do you think that this is sort of a riding of the ship, as we're talking about here, that we probably won't go back to that type of construction?
The other issue is that it wasn't just a concentration problem that needed to unwind. There was the fundamental underpinnings to the pullback in these areas, not least being what the DeepSeek news brought into the equation about concerns with regard to the amount of CapEx that was embedded in a lot of these AI and AI-related names, and what the DeepSeek news represented as a disruption force and creative destruction in an innovation like artificial intelligence,
Sure,
not to
and
mention
no,
that
they
as a
didn't
group,
come
the
in
Magnificent
Saturday.
Seven a year ago, you were talking about 55, 60% earnings growth among the aggregate of those companies, now moving down by the end of this year
I think
to
the
high
smell's
teens,
coming
maybe
from a loose
20%.
toilet in
All
the
the while,
first
the
stall.
S&P X, the Mag 7, is actually seeing an accelerating
full
pace
staff back
of
there
earnings
again.
growth. So that convergence has been a fundamental underpinning of the weakness that we are seeing, and I don't think that component of it changed. You see a little bit better evaluation profile, in part because of the significant correction that these stocks are experiencing. The problem is that the denominator in the PE equation is not moving in the right direction.
Okay, so at least we have some, I guess, silver lining in the normalization of some things. We get into a little bit more familiar territory. Lizanne, finally, as far as the policy intersection with stocks go, how are you viewing this discussion about the, quote, Trump put or lack thereof, 2.0 versus 1.0, where it seemed like he was very interested in keeping stocks?
Okay, we got a symmetrical flag. And
Well, for now, it doesn't appear to be an area of
3 minutes
focus.
left. Had a good day today.
Fox over the weekend suggest
That last trade was delicious. Well, I'm really upset that I sold that at a small loss where I could have made $1,000 on that trade. But it, like I said, man, it dipped all the way to 25 cents. I'd have been in panic mode. You know what I'm saying? I would have lost probably 90% of that trade. 85% of it, 90%. I couldn't do, but I didn't know it was going to go down that cheap to 25 cents. Then when it did, I sat there and looked at it like a dumbass and should have bought them again. But I didn't know. I have to give, Rob said he was going to be patient and wait till the end of the day. I don't know if he traded it or not, but, you know, he nailed that little run back up, if he did. But, I mean, from there, 25 cents all the way up to $2.45 on that call. Now they're worth 1 penny. The 56.60s. But I could have at least made 60, 70 cents a contract on that and had 15 of them. I told her you were going to call her. I called her back to make sure I had the right number. So I told her what the situation was. Okay, well, I'm going to get out of here. I got to go pay my accountant about $1,000 to do my taxes. So I'm excited about that. My accountant, God, you know, they raised my rates up during the Biden regime. Practically 34%, 35%, from 100 to 150 a month. Plus, then I got to pay them another 900 to do my taxes. And that's both business and personal. But I'm getting a withdrawal. I'm getting some back. I pay a lot in taxes. but I won't get nothing back for my personal. Just a little bit for my business. For 20 years, I didn't get no taxes back at all. Well, not 20, about 18, 15, 16 of them. Until I turned it into an LLC, and then I saved a lot of money there. So if you ever open up a business, be sure to do it in an LLC. And have a good accountant. I had a politician one time was my accountant, and it was horrible. So I'm gonna get out of here. Got a busy. I'll give him some more form. Give him my 2 bank statements for this year, and hope everybody had a good day today. What war? What am I missing out on? I don't want to say it, but it is as though a war has about to widen out, or hopefully it's a dip before a huge rip on some sort of deal soon to end the war. What's going on? Ukraine? I don't think we're being threatened with nukes like we were. We'll just have to see. Well, my opinion is the market run, like I've said before, we've had too big of, too fast of, too easy of a run, and all that money's being stopped printed for the top 1%. They printed $14 trillion in the last 4 years. And there's a lot of money laundering went on and all kinds of stuff. He just wants to put a stop to it. I don't think we've had a real recession, but during COVID, when they shut the government shut a bunch of businesses down, and I think that was our recession. But we used to have them every 4 years, but not really since the all this printing since what, 2008. Bush printed some money. Obama printed a bunch of money. Trump printed money. Biden printed the most. I mean, he went through 14 trillion. But Obama printed quite a bit. And then Bush started with the checks. After 9/11, handing out checks. I got 3 of them. That's probably what started the ruin of capitalism. And then so many people got dependent. Let me see what here. It's in the first stall. Sometimes I run water down the hole in the floor after it rains for a while, or sometimes gas escapes there. Okay, well, I got to get out of here. I got a toilet issue I got to look at. And I'll watch my videos tonight and see what's going on. I didn't pay much attention to news today. We'll see y'all later.